morning after the announcement came in from Donald Trump early this morning, or which is late evening US time. And the rest of the Asian markets are positive because of a strong handover from Wall Street. And we'll get to that in just a bit. Pull up the GIFT Nifty as well. That'll give you an idea of how our own markets are likely to start off. A 60-point uptick as of now for our own markets as well. And the bulls will take that considering the brutal sell-off that we saw in yesterday's trading session. But shifting to Wall Street, and it was a strong session for the benchmark indices there, which was also Donald Trump's first day in office, and his actions, which are likely to be softer on international policies than what was initially expected, led to that 550-point move in the Dow Jones. The S&P 500 also gained nearly 1%. The Nasdaq underperformed, still ending 0.6% higher, courtesy some pressure seen in shares of Apple. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes in Tuesday trade as Wall Street seemed to breathe a sigh of relief that tariffs were not announced on President Trump's first full day in office. The Dow surging 538 points. The S&P 500 was up about 53, while the tech-heavy Nasdaq popped 127 points, despite the fact that Apple was lower on the day. More on that in a second. The Securities and Exchange Commission announced that it is forming a task force dedicated to cryptocurrency, saying that it'll develop a regulatory framework for crypto assets. Bitcoin originally fell overnight after President Trump failed to include any crypto policy announcements amid the flurry of executive orders he signed on his first day in office. But Bitcoin did rebound and actually wound up at about $106,000 by the end of the trading session. And it was a rocky day on Wall Street for Apple shares. The stock finished the day down about 3% after both Jefferies and Loop Capital downgraded shares of the company, and JP Morgan lowered its price target. Counterpoint Research also reporting that its intelligence shows iPhone sales in China were down 18% for the holiday quarter. With Apple's fall, NVIDIA once again became the world's most valuable company, with a market cap now of almost $3.5 trillion. Apple is set to report earnings on January 30th. Stock is down about 11% so far this year with today's pullback. That's what's happening here in the U.S. Back over to you in Mumbai.
And moving to the big announcement of the morning, which was Donald Trump's latest comments of considering a 10% tariff on China that could come into effect as early as the 1st of February. Listen to what the president had to say.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada. Probably February 1st is the date we're looking at. For Mexico and China, we're talking about approximately 25%.
And after President Trump's first day in office, the question on everyone's mind was, of course, the tariff war on China. Stephen Roach, who is a senior fellow at the Yale Law School and former chief economist at Morgan Stanley, said that the 10% tariff was a significant number, while Steven Mnuchin said that the Trump is keen on placing tariffs on China to raise revenues. Listen to what they had to say.
All we know is what happened yesterday in the U.S., where the president unleashed a torrent of shock and awe executive orders. Didn't do anything on China of any great significance other than to say that he wants the U.S. TR to study the trade deficit. You know, the Trump tariffs are still in place today. And even though he's supposedly only threatening another 10% on February 1, keep in mind that's 10% on top of the current existing 23. So, higher math, 33% on tariffs on Chinese products coming into the United States is a significant number.
I think President Trump has been very strong on saying that he wants to implement tariffs. He wants to use them to raise revenues. He's talked about the External Revenue Service. I mean, in essence, we have an External Revenue Service. Customs and Borders is the one that collects the tariffs. So they could break the group out of that and name it the External Revenue Service. It's not the IRS that does that. He said in his inauguration speech yesterday, again, it can be a great sense of, well, I think the sooner that you can give clarity to the market as to what we expect in the plan, the better off we'll be.
And that's the global market action, dominated by who else but Donald Trump. And how will all of this impact our own markets? Our research team joins in with how the trade setup looks like and the stocks that are likely to be in news as well. Firstly, Upasana joins in to get the market cues that we need to watch out for. Upasana, good morning. How's the setup looking like?
Good morning. Well, Nifty witnessed a heavy sell-off yesterday and closed the day lower by 320 points, around 2325 mark, which was around the last week's lower mark of 2347. Now, Nifty 50 index breached 23,000 mark intraday for the first time since June 2024. Now, let us look at the Nifty top losers yesterday, which fell nearly about 3 to 6%. Stocks like Trent, Adani Port, NTPC, ICICI Bank, SBI, all these were the top losers. On the flip side, when it comes to gainers, Apollo Hospital, Tata Consumer Products and BPCL were the top gainers. Now, when we talk about the market construct, we are seeing that the FIIs continue to remain selling. Now, FII net sell remains at 5,920 crore yesterday, while DIIs bought nearly 3,500 crores yesterday. Now, FII's net selling for the month till date stands as high as 56,832 crores. Now, let us focus on the key earnings that will be reporting today in Q3 FY25. Stocks like HDFC Bank, HUL, BPCL, even mid-cap IT stocks such as Coforge, Persistent Systems will be reporting their numbers. Hence, all these stocks will be on our radar. And lastly, let us look at the key cues that we'll be watching out for today. Now, important events such as ECB President Lagarde will be speaking, hinting about the future monetary policy and the interest rate shifts, and also IPO. Denta Water and Infra Solutions opens for subscriptions today. So all these events will be closely tracking.
Thanks a lot for that. The GIFT Nifty is also indicating a positive start as of now for our own markets as well. Upasana listed out a bunch of stocks. Now, why would they be in focus? Vamakshi is here to tell us just that. Vamakshi, good morning.
Well, good morning, Hormaz. Let me first start off with Dalmia Bharat. A weak set coming in from the company. Revenue is down nearly 11.7% at 3,181 crores. This has come in below what the street was penciling in. The margins have contracted by over 500 basis points to 16.1%, and the net profit is seeing a very sharp drop of almost 75.2%, coming in at only 66 crores. Cyan DLM is the next counter that we're watching out for. The revenue did see a good uptick of almost 38.4%, but the margins have contracted from 9% to 6.1%, and resultantly the net profit is seeing a downtick of almost 41%. India Mart's margins have expanded substantially from 28.1% to 39%, but the net profit is also up nearly 48%. India Cements, on the other hand, revenue is seeing a downtick of 17%. The company has widened its losses from 16.5 crores of losses in Q3 of last year to 428 odd crores this time around, and this is mainly on account of an exceptional item worth 190 crores. The other counter that we're watching out for is Newland Laboratories. The board has approved capex of nearly 342 crores for capacity expansion at its 2 units. Vent India will also be in focus because Vent GmbH will be divesting its ownership interest in the company. They will be divesting somewhere around 37.5% of the outstanding equity of the company. And lastly, keep an eye out on Jio Financial because Jio Financial and BlackRock have invested 117 crore in Jio BlackRock Asset Management.
Vamakshi, thank you for those list of stocks that we need to keep an eye out for. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. It was not a very good day for the bulls yesterday, but what's the FNO data looking like now?
Well, it's a very treacherous market to trade. On the one hand, there is relentless selling by the FIIs, and on the second, there is insane volatility. And why do I say that? Look at the Nifty yesterday near June lows. GIFT Nifty is indicating a positive start, but does that sustain or not in light of the sort of selling and volatility is what we're seeing is the question that we need an answer to. Let's talk about the selling first. The FI has sold about 5,900 crores in cash in yesterday's trading session. The DI has bought about 3,500 crores. Are the buyers going to get tired at some point in time or not is the big question. And the second part, the volatility that we're seeing on D Street. Within 2 minutes, you had the Nifty fall 200 points, gain 200 points, etc. And that's reflected in the option prices as well. Look at some of the options. 23,000 put yesterday. The low was 17 rupees. The high was 139 rupees. And this is just one day. 23,100 put. 31 rupee moved to almost 200 odd rupees. Similar on the call side as well. 39 rupee call moving all the way up to 300 rupees and 14 rupee call for 23,500 moving all the way to 100 rupees. So on either side, there is insane volatility that we're seeing led by option prices, etc. as well. Then you have the FIS selling in index futures. Close to 2,400 crore worth sell yesterday. 21,600 short contracts is what they've added, and as a result of which their net exposure is minus 3.49 lakhs. So we'll keep an eye out on that. The long exposure of FII is just at 17%, with shorts at around 83%. If you look at the way the market moved yesterday in the second half, when it fell the way it did, you had a lot of put writers caught on the wrong side. So you had short covering on the 23,000 put, and you also had short covering on the 23,100 put. On the way up, call writers got very active. 23,200 call and 23,300 calls saw a lot of writing, telling you that 23,300 to 23,350 would see a lot of resistance for the market. The put call ratio has moved to 0.77, but remember, it's not still oversold. It generally bounces from 0.68 to 0.7, so we'll keep an eye out on that. And Dixon Tech, we pointed out the possibility of the stock entering F&O ban. It has. Mahanagar Gas is the other one which has entered F&O ban too.
Interesting names that have entered the F&O ban. Mangalam, thanks a lot for that. Time for a short break. Up next, we get you excerpts from our conversation with Sajjan Jindal of the JSW Group, all the way from Davos. Stay tuned.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we own the stock. Itself said that look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products, you're seeing the growth. There are more products this year, and with that, we'll share more capex plans as well. We're a global company. We cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect.
Welcome back. Now, Sajjan Jindal of the JSW Group has made a pitch for safeguard duties to protect the domestic steelmakers. Now, in a conversation with Shireen Bhan at Davos, he said that he expects some announcement from the government in the next 15 days. And he also added that a new electric vehicle from the JSW stable under the JSW brand would be launched in the next 18 months. Listen.
We are already working on that project, and hopefully over the next 18 months we will see a new product coming from the JSW saddle under the brand name of JSW.
Okay, so JSW will continue to be the brand that you will use as far as the electric vehicles are concerned as well?
Absolutely, yes.
Okay, and in 18 months we'll have the cars on the road?
Hopefully, yeah, that's what we are gunning for.
I believe that the work has started on the possibility of putting in safeguard duties. Have you heard back from the government?
We haven't yet, but there's a lot of work going on because it's not a simple process. They have to follow the due process, and that's going on. And we expect that over the next 10 to 15 days, we should hear something back.
Sajjan Jindal there exclusively speaking to CNBC-TV18 at the World Economic Forum in Davos. Time for a short break. Cues from the commodities market on the other side. Stay tuned.
Private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now.
Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you picking up now?
Well, I'm looking at the crude oil prices, Hormuz, which have continued to slip further as Trump declares national energy emergency. And even as about various oil initiatives that the U.S. president is taking. Well, the U.S. oil production is almost at a record high. Remember, OPEC and allies also have a spare capacity that is as huge as 1.8 million barrels. So there is going to be a good flush of crude oil as we get into 2025, while the demand is expected stronger, but the supplies are expected to be on the higher side. And that seems to be, at this point in time, weighing on the crude oil prices. There is some pressure that we've seen come in for the metals as well. Even as the dollar index is off its two-year highs, we have seen metal prices climb 1 to 1.5% in the overnight market. Well, there is a risk of possible wars hurting sentiment. The prices did hit multi-month highs on Monday when U.S. Trump was getting inaugurated, and that is because there was no tariff announcement. But since then, we're looking at U.S. putting tariffs on Canada, Mexico from 1st of Feb. The U.S. also has said that they will reverse trade deficit with the European Union. The Chinese numbers haven't been great at all, so all of that really seems to be weighing onto the markets. And within all of this, the only thing that really seems to be shining bright is the safe haven gold and silver prices. We've seen nearly a percentage point of gain in both of these commodities, but apart from that, everything really seems to be quite jittery.
Everything seems to be quite jittery, and of course that's also because of Donald Trump taking office as well. Manisha, thanks a lot for that. Let's now get you some more voices from Davos. The top global corporate captains laid out their India growth pipeline on CNBC-TV18. Bank of America CEO Brian Moynihan says that he remains optimistic about the India story. Listen in.
Think about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy and keeps moving north. All the programs of Prime Minister Modi and the governments over the years have been working. It's becoming hugely digital, 800 million phones and all the stuff we talk about. And you see the digital impacts with our clients and our customers.
What do you expect in terms of fund flows into markets like India on the back of what we're seeing happen in the U.S. with the dollar strength?
Well, I think the fund flows in India ought to be among the strongest around the world because just sheer opportunity. And so, manufacturing as a major extra source, the services economy, which is strong. And by the way, it's building a huge internal economy.
The IPO market in specific had a stellar run in India. What's the expectation as far as public market performance is concerned in 2025?
IPO market, there are 100,000 startups, I think, in India. There's 1,000 of them that are getting towards, big enough and interesting enough for the public markets. 100 of them, I think, are unicorns or something like that. Those statistics. Therefore, the markets will receive them. But I think the key is that with all the markets now, if you're, as we see across the world, if it's biotech or something that's really different, AI, that's different. But if you're a core business, you got to have a path to profitability because the markets won't support without seeing that profitability. So you either got to have pretty good cash flow and profit before you go public, or got to have a very, very understandable task, because you're competing against companies which make a lot of money and are making money. And at the end of the day, your valuation is ultimately going to reflect your ability to earn money and grow it in the future.
All the big voices from Davos, and that continues today as well. With that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call sets you up for a very important day of trade.
From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning, and it's still all about President Trump and what he's doing and what he's going to do. Markets yesterday had a very, very painful session, so that's also going to be the focus, whether there is more downside or whether we should actually find some stability around where we closed. I'm Prashant. With me, my colleagues Surbhi and Nigel. Guys, hi, good morning.
Hi, morning Prashant, morning Nigel.
Morning.
I realize we are rather black, dull, grey and glum, all of us today. Thank heavens for the pink, little bit of pink that Nigel's sporting.
Well, that's right. And in fact, in the near term, I think things could be a little bit tricky. But just want to assure all investors out there that in the longer term, these sort of scenarios have proved to be the best phase to get into good quality names. So hang in there. The near term's tricky, but the longer term for India should look good.
Well, absolutely. And, we'll just sort of take it step by step with what you need to know as we begin the fresh news trading session. Now, I'll get to price action in just a bit, but the news is essentially what I think will dominate more than anything else. So yesterday, same time, we were talking about how we've not heard anything with regards to tariffs on China, etc. Well, we've heard something now, and we'll play out those sound bites as well in a bit from now. So Trump has essentially said that he's weighing 10% tariffs on China over fentanyl flow in his latest comments. So this is this happened post-market hours, post-US session last night. And I think he did say, although he didn't specifically mention 1st Feb for China, but he did throw in that 1st Feb line. And of course, for Canada and Mexico as well, that deadline is the 1st of February. Now, that's one. Remember that USD, the dollar CNY, has popped up a little bit, about 0.25% or so in response to this. Now, this is over the last 3 hours or so that we've seen this. There was also one more announcement, and this happened in that press conference. Trump has announced a major infrastructure plan and investments in AI infrastructure as well. We don't have, we have that big number of $500 billion worth of investments into AI infrastructure. He was standing in that room next to Sam Altman of OpenAI, Larry Ellison of Oracle, and Masa of SoftBank. And he said, well, we're going to start this new venture, big investments. The intricacies, the detail, etc., we don't know. But we know, and remember, the AI-sensitive stocks did pop up and close higher last night. So it's, the focus very much seems to be on building out and helping America in two areas, which is infrastructure and AI infrastructure as well. Now, I'll come to price action. U.S. equities did well. The S&P was up about 0.8%. The NASDAQ was up about 0.65%. So decent close. The 10-year yield, it was off about 6 basis points. We left up at about 4.56%. The dollar index at about 108.15. Remember, we were at 109.5 or so just about a week ago. 109.3 or so, 355. In that vicinity, we're at close to 108 rather compared to 109 now. Oil prices also about 1% lower, just under $80, $79.5 per barrel is where we finally left off at. Now, that's a global setup. Are there any big takeaways from what happened last night in the US and that we can apply here in India? Well, actually, I didn't think yesterday morning that there was anything big out of what Trump did or said after inauguration. So the market here was still in a wait-and-watch mode. But guess what? The market was not in a wait-and-watch mode, and it sold off very aggressively. I don't think Trump or what he said, at least till day before yesterday, is to be blamed for the sell-off. It's got to be maybe something more or a combination of, the same kind of factors. But yesterday was painful, about 1.33% lower on the Nifty, as you can see. Where does it leave us? We broke Monday's low of 23,047. The close yesterday was 23,024. So that's the first let's see if we are able to stabilize around these levels, which is last Monday's low and where we left off yesterday. The support comes in at 22,500 below. If you continue to break, then the support comes in at about 22,500, 22,800 in that zone. If you go back, there are many highs around these levels in this 300-point band that we've seen. So that becomes a support zone. Resistance, of course. Every time you break lower, the previous high becomes a bit of a resistance. And yesterday's high was 23,426 on the way higher. Again, these are very, very near-term kind of levels we are looking at. On the Nifty Bank, something similar here as well. So the resistance is yesterday's high, 49,650. And downside level to watch is 47,898. That is nothing but last week's low. And below that, you look at the daily Bollinger Band, which is 47,700 for the Nifty Bank. So these are just some levels to work with. The gut feel is that we should probably stabilize a little bit. Is this related, what we saw yesterday, especially related to, for the lack of anything more imaginative, something to do with the budget? It's tough to say. Is this fears once again? Every time you get close to the budget, at least for the last couple of years, you've started about fears about capital gains tax and this and that, etc. But, there's no way really to tell. I would square it off, at least what we saw yesterday, to a combination of what we've had, which is essentially, FPI selling for whatever reasons, a combination of reasons, and of course, locally, a bit of a cyclical slowdown that we are in. This morning, GIFT Nifty is indicating about a 67, 70 odd point higher start. And I hope that around these levels, which is around the Monday's low, the market starts to find its footing, even if it doesn't do anything spectacular or sharp on the upside. Surabhi.
Absolutely. And, there is some of that reaction in markets that's now playing out across China, for instance, because the tariff talk has begun and right now it's only at 10%. But the market is taking note of that because if you see Asia, the rest of the region is fine. Actually, the Japanese market's doing very well. There's a gain of about 1%. But look at the Hong Kong declines there about 1.5%. If you look at the mainland Chinese market, again, it's down about 1% or so. Taiwan's actually doing very, very, very well. Whether they're seeing it as China's loss, Taiwan's gain, anyone's guess. But the fact is that these tariff announcements, as they come through, it has started showing up in stock prices. Just to add to this whole news around Stargate, which is what that entity is being called, this big AI entity that Donald Trump is putting together. This obviously is a partnership between OpenAI, SoftBank and Oracle. And the initial announcement is $500 billion over a course of 4 years. First, they put in $100 billion, and then they scale it up to $500 billion. What did Mr. Trump say as that announcement was being made? I just want to put that quote up as well. It's the same sentiment, right? He says that what we want to do is we want to keep it in this country. This is with respect to, of course, AI. And he did make a reference to China, saying China is a major competitor. So, you know, these things are being watched very, very carefully by the market as well. And what he eventually does on China is the bigger question. And we'll only get the answers maybe the next couple of weeks. Anyway, to talk about our performance here, the fact is that India was singled out as a rank underperformer yesterday. This decline that we saw yesterday, it wasn't a global decline. Global markets were actually quite happy with the whole inauguration out of the way, but we were just falling under our own weight. On the FPI selling now, by the way, I mean, despite that fall, yes, we've managed to hold on to last week's low. Whether the bulls can still protect that, that's going to be the bigger question. On the FPI selling, again, this massive number that we've got yesterday, almost 6,000 crores of selling. You know, it's taken the overall tally of FPI selling for January to over 50,000 crores of selling. Remember, the previous peak has been around 92,000, which we saw in November, and December was slightly better. Again now, so far in this month, we are above 51,000, almost touching 52,000 crores of selling from the FPIs. Domestic institutions obviously were buyers to some extent, offsetting that pressure. Lots of results are going to be in focus, and big index companies, can any of them come and provide some silver lining or not? On lever, the poll that Mangalam did is showing a very anemic volume growth, 1 to 2%, very anemic top line growth, 2 to 3% is what we're talking about. Plus, of course, we know that there is some pressure building up on the raw material side. So lever is not supposed to light up the charts. Talk about some of the other names. Pidilite actually could be a lot better. Again, I'm looking at the poll that Mangalam's done. 8 to 9% volume growth is what we're going with on Pidilite. There are a couple of tech companies that will be reporting as well. Mid-cap tech companies, Persistent and Zensar. And I just want to add a word on HDFC Bank. Can HDFC Bank come out and do something that will spark the mood? Not sure, because we've got the quarterly update, which was again showing that this growth in deposits is happening, but the loan growth has been very weak, just 3% this quarter. So not sure if HDFC Bank can come out with a stellar move like Kotak did. But I guess, Nigel, we hold on to hope. What about you, and what are you tracking in terms of the internals, the F&O data and all of that?
Well, yesterday was a very weak trading session, right? No two ways about that. But I think the message that came out yesterday was the markets now, they're looking more at value in comparison to growth. And everything is not fair at any price. You want to buy stocks at a good price. That was the message that we got out yesterday. Well, overnight, you have the top three indicators that we have. Well, they are fairly, positive in today's trading session as well. You have the dollar index is a little bit flattish. The yields have cooled off a little bit. And Brent crude prices as well are. So that's no worries on that front. In addition to that, the US markets ended in the green. The question is, yesterday's fall, did it have something to do with the weekly expiry-related factor on the Sensex? Or was it that now, in fact, the markets want to take another leg down? We'll know that answer either today or tomorrow, because in fact, normally an expiry-related move does see a bit of a reversal. But the crucial support levels have been broken, and crucial levels have been broken. So that's what's opening up. And that's the fear with regard to the downside. So we'll have to keep an eye out on that. What did the FIs do yesterday? Well, they not only sold in the cash market, they added more shots on index futures, close to around 5 shots for every one long position. And after a while, actually, they added more shots on stock futures as well, and they unwound some long positions. And that's what put additional pressure on the markets as well. Because remember, the FIs have been net long on stock futures, but in yesterday's trading session, the total swing factor is close to around 7% on that base out there. So the long positioning on stock futures has come down by close to around 7% in trade yesterday. What about the FI net shorts? Well, they were net short around 2.9 lakh contracts. We were saying, well, that's extreme. Guess what? In the last 1 week, those short positions have gone up by close to around 20%. And now it's around 3.5 lakh contracts on the short side, similar to what we saw on the election verdict day, that's June 4th itself. One would say it's extreme, but for the time being, it doesn't appear that they want to let go of those shorts, because in long positioning has come down to around 17%. In the past, we've even seen it come down to around 10%. From there, we saw a big bounce out there. But for the time being, that's how they're positioned. The PCR, that as well is moving to the lower end of the band. Remember, it went to around 1.1, 1.2 a few sessions ago. That's come down to around 0.77 because we're seeing aggressive call writing and some unwinding of puts as well. And that's the reason why the PCR has come down. Normally, if you have the FIs net short, you have the PCR at the lower end of the band, that calls for a bit of a short covering bounce, so to call it. But as of now, the crucial levels have got broken. And the structure seems to be more on the downside than on the upside, which is causing the bulls to worry a little bit. The crucial levels come up for you in the screen. The 22,800 level on the Nifty, that's very, very important. 22,800, 23,000. You don't want that level to break out. Otherwise, in fact, we could see a breakdown to any levels, 22,200, 22,300, and then, in fact, maybe the lows that we saw last time. And you'll want the Nifty to go ahead and build on to that 50, 60 point positive start that we're seeing. The first level of resistance is 23,200. So a bit tricky in the near term, but for longer term investors, a lot of stocks have come to those levels that you want to get in.
Well,
okay.
No, absolutely. And interesting numbers, interesting data. Nimesh also yesterday, and we'll sort of have that link back up. Talking about just simple, Nifty 50 and Nifty Next 50, looking at 5-year average valuations and where stocks are now after the 25 to 30% falls. And, that was, again, sort of something we'll readdress this morning. But just to sort of tie in the global stuff, right? This is Trump's latest comments in considering a 10% tariff on China that could come into effect in the 1st of Feb. Listen in.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada. Probably February 1st is the date we're looking at. For Mexico and China, we're talking about approximately 25%.
Okay, so the tariffs are coming, and let's see how the markets digest them. He was also, of course, talking about Stargate, this mega joint venture that's been announced between Oracle, OpenAI and SoftBank, which is going to be investing $500 billion in artificial intelligence. Take a look at the US president addressing that.
To announce the largest AI infrastructure project by far in history, and it's all taking place right here in America. And together, that's a massive group of talent and money. Together, these world-leading technology giants are announcing the formation of Stargate. So put that name down in your books, because I think you're going to hear a lot about it in the future. A new American company that will invest $500 billion at least in AI infrastructure in the United States and very, very quickly, moving very rapidly, creating over 100,000 American jobs almost immediately.
Okay, all right, Stargate. Arvind Sanger is with us, Managing Partner at Geosphere Capital Management. Arvind, good to have you with us here. Prashant this side, thank you for joining us. Global stuff we'll talk, and your first reactions there in terms of what we've heard so far. But here in India, there's no... What do you think is the dominant driver? Is it just the cyclical slowdown, earnings slowdown, etc., which is at play? Growth stocks getting smashed, Dixon, Zomato, etc., big corrections yesterday. Or do you think there's some, fears around the budget and taxes, etc. now? Budget's not very far away. Go on.
I think it's a slowdown, and I think it's valuation. You put your finger on two of the most important things. We've been talking about this for several months now on your channel that things were not inexpensive and economy was slowing down. But what is now happening is that the big hits that the companies are taking are starting to move them into interesting ranges. But now, like you said, we have the budget to look forward to or to worry about, depending on your point of view. For us, usually budgets are non-events, but I think in a world where competition for capital is going to get more acute, if the U.S. is more aggressively, trying to attract capital and make, investment in the U.S. more attractive, both from a tax and regulatory standpoint and from other ways that the government can support it, then it behooves a country like India, which wants to be in that China plus one investment boom, to think about how it can compete for capital and, talking about raising capital gains tax and other things. Unfortunately, that stuff will have to go off the table, and pro-growth ideas will have to come to the forefront to compete for capital on a global basis.
Okay. By the way, I just want to, talk about some of the quotes that came in from President Trump on immigration, and they were actually quite supportive. So let's see if IT stocks react to this or not. He said, when he was asked about H-1B visas and immigration, he said, and I quote, I don't want to stop, and I'm not just talking about engineers, I'm talking about people at all levels. We want competent people coming into our country. So very encouraging statements there that IT companies would definitely want to hold on to. Arvind, hi. So, you know, as a money manager, when you look at the world around you, you have this Make America Great Again sort of endeavor that's taken off. And as of now, the US market's in a roaring mood. So as a dispassionate money manager, do you think the money for the time being in the short term will continue to head to US shores, given our concerns here and some of them you highlighted?
I think US is a safe place in town, but as a value investor, I think the US is getting a little bit overdone in terms of the hype and the short-term expectations. I'm not saying that if you take a 2-3 year views, US growth will not be there, but I think a lot of the good news is discounted. So when I look at it globally, we find more interesting opportunities in some of the left behind, left out sectors. And India was not part of that left out, but is starting to get to where it's moving into more attractive, reasonable valuations. There's some of the high flyers, you mentioned a couple just now, you know, Zomato and Dixon getting smashed. But again, I'm not suggesting those companies have suddenly become value stocks, but if we get a little bit more of a pullback here, the growth opportunities for some of these companies versus the PE ratios is getting into a range where they start to get more interesting. So I think India is starting to move into the interesting range. US is starting to get to where maybe it's time to take a little bit of a breather since a lot of good news is being discounted.
All right. Hi, Arvind. Good to hear your thoughts. Arvind, I wanted to ask you about what about the Chinese market? You know, because there is this fear that Trump won't be as harsh as one would have thought on China. For example, today he's talking about tariffs of close to 10%, but earlier he was talking about 50-60%. Do you think there's a risk that China at these valuations in comparison to an emerging market like India could outperform from here on? Or do you think India is a longer term story? Well, we'll continue to see a decent amount of the flows as well as interest.
Well, China's problem is not Trump tariffs. China's problem is its own demographics, its own youth unemployment, its own bust of real estate. There's so many problems that China has. In fact, there was an expectation that if Trump puts on more, severe tariffs, that China might undertake a much more meaningful stimulus. So if Trump doesn't undertake too much of tariffs, then maybe the stimulus is not going to be that large. So I'm not sure if China is not in a lose-lose situation, which doesn't mean that the market is not cheap and it could have a rebound. But like you just said, I don't think there's a structural story in China with or without Trump tariffs that makes us particularly excited for the medium to long term, given their challenges. India has a much more fundamental long-term growth story, but short term, India has underperformed China for the simple reason that India's valuations got too excessive and China's got cheap. So if you look at the last few months, maybe you could make that case. But going forward, I think China may have a trade, but not a fundamental bet that we are willing to make.
Super.
Arvind, you began by saying we've gotten to a place where things are better, but there's the budget to deal with. So we've in a way, you're saying that time to look for ideas, things. I mean, event, no event. I mean, the budget is there, but I mean, beyond that, you think time to be a little constructive here?
Yes, as long as the budget doesn't do any harm. And my main point about budgets in India is, don't do harm. And I think the government has done a reasonably good job of not making any big moves in budgets, which is what we like. So I think, we are always looking at companies bottom up in different sectors. And I think, some of the names you've talked about and others, things are starting to get to interesting levels. I won't say that we're jumping in with both feet, but we've started to nibble. And as valuations come down, we're getting more attractive. We've been sitting on cash for a while, and that's being deployed in Indian markets as we see this pullback.
Got it, Arvind. Well, let's see. I mean, the last time around, they announced a hike in capital gains tax. It doesn't get, bigger than that. And yet the market could digest it and move ahead in life. So let's see. Hopefully no more surprises. That was a bull market. That was a bull market, yes. Right now, the market cycle is very, very different. It could use some support and some help. And let's see if that comes on the 1st of February. Thank you very much for joining in. Good conversation as always. Well, let's also get you the latest from the sidelines of the World Economic Forum in Davos. Shireen caught up with Raghuram Rajan, former RBI governor, and spoke to him about the recent statements that have been made by the US president. He also spoke about inflation trends in the US and expectations of a rate cut by the US Federal Reserve.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat. which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way. The hope was inflation would come down of its own accord. That would be the soft landing part, but it's stabilizing. Of course, people can read the leaves and see, well, housing is coming down, maybe that'll bring things down. I think there is no reason to be comfortable that inflation is coming down on its own. And if the labor markets aren't, showing signs of slack and maybe may tighten up if there are these actions against immigrants, I think the Fed has its job cut out, which means it's going to stay higher for longer. So I would not be optimistic at this point. Yes, you may see a cut, but I think right now the Fed wants to wait and see what are the policies that are going to come in and how much is its job going to be done for it by the, ebb of the economy and how much will it have to react more.
All right, well, time to slip into a snappy break. You come back, we'll go stock specific. Our top 10 stocks will be waiting for you on the other side. For the time being, I run you through the list. KEI, PNB Housing, Jana Small Finance, we have Carbon and Universal. They'll be reacting to positive news flow, while we have 6 stocks that will be reacting to negative news flow. They include Tata Technologies, Dalmia Bharat, India Cements, Cyan DLM, India Mart, and ICICI Prudential. Well, we'll slip into that break, come back, get into further detail on all of these names.
My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. is it. This is the first India pavilion, so to speak, India Bharat. And as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone.
Welcome back. So the picture across Asia is mixed, with the Chinese markets, Hong Kong and China, under a little bit of pressure, but other markets are doing really well. And the GIFT Nifty and the implied open seem to be suggesting that we'll pick up on the green side, given the sell-off that some would perhaps say got a little excessive yesterday. So hoping for some recovery, at least at the start. Now, what about individual stocks? As always, we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, morning to all of you. Lots of earnings to go over. Rima, let's start off with Tata Technologies.
Well, it's a decent set by Tata Technology. The company's reported a constant currency revenue growth of 1.7%. Margins have dipped slightly on a sequential basis on account of wages, but profits have managed to inch up by nearly 7%. Here, the only concern analysts have is the valuations of the stock. So Citi says valuations at 40 times FY26 is expensive, so they've got a sell rating. JP Morgan says that if you want to play the auto ER&D space, then they prefer to play it via KPIT Tech, because both KPIT Tech and Tata Tech both are trading at 40 times forward multiple, but KPIT Tech is offering you a higher growth. So therefore, they've got an underweight rating on Tata Tech. That said, the stock has been an underperformer. Its all-time high was 1700, but just in the last 1 year itself, the stock is down close to about 30%.
Okay, all right, Rima, thanks a lot for that. Well, I'm looking at Dalmia Bharat as well as India Cements, and both those numbers looked quite weak. Now, for Dalmia Bharat, they're focusing on price rather than volumes. That seems to have hurt them. So on the volume aspect for the past quarter, well, it was a bit of a miss, because we were estimating a growth of around 5-6% or thereabouts in terms of volumes, but that's come down by close to around 1.5%. And that's the key reason that there is a miss. So on the top line, there's a mild miss. Realizations went up by around 3% quarter on quarter. That's the lone positive actually in these numbers. Otherwise, input costs were higher than expected. Volume growth was lower than expected. Keep in mind, in the base year, they had that tolling agreement with JP. So X of that, actually, they grew by close to 4%. But that's still lower than what the street was working with. So these numbers go down as disappointing. The EBITDA per ton improvement is just 115 rupees. The street would have liked to see a number of around 150 to at least 200 rupees. So that as well is disappointing. And the debt has gone up because of the expansion plan. What supports the stock will be valuations, but that's always been the case. So we'll wait by to hear in from the management. But these numbers go down as a bit of a disappointment. The good news is commentary for the next quarter. The management says things are looking up. So kicking the can down the road, we could see some bit of recovery intraday. On India Cements, well, now it's part of Ultratech because they've become a subsidiary from 24th of December. So watch out when Ultratech comes out with a set of numbers for around 6-7 days. They'll be accounting for India Cements numbers as well. Numbers disappointing. Top line degrowth of 15%. EBITDA loss out there. Power and fuel costs going up when you're not growing too much. And transport as well is higher when we're talking about input costs that are cooling off. You'll say, well, the profit number is good. That's because of an exceptional item. What's good for them is now they're under the fold of Ultratech Cement, and the debt number has come down to around 880 crores, which is a sharp reduction. But the numbers go down as a disappointing set of numbers.
All right, so keep an eye out on those names. KI Industries is another one which reported earnings, and we had signed DLM as well. Upasna is here with both those. Upasna, morning.
Good morning. First up, let me start with KI Industries. The company has reported overall a mixed quarter. Revenue was a beat, PAT in line, while margins were lower than the street estimates of 10% on a YoY basis. Now coming to revenue first, it stood at 2,467 crores with an uptick of 20%, and this revenue growth was mainly led by company's key segment, that is its cables and wire segment, which reported a revenue growth of 26%, while margins dipped by 50 basis points at 10.1%. Now coming to overall margins of the company, it stood at 9.7% with a downtick of 70 basis points on a YoY basis. And lastly, PAT stood at 165 crore with an uptick of 10% on a YoY basis, which was, as highlighted earlier, in line with the street estimates. Now, coming to sign DLM, the company reported a strong revenue growth, but margins and PAT were impacted due to higher employee costs, other expenses, and even a steep fall in the fall income. So operationally, numbers look quite weak. Revenue saw an uptick of 38% on a YoY basis. EBITDA margin saw a downtick of as high as 290 basis points at 6.3%. PAT saw a downtick of 40%, clearly a sharp degrowth, and order book stood at 2,143 crores. So overall, Cyient DLM has reported a weak set of numbers.
Yeah, that doesn't look too good, Upasana. Got it. Thank you very much. By the way, we will be connecting with the management of KEI Industries shortly. We'll be in conversation with Mr. Gupta at around 9:30 a.m. Find out what the business trends are looking like for the rest of this year and more importantly, FY26. All right, more numbers. Let's move on to the financials. Abhishek, how is it looking for PNB Housing and Jana SFB?
Well, PNB Housing reported a mixed set of numbers. What has worked for them is that their net interest margin and spreads are at 4-quarter high of 3.7% net interest margin and about 2.3% of spreads. Now, operating profits were down 0.9% sequentially. Their asset quality has improved 1.2% gross NPA ratio versus 1.27% in the previous quarter. Disbursements are weak, just growth of about 0.7% on a sequential basis. However, AUM growth has been helped given the fact that it's grown by 12% YOY and about 2.8% sequentially. In that, the loan growth has grown at about the highest in 3 quarters sequentially by 3.5%. Jana SFB asset quality has seen some pain with respect to slippages. Management has guided the worst is behind. So slippages are high at about 437 crore versus 412 crore in the previous quarter. The annualized slippage ratio continued to remain elevated at about 6.25%. So they had a massive write-off of 109 crore, which actually held the asset quality this time around. It wasn't there in the previous quarter. Management does say that the worst is behind with respect to asset quality. AUM growth is healthy at about 18.5% YOY and 6% sequentially. The net interest margin has come down to 7.6% versus 7.9% in the same quarter last year and about 7.7% in the previous quarter. And thanks to write-off, the gross NPA ratio has improved to 2.8% versus 2.97% in the previous quarter. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, we'll connect with the management of PNB Housing Finance at 9:40 a.m. later today. Well, let's hop across to Rima. She's here to tell us about IndiaMart. Rima, disappointing?
Yes, disappointing because there's one key metric we always track. That is the quarterly paid subscribers. It's been dwindling. Many years back, it was about 5,000 to 6,000 every quarter in terms of an addition. Then it trickled down to about 1,500 to 2,000. But this quarter, the paid subscribers have actually fallen sequentially by 3,700. And this was a big negative surprise. So revenues were just up 1.9%. Margin defense was pretty good, 39%. Profits went down by 10%. But again, it's this paid subscriber decline which has disappointed the street. Nomura has downgraded the stock to a reduce. Motilal Oswal maintains a bullish call on the stock because of undemanding valuations. But it's a weak set of numbers from IndiaMart.
All right, Rima, thank you very much for that. Well, let's talk about Carborundum Universal next. Sudarshan is here to tell us why. So, good morning.
Morning, Prashant. So the news is related to Vent India because Vent India has been informed by both Carborundum Universal and Vent GmbH that Vent GmbH will be selling its entire 37.5% stake in Vent India. So both Carborundum Universal and Vent GmbH hold 37.5% stake each. And this sale will be held via secondary market. Now, as part of the agreement, Vent India will also acquire the trademark from Vent GmbH by paying around rupees 34 crore. Now, the another part of this news is that Vent GmbH is part of 3M India, and there is infringement case going on between Vent India and 3M. So, as part of the agreement, infringement case will also be resolved. So, now what's for the Carborundum Universal? So, the positive part of for Carborundum Universal is it will have right of first refusal if company wants to acquire 37.5% stake that Vent GmbH wants to sell in Vent India. And the last part of the news is there is a JV between Carborundum Universal and Vent GmbH. This JV will be terminated once the stake of Vent GmbH slips below 10% in Vent India. So overall, it's looking positive for Carborundum Universal because it will have right of first refusal if it wants to acquire the stake.
Okay, all right, got it. Thanks very much for bringing us up to speed with that development, Sudarshan. Let's now go across to Vamakshi. Look at numbers for ICICI Prudential Life. Vamakshi, tell us more.
Well, good morning, Surbhi. The numbers look like a weak set. It's a miss on the VNB front. New business premium was up 53.5% at 6,441 crores. Total AP was up 27.8%, again in line with what the street was penciling in. But the VNB margins were a big disappointment. In fact, VNB margins also contracted on a year-on-year basis from 22.9% to 21.2%, and resultantly led to a miss on the VNB front as well. VNB was up nevertheless 18.6%. HSBC has gone ahead and maintained its buy rating, but it has cut its target price from 825 to 780 rupees per share. Morgan Stanley, who has an overweight, equal weight call on the counter with a target price of 695, says that they've gone ahead and trimmed their VNB forecast by almost 2% for FY25 and 27 following the miss on margins. Macquarie, on the other hand, has a neutral call target price of 725, and they say that the VNB growth has disappointed again. Higher ULIP, declining savings and higher costs have affected margins, and they see downside risk to FY25 VNB estimates. So overall, it doesn't look like a good set for ICICI Pru.
Okay, Vamakshi, thanks a lot for that. We'll use a quick recap of all the top stocks we discussed. Stocks with positive news flow, they include KEI, PNB Housing, Jana Small Finance, and Carbon and Universal. While stocks with negative news flow include Tata Technologies, Dalmia Bharat, India Cements, Cyan DLM, India Mart, and ICICI Pru Life. That's about all the stocks that we're looking at, but Manisha Gupta joins us to give us a roundup of all the action we're getting in from the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, even as other commodities are trading slightly jittery, it is the gold and silver prices which have gained up as a safe haven. Gold, by the way, is trading at an 11-week high, is now above $27.50 an ounce. Well, there's hedge buying, there's uncertainty on U.S. policies. That really seems to be supportive. Coming to the crude oil prices, and yet another night where we've seen a decline continuing. We're trading at 79 for the Brent now, so have broken below $80 as the U.S. President Trump reiterates his consideration of a 10% tariff on China, which is a top oil consumer. This has amplified trade war concerns, and the markets are now also looking at potential hefty levies on Canada and Mexico as well. Markets also are looking at assessing implications of Trump's pledges to boost oil production by declaring a national emergency in sense of energy. So there's lots happening in crude, and we have seen more price declines than gains. Same is the case with the metal prices also. 1 to 1.5% of decline across metals, whether it's copper, aluminum, zinc, all of that trading on a weaker side, anticipating further steps coming in from U.S.
Okay, all right, got that. Thanks, Manisha, for the update over there. We do have to take a quick break, but when we come back, we'll touch base with Karan Taurani from Elara Capital to focus on, the quick commerce space. Back with that in just a bit.
Significantly used to be Chandrababu Naidu. He was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India House, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength, so showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revanth Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing The Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion. Hi, good morning. How are you? Good morning. How are you? Are you enjoying?
Well, let's focus on the quick commerce stocks. Zomato yesterday slipped in trade as rising competition in the QSR space has pushed back margin expansion and also has driven faster network rollout. Swiggy was also dragged down. Now we're joined by Karan Turani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital. Hi Karan, good morning and good to see you in. Karan, I think the header of your note was, they're making a pit stop in the longer lap. So what do you suggest? On Zomato, post that week showing and the kind of drubbing that we have seen, people were interested at 250, 270, 280, at 210, 220. Would you be a buyer?
Hi, Nigel. Good morning. I think I will definitely, like to buy Zomato at 200, 220 levels. I would recommend a buy rather. What we have seen right now is, a lot of exaggeration and overreaction, as far as quick commerce competitive intensity is concerned. We do have new players coming in, e-commerce will eventually get into quick commerce, but we don't see a price war for now. If there is a situation of a very sharp price war, wherein prices come off by 20%, 25%, discounting increases in a very big manner, then the losses can really magnify from here on. But as of now, e-commerce companies are not going to go into a price war. They are just trying to come into this segment because they don't want to miss out this opportunity and they want to make the most out of it. So, very clearly, quick commerce, e-commerce, both are going to coexist. There is nothing that, quick commerce will eat up into e-commerce in a very big manner. Of course, there are certain categories where they will end up, gaining market share, but there are certain categories which will only appeal to e-commerce. So very clearly, I think, it's obviously troublesome right now because of the increased number of players. You are seeing fragmentation, you are seeing competition, but doesn't seem to be so alarming as the share price is suggesting right now.
Karan, you've been optimistic on Zomato for a while and you've made that stance. I remember this conversation. We did this a couple of, I think, months back or weeks back, exactly discussing the competitive landscape and you're maintaining your stance. But, here's this, that Zomato press release openly coming out and saying and acknowledging the competitive intensity, even before the giants have come in, the, e-commerce giants like Amazon have announced an official entry. I think that's kind of spooked the street to an extent because you don't even have an official, big player coming in and yet they're saying that the margin expansion has been put on hold. That tells us the existing players between Swiggy, Zomato, Zepto, etc., between them itself, without a major new disruptor, there is a lot of competition. So, just walk us through what makes you retain that optimism and also the other factor why the stock sold off. One was the competitive intensity. The other factor why the stock sold off was the fact that they are front-loading all their, store rollout expenses, right? They're at, I think, 1,000 now. They're saying they'll be at 2,000 by December 25, which is obviously going to eat into profitability. So what is the window that you're giving for this to play out before they get back on the margin expansion trajectory?
So, Surabhi, in the near term, there could be, some kind of a minor price war, but, this is not a sustainable thing. Quick commerce business in terms of economics, you can't keep on burning money for 1 year, 2 year, and then, kind of sustain the business. Eventually, what will happen is that the players might move out of the market, players might kind of move out of this business rather, right? So I think quick commerce is a business wherein you can't really do steep discounting. It is a business in terms of user experience. great lead times, giving the customer the right product at the right time. Now, if you look at this situation right now of the players coming in, there are players like Zepto and Instamart who have got aggressive. They are doing steep discounting. This might sustain in the near term. This might put some pressure on Zomato in terms of profitability. But that is not the only reason why Zomato has delayed the plans for profitability. The bigger reason is higher throughput per store. So whatever new stores that they are opening in right now in the non-metro markets, in the new markets, they are not able to experience high throughput. That's one very big reason. And second, of course, you pointed about the expansion plan. So these are two major reasons apart from the price war in the near term, which has kind of delayed the profitability plans.
No, that's the point taken. But just to press on the point, if there are only 3 players, and that's an argument I've heard from a couple of investors as well, that it's not sustainable because Zepto is also Zepto wants to IPO, and they do 2 rounds of fundraise recently, so it won't go on. But if you expand that circle, and as Surabhi said, if you include some of the e-com players as well, why won't they enter if this is a very fast-growing, sustainable, long road kind of market? I mean, those guys have got very deep pockets, so it's not just 3 players. Yeah. And we've seen price wars, running for years in those segments. Karan, go on.
Yeah, I'll come to that as well. So if you look at the e-commerce business as well, e-commerce players have been in India since many years. I think the entire language right now, or the entire comment right now has changed from growth to profitability. If you look at the growth, there's a convergence in growth in terms of e-commerce companies from 40-50% to 15-20%. 2 reasons. One is we are reasonably penetrated right now, and second, there's a very big focus on profitability. So which is why I'm saying that beyond the point, I don't even see e-commerce companies stretching in terms of hefty losses. And the kind of losses Instamart is making, the kind of losses Zepto is making, 1,500 crores, 200 crores on an annualized basis, these are not small numbers. And I don't foresee e-commerce companies getting so deep in terms of making losses. They would rather try to focus on their own e-commerce business and try to make that profitable.
All right, Karan, let's hope that is the case for the sake of a lot of the quick commerce investors, and it pans out that way. But thank you very much, Karan. I wish we had more time and we could sort of have gone on, but we'll invite you again for some more conversation around this very interesting topic. We'll take a break. We are back. We'll get you more snippets from our exclusive conversations. We're from Davos, Axis Bank's CEO Amitabh Chaudhary from the sidelines of that summit. Stay tuned.
Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economy.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से.
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए.
घूमते फिरते आ गए. बड़ी लंबी घूमते फिरते आ गए आप. तो कब आए आप यहाँ पे?
मैं रहता हूँ.
आप ज्यूरिख में रहते हैं. अच्छा.
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि?
नहीं, हम तीसरी बार आ रहे हैं.
तीसरी बार आ रहे हैं.
हमारी एक रेस्टोरेंट है खान्स तारा के नाम से.
जी.
तारा रेस्टोरेंट इंडियन.
हाँ.
तो उसकी कैटरिंग करते हैं हम.
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए.
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों.
नमस्ते जी, बहुत आपको शुभकामनाएं. आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं. तो
हम लोग
शुरू हो गए. तो
आपको काफी फॉलो करता था मैं. लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा.
थैंक यू जी. थैंक यू सो मच. इट्स वेरी नाइस टू हियर दैट यू वाचिंग CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं, बहुत अच्छा लगा आप लोगों से मिलके. एंड वी विश यू ऑल द वेरी बेस्ट. बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल.
हमें कुछ सक्सेस हो जाए.
जरूर होगी. आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं.
ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए. आप बिल्कुल भारत के सामने. और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं. थैंक यू. बिल्कुल खाएंगे जी, बिल्कुल खाएंगे. थैंक यू इंडिया की तरफ से. थैंक यू सो मच. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons.
Welcome back. So let's get you more voices from Davos. Amitabh Chaudhary, MD and CEO of Axis Bank, says if the regulator keeps a tight leash on lending, there is a possibility that slippages on unsecured side could slip towards the secured side. Speaking to Shireen on the sidelines of the Davos Summit, the World Economic Forum Summit, he added that he's hoping for a pickup in private capex. Take a look.
Speaking of the hard calls, do you believe you've taken the hard calls, or will you perhaps need to take more hard calls, which will then reflect in the numbers in the near term?
So, Axis Bank, we believe, has one of the most aggressive provisioning norms in the industry. So for us, on the unsecured side, which we provide for 100% within 90 days, that is not the norm followed by a lot of the banks, including some of the banks who are bigger than us. So in that sense, whatever is happening in our portfolio, we are recognizing and kind of provisioning it away very, very quickly. So yes, as things stabilize and as the stock continues to get better and better, you will see the growth come back. You will see, obviously, the elevated slippages come down. It's the next quarter, the quarter after that, well, only time will tell. But we are quite confident that with the kind of book we write, the kind of underwriting we do, the kind of customers we have, it should not be a long-term phenomenon. But yes, we also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side, because they're all linked. And we have to be watchful of that. I mean, I don't think we should be just gung-ho for the sake of being gung-ho. We need to be watchful.
No, you just talked about the transference of unsecured to secured on the slippages side. Slippages have also been at a 13-quarter high for you. So, it's not a 1 or 2 quarter phenomena. So, do you anticipate things getting worse before they start to get better?
No, I think it's already stabilized. If you look at our numbers, the numbers are already stabilizing. See, we've gone through a period where the credit costs in India were at a historical low. And we talked about the fact that this will stabilize. So I think you're going through a cycle, a little bit of stability. You've also seen the Indian consumer over-leveraging themselves in some case quite rapidly. So I think that also is getting normalized as we move forward. And obviously there have been some macroeconomic or macro measures being taken by the RBI in terms of controlling some of this unbridled growth. So I think all these factors have played. It's a high after a certain period of time. We are still way below our long-term averages. We believe we'll be at the below our long-term averages, and quite confident about that because we know what we're underwriting.
But what about private capex, Amitabh? What's the sense that you get on that front at this point in time? You said you're bullish about the India story, but in the near term, what does it look like?
Well, till now it is basically the government which has been supporting the capex story, and the private capex is still quite slow. I think it still will take some time to come back. We are hopeful that the private capex should pick up because you are seeing some sectors of the economy where investments are seriously taking off, real estate being one example. I mean, manufacturing, we're seeing some investment, but it has been slow. And when you go and talk to the promoters, they are saying that I will be careful about where I invest. I'm not going to do just these large projects for the sake of doing it. I need to be careful. I need to be watchful. I don't want to over leverage. We have learned the lessons of the past. And by the way, we also need to realize that the corporate profitability has gone up. So there's a lot of cash flow being generated by the companies, and they're obviously using that cash flow to invest rather than kind of borrowing from the system.
Yeah.
So private capex hopefully will pick up, but we've been talking about this story for at least last 12 to 18 months, and we keep saying the same thing every quarter. But this time, I think the tailwinds look slightly better. I think government also realizes that because they have kind of reached the capacity in terms of what they can invest. So if private capex does not pick up, I think it will start becoming a bit of a problem.
All right, well, time to slip into a quick break. We'll come back. We'll get the pre-opening, and our technical experts will be back with us as well. Mitesh and Sudarshan waiting for you on the other side.
Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. Gearing up for the market open in about 16 to 17 minutes from now. Like we've been saying, cues across Asia are positive, barring the Chinese markets. And the implied open is suggesting that after yesterday's massive slam dunk, the bulls could at least start, with a bit of a recovery this morning. So let's straight away take it to our technical experts. We have Mitesh as well as Sudarshan joining in. Gentlemen, good morning. So it's been, tough going for anyone who's tried to play a long trade in this market. But let's see. Let's find out if you are looking at at least a short-term recovery. Mitesh, would you look at playing long or would you be shorting any bounce that we see today?
Good morning, Sylvie. Yesterday there was a good time to sell, when we kind of failed once again at 23,350. Shorting at 23,100, 120 levels may not be a very attractive proposition. I think while we did close below 23,100 yesterday, in case you can capture that area again, I think it will just be a range of 250, 300 points between 23,100 to about 23,350, and shorting should be done around the higher end of the range. So for the timing, I think on the index trade, we suggested, for advising to book profits if you have been carrying short positions, but long is something which I would totally avoid. I don't think there is any significant reversal sign on the chart. So wait for this bounce back to play out properly. In case we get a signal of continuation on the downside, we go short. Otherwise, we wait for 23,350 kind of zone to take short positions.
Okay, all right. Gentlemen, good morning. Thanks very much for joining us as always. Sudarshan, what about you? What would you do?
Yeah, good morning. See, when the markets were going up and we were making new highs, the idea was that new highs should be bought into. Now the exact reverse is happening. Again, yesterday we made a new 7-month low. Unfortunately, when new lows are being made, we cannot go long. We had an opportunity yesterday that fell apart when the Nifty broke below 23,200. So now, at the point when we have 7-month lows, there is no buying opportunity. The market must pause, must build a base, must move sideways. There are so many musts before we can think of buying. There's no sense in trying to capture, a sudden up move. It won't work out. So my view for the Nifty is just stay apart, step aside, focus on stocks.
Okay, all right. Let's focus on stocks then. Sudarshan, you go first. Tell us what's on your radar.
Well, there are buying opportunities because some stocks are bottoming out, even if the Nifty is not. AU Bank is a buy with a stop under 595. HCL Tech, which has been outperforming, is a buying opportunity with a stop under 1790. Hind Petro is a buying opportunity again with a stop under 362. And there is one intraday short, that is CESC. CESC can be considered for selling, the stop above 153.
And Mitesh, what about you? What would your trades be?
I have more of buy calls. Badani Green is a buy with a stop at 1,022 for targets of 1,090. A buy on Berger Paints with a stop at 468 for targets of 490. And Kotak Bank, disclaimer, I have some minor quantity in my portfolio, so there's vested interest. But Kotak Bank, from a trading point of view, is a buy as well. Keep a stop at 1879. Look for targets of 1940 and one sell call, that's Coforge around 83.40.50. Try to get into short side positions with a stop above 84.75 for targets of 8,100.
All right, gentlemen, we'll leave it there for now, but come back with more sort of questions and trades as we go along. Well, 80 points on the Nifty in the pre-open and about 740. Well, I think that should correct a little bit, but it's a higher start, about 1/3% higher start. I think we'll have the dollar rupee as well. So maybe just a first look at that before we go any further, because there nothing yet. 86.58. Maybe a minute more, and we'll have the first rates coming through. Well, Mr. Sajan Jindal of the JSW Group has made a pitch for safeguard duties to protect the domestic steel industry. In a conversation with my colleague Shireen at Davos, he said he expects some announcements from the government in the next 15 days. He added that a new EV from the JSW stable under the JSW brand would be launched in the next 18 months. Listen.
What you're picking up from the CEOs that you're talking to in terms of what the outlook for 2025 looks like, what's global demand likely to be?
I think we are having this Davos meet just when Trump is taking all the
I know, in the
limelight,
shadow
right?
of the Trump inauguration.
Inauguration, that's right. So I think there is a lot of question marks on what's going to happen to the US, what Trump is going to do, and that will really define how the whole world order will happen. Last time around, Trump had put in a lot of import duties, and for him, it's America first.
Yes.
So I think the concept of the WTO, GATT, is all thrown out of the window, and there's nothing like that. So I hope, and also the European Union is also looking the similar way, right? So therefore, I think it's time that we in India start to think accordingly.
Okay, well, just on the US, since President Trump has promised to make America great again for the second time around, as well as once more make in America, you have a plant there in the US, so it might actually benefit you.
Yeah, but that's a very small capacity. There is a plant, and we had invested in that plant because looking at that, US will have to block all the imports coming in from outside the US. And knowing that, so we invested in that plant. So for that particular plant, it's good news. But whether for the world it's a good news, I'm not sure.
No, absolutely. Of course, there is uncertainty on how those tariffs are going to work out. But speaking of tariffs, industry had asked the Indian government for protection by way of safeguard duties, anti-dumping duties. I believe that the work has started on the possibility of putting in safeguard duties. Have you heard back from the government?
We haven't yet, but there's a lot of work going on because it's not a simple process. They have to follow the due process, and that's going on. And we expect that over the next 10 to 15 days, we should hear something back from the government.
In the next 10 to 15 days. But, in terms of demand at this point in time, because the outlook certainly seems to be that global growth will be stable, albeit uncertain, but stable at 3.3%. That's the IMF outlook. Right. What's global demand for steel looking like?
So, no, globally demand for steel is also quite okay. It's not bad, but Indian demand is very strong. And on the back of the investment by the government in the infrastructure sector and other areas, the demand for steel is strong in India, which is good news. So we are growing at about 10-12% steel consumption in India. So that's going well, and except that today China is dumping either directly or indirectly through the FTA countries. That's the only concern that we have. Once that is taken care, the industry should be in good stead.
Well, speaking of China, let's talk about your electric mobility plans. And you showcased your car at Bharat Mobility a couple of days ago. So, the possibility of you tying up with a global partner and possibly a Chinese partner at that, outside of course, the existing partnership with MG.
No, so I'm very bullish about the electric mobility and India, given that it's a large country with large demand for the cars and our over-dependence on imported fuel. In my view, electric cars make a lot of sense for India. So therefore, wherever technology lies, we will tie up with them to bring the technology to India and then very quickly localize it for the Indian market. That's the basic philosophy that I'm working with, and And I'm quite sure that we will achieve that kind of goal. We are already scouting around the world for the technology, and China plays a very important role in electric mobility, because they have much more head start over the other parts of the world, because most of the other part of the world, like Japan or Germany, Europe, they have their focus was on hydrogen mobility. Whereas China went for electric with battery, and they have moved ahead, and battery has really come of age on technology. So therefore, that for the cars, this battery technology is pretty good, and so therefore we are working on that.
So how soon before we actually see an announcement coming in on this front?
Announcement, I'm not sure, but we are already working on that project, and hopefully over the next 18 months we will see a new product coming from the JSW saddle under the brand name of JSW.
Okay, so JSW will continue to be the brand that you will use as far as the electric vehicles are concerned as well?
Absolutely, yes.
Okay, and in 18 months we'll have the cars on the road?
Hopefully, yeah, that's what we are gunning for.
Okay, all right. So the big news coming in from there is expect to hear something with regard to protection for the steel industry in the next couple of weeks or so. That's the word coming from Mr. Sajjan Jindal. So we'll keep an eye out on that piece of news. And also the JSW electric vehicles will be on the roads very, very soon. But let's get straight to another exclusive from Davos. Paytm CEO Vijay Shekhar Sharma has expressed his optimism over achieving EBITDA profitability in the next quarter. On the sidelines of the World Economic Forum Summit, Sharma said that the company's drop in market share is easily recoverable. Let's hear him out.
Well, the road ahead looks like that we have committed that next quarter we will be profitable, EBITDA before ESOP, meaning the before the ESOP cost, which is also reducing incidentally, and we should be doing that. So we are working on the business which is now PAT profitable onwards. So after a couple of quarters, we should talk about PAT profitability, and I would go for that.
After a couple of quarters, so what does a couple of quarters mean?
A couple of quarters are a couple of quarters.
So you won't specify, is that
I learned that being a public company, one thing that you should know is that you should not have one information arbitration with other information. So what we've been talking, I'll be able to detail it further, just like we've said it. Okay. And we've said it that from this point onward, we in earning call also talked about that because our large cash pool gives us interest income, our two costs, which are capex sort of and lots of, let's say, other costs will get sorted out. So we should head towards a PAT profitability soon.
In few quarters is what you have to say.
I have to say that.
So let's talk about what's happening on the UPI side of the market, Vijay. And you know, despite the fact that you've got the NPCI approval, we've actually seen market share come off quite sharply. A 50% drop as far as your market share is concerned, now down to 5.5%. Why is that?
It's very bad, and I can only say that. I mean, the situations and the reasons are public. I'd not like to repeat much of that, but I'd say that...
is it on account of the trust issues related to what happened with the bank?
No, we were not allowed to onboard at all for last... So our business was paused because of regulatory understanding and something that happened thereof. And post that it has come, I'm very happy that without any marketing spend, we are adding millions of customers. So I have a super brighter side ahead, just like this bright sun in Davos right now. We all are surprised, yeah. And I can say that even though we've fall, market share exists, but it is easily recoverable with the product.
How do you ensure that it becomes easily recoverable? What are you going to do?
I think the customers are coming in. It's a product gap, deeper integration to UPI ecosystem, and more merchant acquisition, which creates a flywheel, will bring our consumer back. We do have a marketing budget, but right now we are focused on product-led growth.
All right, that is Paytm. We are just about 5 minutes away from market opening. The pre-open has settled, and it's a 74-point gain for the Nifty. At least at this point in time, it's looking good. But watch for some of the result reactions on stocks like India Mart, Cyient, DLM. They could be pretty severe. Wherever earnings have missed, the market has absolutely no room for error. But let's quickly, those are the stocks. Look at India Mart, could be the casualty of the morning, down 8.5%. Let's quickly move to our technical experts for some final calls. Sudarshan, 910. So what's the stock you'll go with?
I'll go with AU Bank. Consider buying AU Bank with a stop under 595.
Okay. And Mitesh, what about you?
I'll go with the buy on Berger Paints for targets of 490.
All right, gentlemen, got that. So those are the two calls. I'm just quickly glancing through some of the, the Nifty constituents to see what's leading to this up move or what's likely to lead to this up move. In general, there's a bit of an upward bid on financials, BFSI, banks and non-banks. So HDFC Life, Bajaj Finance, Axis Bank, these are some of the names on the upside. Then you have an M&M, a Sun Pharma. So it's fairly mixed, cutting across various sectoral lines. Broad-based recovery is perhaps what the bulls are, hoping for as we kickstart the trade.
Maybe I can sort of request my producer to just give me 30 seconds more to highlight some of these names. Put up MCX if we can, and we'll talk more about MCX with the brokerage call, etc. in a bit from now. It was a big loser yesterday. This about 1% higher. Dixon was a big, so it got smashed yesterday, 13%. Maybe quick look at that one. But it was actually not just Dixon. There was, Amber, which was sharply down, Sirma, PG Electroplast. That entire EMS space got completely smacked around. And of course, look at Zomato and Swiggy as well, which were sharp losers in trade yesterday. I mean, just first looks at where they are starting. So Zomato is down another 3.5 in the pre-open, and Swiggy is absolutely flat. Just Kalyan and Trent, if you can pull those up as well. Trent was the big loser on the Nifty. And of course, Kalyan completely reversed from Monday's 6% pop got sold into yesterday. So flattish kind of start. So these are all kind of hot spots, or hot stocks, if you want to call it. And we'll track them at open. 3 minutes to go for the market start. Well, let's just quickly play out some sound bites from the HCL Tech top brass. Roshni Nadar, the chairperson of HCL Tech, says she expects to see more federal level opportunities in the US in the Trump administration. This is straight from Davos.
I think there was a certain element of unpredictability in 2024, and I think there were lots of customers, clients and companies waiting to see what unfolds. There were, I think, more than 60 countries going into elections,
yes.
Right, culminating with the US, and I think that now it's back to business and back to strategy and implementation. So we expect 2025 to be better.
The feedback that you're getting in terms of the Trump administration's policy changes, deregulation is one of the big promises being made. Do you see that as an opportunity where, companies like yours are likely to benefit from this move towards deregulation?
Absolutely, and the opportunities that we could get in public sector. And I think there have been some American companies which have been much stronger in that sector. But as they look at optimization across all verticals, I think there is an opportunity for us as well.
No, but that's an interesting aspect that you brought out about the public sector opportunity that could potentially open up under the Trump administration. Has there been any indication of what it could potentially mean or lead to?
So I think there's already opportunities which are much more state specific, but I was referring more to federal, and that obviously has to be seen because they've come the DOGE, the Department of Government Efficiency, and we're hoping that we will be able to tap into some of those opportunities. Of course, has to be seen what it is, but on a state level there are certainly opportunities. At a federal level, it would be good to see what we can.
Okay, well, just sort of counting down to the market open in just a bit from now, and we'll have the first rate starting to appear on your screens. So lots to track, and the market indicating a 75-point higher start, at least in the pre-open session. That's about 1/3% at this point in time. What do we have? We'll do indices and we'll get into stocks. First rates anytime now on the big indices. It's higher. The question is whether we will hold on to some of these levels. So 23,080 is where we are at, about 1/4% higher. And the Nifty Bank is starting about 0.15 up, 48,666. The Sensex is starting about 260 points in the green. The IT index is up about 0.6%. 780 stocks are higher and about 430 stocks are lower. So that is the advances to decline ratio. We've got 39 odd names in the green and about 11 stocks which are starting in the red at this point. So that's the Nifty heat map. It's a positive start, and I think I should emphasize it's the start. So we'll see where we go. Survi.
Absolutely, and the positive start is more or less taking everybody along. But look at the mid-cap index. I already see a flash of red on the mid-cap screen so early on. Anyway, sticking to the large caps for now, Sun Pharma 1.5% higher, Shriram Finance 1.5% higher, Reddy's is up about 1%. There's a bit of tech in the mix. You've got Infosys, Wipro, TCS, all these stocks are up and about. Tech Mahindra is up about 0.5%. So tech is looking okay. Bank Nifty is absolutely flat. HDFC Bank 0.3% or so. Let's see what the other big banks are doing. ICICI Bank is totally flat. SBI is actually slightly lower, about 0.5% lower. So Bank Nifty not in the mood today. What else is leading the up move? There's some consumer and auto. So Maruti, Bajaj Auto, these are names on the upside. There's HUL, Tata Consumer, ITC. These are the names on the upside. But the gain has already now reduced to about 60 points. Let's see. Holding onto these gains is going to be critical. On the downside, there are a couple of PSU names like BEL, BPCL is weak. There's Tata Steel, which is on the weaker side as well. ONGC. The commentary that we've got from Mr. Jindal, the next 15 days, there could be some news on safeguard duties. It's not firing up the stocks just as yet. Still lower for most of the steel majors. Nigel.
Well, you got the accident of the morning. That's India Mart. Stock is down close to 10% as we speak. So big downtick is what we're seeing. Zomato and Swiggy continue to see selling pressure. So the stocks of the one-day year, so to call it, they in fact are lower. Zomato, Swiggy, India Mart, they all had a big re-rating in terms of their multiples, valuations as well, and now they're pulling back a little bit. Stocks that are doing well, Jana SFB, that one's up close to 7%. That's the star of the morning, flying away as we speak. So big up move is what we're seeing on that particular name. I think Newland Laboratories as well, they're talking about a new capex, so I think the street likes that. So that's another big mover this morning. And also the point that we made earlier on Dalmia Bharat, that the numbers were weak. However, valuation support and the other factors, management is sounding optimistic about the journey from here on. So that's why after having numbers like that and you have more than a 10% miss on the EBITDA estimates, the stock is down only around 1% or thereabouts. ICICI Prudential, that's the other one that's taking it on the chin, down 6.5%. And Kalyan Jewellers, the one we spotted yesterday as well. Increased pledge from the promoter. The street is a little bit nervous. Promoters' hands are tied till the results come out. So we'll have to see what happens post then. For the time being, the stock under immense pressure.
You mentioned, Nigel, accident of the morning. I don't know if you mentioned Cyient or not, because there's a competition between accident of the morning between India Mart and look at Cyient DLM. It's 11% lower. Margins are down almost 300 basis points. The profit fell about 40%. Look at the drubbing the stock is getting now.
Actually, there are lots of these names, right? I mean, another, I don't want to call it tax, maybe it is an accident. ICICI Pru, 7% cut. Yeah. That's a large name coming through. Stocks under 600 rupees. So it's not a good look for broader markets. I mean, already you got some 2.5, 3:1 in terms of declines to advances, straight out of the gate, and lots of volumes on the downside. I mean, I think I had to mention that as well. So ICICI Pru is down 6.5%, of course, results reaction. Look at Vari Energy is down 5%, so coming up with large volumes. Persistent is down another 3.5%. Again, these are all top traded names. Kalyan is down another almost 4%, 470 now on Kalyan. So there was that one blip on Monday. When the stock ended higher, it reversed yesterday and continues to head south. Dixon was the big casualty yesterday. It's down another 3% this morning. So, just under the 15,000 rupee mark now. 14,740 is where Dixon is at. It's got 100,000 shares. India Mart we mentioned, and I think Zomato we mentioned as well. Zomato is now a green candle, but the low has been made at about just under 204 for the day. It's jumped about 6 rupees from the lows, but we'll see what it's able to do. Swiggy is down at about 430, 2% lower. Yesterday another area which got smacked around is all real estate names. Lodha was down sharply. Oberoi was down sharply. So Oberoi is starting another 5.5% lower. That is Oberoi Realty. We should look at Lodha as well. A bunch of other names there which are starting. Policy Bazaar down about 3%. Again, large volumes down at about 1,600 rupees. Newgen ended 15% lower after results yesterday. It's down another 7%. I mean, so, it's if you want to look at what's down on volumes, it's really rich pickings right now in terms of what's going on out there. On the upside, I mean, I think we mentioned Jana, which is up, but that's about it. Reddington was up yesterday. It's up another 4%. Otherwise, it's all small. 1.5%, 2%. I can spot a Shakti Pumps, which is up about 3.5%. But that's it. Otherwise, it's all very small at this point in time. So
But let's be optimistic. The large cap screen is still holding on. When we started, there was this big fear because we were dipping from 70 to just a 30 point gain. But now at least large caps, 90 points up.
Absolutely. And as well as, hopefully, just a hope that maybe a market starts to stabilize a little bit around the lows that we made, which was just slightly below last week's low. Tahir Badshah is Chief Investment Officer at Invesco Mutual Fund, and he's going to tell us if the market will do that or not. Tahir, good morning. Great to have you with us here. Appreciate your time. Prashant this side. So, if you look at the NSE 500, right, I mean, the primary concern has been valuations. I think till about a week ago, the median price to earnings ratio for NSE 500 stocks was about 45. Many stocks high P stocks have corrected especially, but the problem is they were very high, now they are just maybe high. So where does it leave us, Tahir? And it's kind of a tough one because it's essentially been almost, it's not new, right? These high valuations. We've had high valuations for a decade now, relative to history in that sense. So what's the new normal in that sense, and where should we settle? Your thoughts, Tahir?
Well, I think, some of these obviously were somewhat a lot more extended compared to what even their own strong fundamentals would probably justify. And I think that part of the correction is essentially set in, and we've seen the impact of that over the last some time. I think it's also a consequence of the developments in the last some time, basically with regard to the narrative. Overall narrative has actually come as a significant negative surprise and affected the valuations of many of these companies. I think at one level, my sense is that we have somewhat turned significantly risk averse from an economic standpoint. In various ways, we've deleveraged to a substantial degree, whether you look at it in the form of either a fiscal deficit, or probably you look at it in the form of interest rates, liquidity, even regulation for that matter. I think in various ways, we are at that extreme, and I think we need to loosen up a little bit, because in doing all this, I think we are losing the plot as far as growth is concerned. And that is what is essentially creating this impact, because the confidence in growth is somehow, lessened in the course of the last 2 odd quarters. So I think that is something which needs to, the overall, market backdrop essentially needs to be rectified in order for some of these, valuations to hold up. But I think some of these franchises which have seen this decline, they are also at the same time pretty dominant in their own way. They have executed very well in the last some time. And therefore, in few of these which we also own, we are keeping our faith. We know that they are in a position to grow at least ahead of system rate of growth, well ahead of system rate of growth, if not in those very strong growth rates that they probably witnessed in the last 3-4 years. So I think some of these franchises at lower valuations or at more reasonable valuations compared to earlier would definitely start looking interesting.
Tahir, hi. So I know you won't name stocks, but which are those pockets where you're not letting the price destruction sort of, change your stance or your thesis? I mean, I just want to throw in names of what we've seen in the last, I think, 24 hours. One is this entire quick commerce space, right? Where there's a raging debate on whether in the short term, at least, there's a complete lid on profitability and margins. The other space yesterday was EMS. I mean, look what happened. Dixon came out with pretty decent looking numbers, and we know their business, we know their margin profile, but the stock sold off as if there's some major calamity happening. So just, talk us through these two pockets at least.
So, both these pockets still look interesting to us. We believe that these are the pockets, like as I said, which will still demonstrate growth, which is well ahead of system rate of growth. But obviously there was an excessiveness as far as valuations concerned. We were aware of that, and we've still continued to hold some of these names simply because the fact that the pathway to growth and the visibility as far as longer term growth is concerned is still much higher in some of these names and some of these parts of the market. So I think yesterday for some of these names, or maybe over the last some time for some of these names to actually have declined, like as I said, is more a function of the backdrop. If the same set of numbers were probably reported by some of these companies 6 months back when the overall backdrop was relatively better, I don't think the impact would have been as high. But I think we've got challenged in terms of the outlook as far as overall growth is concerned. I think we are obviously affected by some of the developments from a global standpoint. We don't really have a full handle in terms of what the implications of some of these global policies, the way they are likely to turn, is going to either benefit or probably not benefit India. So I think that's where the problem lies. So I think it's nice that some of these names once again are probably likely to get into a relatively more reasonable zone. If these are enterprises which over a longer period of time are going to hold on well to their return on capital employed or return on equity, I think some of those valuations at least will form the lower end of their lifetime valuation bands, I would say. So that we have seen it in many of the other franchises, whether it is in consumer stocks or FMCG names, etc. And I think some of the same, much of the same thing is probably likely to happen in some of these businesses as well. Let's say, digital commerce, or probably you're talking about even capital market related entities. These are do have a lot of long-term structural drivers for themselves, and I think those will definitely support the valuations at a certain level.
Hi Tahir, good morning. One space which you liked was the power sector, and various ways of playing it, transformers, other companies as well. Some of them have come off considerably. Do you continue to hold that positive view? You know, stocks like Siemens also. Siemens has corrected, I think, more than 25% from its peak. Maybe valuations went out of whack, but there are very other pockets that have a longer runway. However, valuations seem to have got a little bit frothy. Your take?
So we are maintaining our confidence, Nigel, in many of these names as well, in these parts of the market too. But we also have to understand that some of these things are hostage to government policies and government spends, public expenditure, and so on and so forth. And we need that overall narrative to actually continue to provide that essential backdrop. But I think some of these entities have their own journey as well, because they are better configured, they are well positioned from the point of view of relevance in the overall scheme of things, their product lines, etc., the ability to participate in the change. So I think we have to, all these things do require a little more of patience. Obviously, we are coming from a situation where many of these stocks have done exceedingly well. So a 10-15% odd correction where valuations probably turn a little more reasonable is not something which is not par for course. I think we just have to kind of wait through.
Okay. So we've discussed, some of the sectors where you still remain optimistic. Tahir, the other question in front of the market now is that whether there's any point in going back to the old favorites, PSU stocks, capex plays, whether it's PSU or private sector, or whether that kind of whole trade is over and done, at least for now. We are moving to the budget. It's anyone's guess whether the government really picks up on spending again or not. But how are you positioned on the capex side of the market?
So I think we have, at one level, I would say over the last 6-8 months, somewhat reduced our exposure. I wouldn't say a good lot, but we have moderated some part of it. I've told this earlier as well, that we've tried to diversify to whatever extent possible, keeping in mind that we also need growth. I mean, we can't necessarily get into pockets which do not necessarily provide that minimum growth requirement. I think it is better to target growth which is a little ahead of system rate of growth, even if you have to pay a little higher valuations than compared to looking at something which is probably well below that, and yet not as cheap either. So I think that we maintain, but we have tried to ensure diversity to whatever extent possible. So that's how we are basically treating it from an approach perspective.
The EMS companies, right, which you said, what should one pay for these companies? Yeah, how much on a PE basis you think? So 25 for some of these companies was very, very strong, 25 over 24. But growth rates will now settle down a little bit, right? I mean, still very high, 30-40% in some cases. I mean, on a PE basis, what are you willing to pay, Tahir?
So Prashant, if you look at it, some of these EMS kind of companies have not necessarily slipped yet on their growth deliverable. I don't think we have the moderation that we've seen in their valuations is a function of the fact that the results have not turned out to be in line with expectations. Perhaps they are in fact on an aggregate basis better than expectations as well. And I think at some level a few of these are also trying to increase their TAM, for which probably the market is a little nervous in the short run, given the fact that it will lead to perhaps fundraise, it'll lead to perhaps a little more leverage on the balance sheets, if at all, and may depress return ratios in the short term interim. So I think that is once again, as investors, these are companies, like as I said, which can grow well ahead of system rate of growth. And I'm talking about even on a moderated basis, they might perhaps be able to grow at twice the rate of the system. So I think at the minimum. So I think if that is the case, then they will merit significantly higher valuations. Hard to put a number because there are good number of other factors which also play a role from an environment standpoint. So, but I would like to think that these will command valuations which will be much stronger than what the rest of the market would probably do.
Okay, all right. Thanks a lot, Tahir, for joining in and giving us a view on the markets. Looking forward to chatting up with you in the coming weeks. By the way, the markets, the headline index is holding with a gain of 70, 80 points out. The problem is in the breadth of the market. A lot of selling pressure is what we're seeing. And just one stock that's doing well, Jana Small Finance Bank, just take a look at that. That's the green part of the market. Very, very good set of numbers. Street appreciating that. Let's focus on another set. KEI Industries reported a mixed set of numbers. Cables and wires, they led the growth. Solid one out there, but margins contracted a little bit. What's the way ahead? We're joined by Mr. Anil Gupta, the Chairman and Managing Director of the company. Hi, Mr. Gupta. Good morning. Let's address both these two aspects. First, your cables and wires business. If I take a look at your revenue growth, though the composition is very different from Havells, well, you seem to have done relatively better. So the first part is, have you gained market share, and what is the volume growth you'll be looking at in this segment? Point number one. And the second point is on the margins. Raw material costs have been fluctuating, and that's what's put pressure. Do you believe in quarter four onwards you get to that 11% odd margin that we were talking about earlier?
Thank you very much for inviting me to your show. Good morning. We have grown, in our wire and cable business by around 18 to 19% in turnover. Actually, it is 20%, but in volume around 17% we have grown. And so far as margin is concerned, a lot of fluctuations in the dollar and LME, both aluminium and copper, which led to little bit of contraction in the margin by 0.5%. But I'm sure that it will normalize in the full year. In the next quarter, when we see the 12-month results, it will be near to the target what we had projected in the beginning of this year. And in the volumes also, we will try to maintain our growth sequentially in the same manner.
All right, Mr. Gupta, a couple of questions then on this aspect. The way you calculate and, some on the street calculate is a little different. So I just wanted to confirm, quarter four margin improvement will be to the tune of around 50 basis points to 100 basis points in comparison to quarter three. Should that be the understanding?
I expect the improvement by 0.5% in the quarter four.
50 basis points. We'll hold you at that. What about on the market share front, sir? As you have said, you have grown at around 17%. What is driving this volume growth? It's the positive part of a number, so I ask you this. And have you gained market share? It appears so.
I don't know whether we have gained market share, but we have grown by focusing on current favorite projects like solar, like infrastructure, power transmission and distribution, and as well as exports. Truly speaking, in our wires and cables, we have increased our export by around 20%. The number looks little different because our EPC export sales, which was more than 150 crore last year due to our Gambia project, is almost zero this year because that project is nearing completion. So, but wire and cable business has grown substantially.
Mr. Gupta, hi, good morning, sir. So let's talk about volume projections for both for FY25 and also going forward, because you're undertaking major capex in Sanand, and I think you've also taken some more land in Gujarat. So take us through the expectations for FY25. What will be the total volume growth in your wire and cables business? And as some of these expansions come on stream, what should we expect in FY26?
We have maintained a guidance of around 16 to 17% in the volumes, and consequently the value increase will be related to the prices of raw materials. And we expect to maintain the same volume growth in the next financial year, what we are maintaining this year, because our Sanand project production of first phase which should be coming by end of June. So the results will be visible only from second quarter. That too for the around 35 to 40% of the project.
But sir, you're saying 17% volume growth for FY25. Now with Sanand coming on stream, the first phase, again you're saying FY26 volume growth will also be around 17%. Should it not be higher because you're putting more capacity to work?
It may be higher, but I don't want to comment, too bullish at this moment because projects always ramp up gradually. You can't expect that on the first day of production, we will achieve 90% of its capacity.
No, I was saying year as a whole, sir. FY26, the ramp up will happen over the entire course of the next financial year. So that's why I was asking, not for Q1 or something like that. Generally, FY26, what should volume growth be? Because overall capex will be coming on stream.
We expect a sales of 1,000 to 1,500 crore from Sanand next financial year in the remaining period of 9 months, because the production ramp up takes time. We need to take factory specific approvals from the customers, audits, etc. So that's why we are a little slow on giving the guidance from Sanand on a big volume. But FY27 will be very strong.
FY27 will be very strong. Mr. Gupta, good morning. Prashant here, and good to see you, sir. Now, in a couple of weeks, we'll have the union budget. There have been two problems last couple of years. Last year, maybe because of elections or whatever. Spending has been low in terms of what has been allocated. And allocation itself came off quite sharply. If you look at I'm talking about towards infrastructure sectors. After many years, a very strong allocation. How critical is state spending? Generally, it looks pretty robust out there. If you look at power transmission bids and other segments that you're involved in. But how critical is the government pushing the pedal in terms of allocations when the budget is presented this time?
I think the infrastructure spending is always very critical for our industry because most of our product goes into the infra project, energy sector, and in renewable where a lot of growth is coming up. But I think transmission lines, evacuation of power through the transmission lines is important, which is normally coming up now through the tariff-based competitive bidding. So we expect that this national transmission plan, electricity plan, which will bring some good investments in transmission sector also next year. And in whole energy segment, power generation, transmission, distribution, and the power consumption sectors like industry, infrastructure, and real estate, they will bring bullish trend in the wire and cable demand.
Okay. All right. Very quickly, sir, before we let you go, the EHV part of your business over there, because of slow clearances, I think that's what was the big drag, and that's why there was a sharp degrowth in the past quarter. Have things stabilized?
Yeah, it is improving, and we expect a good numbers in this quarter. But we have utilized that capacity for our HT cable production, and you can see that in HT cable segment we have grown by 49%.
Got it.
All right, we'll leave it there, Mr. Gupta. We'll look forward to our next chat. Thank you very much for joining us and running us through some of that sort of commentary. So just under 4,000 rupees is where KEI is now trading at. It's been one of the huge big wealth creators, 10x in the last 5 years. For KEI. We'll take a break. We are back and we'll have the management of PNB Housing Finance joining in to talk about third quarter earnings and the outlook. Stay tuned.
Welcome back. As we speak, a few stocks are coming off their lows, so we're trying to look at some positives. India Mart, case in point, the stock has come off close to around 5% from the low point of the day. But let's talk about another one that's getting a drubbing in early morning trade. ICICI Prudential, that's trading weak. Vamakshi joins us to analyze those numbers for us. Vamakshi.
Well, Nigel, when we look at the new business premium, that saw an uptick of 53.5% coming in at 6,441 crores. The total APE was also up nearly 27.8% at 2,438 crores. This is more or less in line with what the street was estimating. But the big hit is coming as far as the VNB margins is concerned, because that has come in much below what the street was anticipating. Now, keep in mind the VNB margins have contracted from 22.9% to 21.2%, and resultantly there's a miss on the VNB front as well. VNB is up 18.6% at 517 crores. Now, there are a couple of brokerage notes that have come out with their take on the numbers. HSBC has a buy call. Target price has been cut from 825 to 780 rupees per share. Morgan Stanley is the next one. They have an equal weight call. Target price of 695. They too allude to the fact that VNB margin misses the company, the brokerage's estimates. They've gone ahead and trimmed their VNB forecast by 2% for FY25 and 27, considering the miss on margins. Macquarie has a neutral call, target price of 725. They say that Q3 FY25 VNB growth has disappointed yet again. A higher ULIP, declining savings and higher costs have affected margins, and they see further downside to FY25 VNB estimates. So overall, doesn't look like a good picture for ICICI Pru.
It does not. And look at that stock sliding 8.5%. Thanks, Vamakshi, for reminding us once again about the reasons and the issues with those numbers. Q3 disappointment playing out on ICICI Prudential. The next company on our radar is PNB Housing, also on the back of results. And the stock has cooled off actually from the morning highs. It opened positive, but since then it's down about 4% from the peak. And overall, if you look at PNB Housing in line with the market correction, the stock is about 25% off the 52-week high itself. So what are the trends in the third quarter and what's the outlook? Well, let's take this up with Mr. Girish Kausgi, Managing Director and CEO at PNB Housing. Mr. Kausgi, always a pleasure having you on. So, I mean, year on year, the growth number looks okay, but sequentially, of course, one can argue that over Q2, Q3 disbursements are lower. But I want to start with the brighter spark in the numbers, and that's margins. Because you've actually managed to improve margins by a shade quarter on quarter. Even year on year, the margins are looking better. So what went into that? How is your cost of borrowing moving? And what can you guide for, considering the market is expecting rate cuts this year from the Reserve Bank?
Well, good morning, Surabhi. I think if you look at quarter three, it was pretty good. If you look at the demand, mortgage industry is doing well. Demand is quite robust. But I think this year, quarter one, quarter two, quarter three, there has been some challenge for the industry because of various reasons, and quarter three the challenge was much more. But if you see PNB Housing, quarter one, quarter two, quarter three, all the 3 quarters we have done pretty well. Well, if you compare with quarter two, I think disbursement is slightly up. The book has grown by 4% on retail, so I think quarter three is pretty good. There's an income growth of 11%, net interest income growth of 17%, PAT growth of 43%. If you look at NIM, it is quite stable. If you look at ROA, it is 2.51. I think on all the metrics, we have done pretty well. Talking about margin, our guidance is 3.5%. So we will be able to maintain around the current levels, let's say about 3.6 to 3.65 in that range. Our cost of borrowing now is 7.83, a notch lower than what it was in the previous quarter, 1 bp lower. So we've been able to manage a cost and slightly increase the yield. Yield now is 10.12. So I think overall it's a pretty good quarter, because you will see some of the companies in this quarter showing YOY decline in disbursement. That's because of certain challenges, nothing to do with the demand.
So you're saying that even if we get into a rate cut cycle, you will maintain margins at around 3.6, 3.7%, right?
Yeah, that's right. I think we are expecting a rate cut of about 25 bips. That will have an impact of 10 bips on the cost of borrowing. We'll be able to pass on that. I will be able to maintain margin around, see, guidance is 3.5. We'll be definitely much above that. And also, if you look at the growth guidance for this year on retail was 17%. We are at 17.5%. So we have already kind of, ahead in terms of our achievement, both in terms of book and disbursement. So I think So just coming on disbursements in a second to complete that margin, answer.
What you're saying is 3.6%, but for FY25, to be fair, I mean, it will be better if you give us some sense of what happens as we get into FY26, because the rate cuts, might continue for the rest of the year. So will you be able to hold margins at 3.6%, even say in the first half of the new fiscal?
See, about next 2 to 3 quarters, we'll be able to maintain around that level. And after that, the margin will slightly start improving for 3 reasons. One, we are changing segments. We are growing our prime book slower compared to emerging and affordable. Affordable now the book is 3,838 crores. We have actually doubled affordable book in last 9 months. So we are increasing affordable, we are increasing the growth in emerging and lowering the pace of growth in prime. So this is one. We are moving segments, and also we are increasing yield in all the 3 segments, whether it is prime, emerging or affordable, number 1. Number 2, we'll be starting corporate, so that will add to the margins, and therefore because of these reasons we'll be able to hold.
Okay, hi Mr. Kowski, and good morning, good to see you, Ben. The affordable book, in the past I think you've said you're looking to grow to around 5,000 crores odd. Any geographic targets you have out there?
No, we are actually present in 13 states. We will expand to 15. So for us, the contribution geographically, I think it is almost similar between South, North and West. South is slightly higher. I think that is more by design. And we have disbursed about 930 crores in Q3, and we should disburse a little over 1,200 crores in Q4. That will take us to a target of close to 5,000 crore book in affordable by March.
Okay. You mentioned corporate, sir, a new segment, and you said that will, of course, aid margins. Can you elaborate on that? Affordable, you've given us some targets, but what are you thinking with respect to the corporate segment?
I think corporate this year will be able to start. So I think coming year we should be looking at about 1,500 odd crores disbursement. So we don't have a big target on corporate. It will be very small in our overall portfolio. It will be always less than 10% at any given point in time.
And when you say corporate, this would be lending to exactly, what sort of entities?
So this will be lending to developers for largely construction purpose.
Okay, so there could be an element of construction financing coming in as well. So that brings us back to now the overall picture on AUM on year. It's up 12% in the third quarter. FY25, what should be the AUM growth? And then FY26, I know it's a little early to ask this question, but since you're going to start this new segment and affordable is growing, what can shareholders look out for?
I think if you look at last almost 3 odd years, we are not selling any portfolio or the pool. And therefore, I think more relevant for a discussion will be on the book growth, especially on retail. So retail this year, our guidance was 17%. We are already at 17.5. So we'll be able to surpass our guidance of 17% this year. And for next couple of years, we have detailed our growth between 17 to 18% on book, which will take us to 1 lakh crore of retail book by FY27. So that is what we have already, laid out. So we'll be able to continue with the trend.
That's on the retail side. And total AUM?
So as I mentioned to you, we are not actively selling any pool now. So today AUM is about close to 5,500. So that will run off over a period of time. The focus for us mainly is to grow our book. We want to grow our balance sheet. And in that context, we'll be more particular with respect to retail and corporate growth.
All right, Mr. Kowski, very quickly, Quality Investment Holdings, that's the Carlyle Group. They have 30% stake, which has come down to around 10%. Any communication from them with regard to what they plan on doing with this 10%?
No, actually, we never engage on these things because Carlyle is an investor and they're on the board, and it is left to their decision. We generally don't get into investment decisions.
All right, because from a shareholder perspective, the street will be waiting by for this to get cleared out. And that could be one of the triggers for the re-rating. So we'll keep an eye out on that front. Appreciate you joining in, Mr. Kowski. Thanks a lot for joining in and detailing the past quarter's numbers and the vision that you have going ahead as well. Well, it's time for our special segment, Quarter Se Quarter Tak, and where we bring you earnings expectations from every sector. Vinny joins us today to tell us about what she's expecting from the pharma sector. Vinny, over to you.
Good morning. So today, in terms of pharma sector and what we're expecting in Q3 FY25, the pace of profitability growth for pharma companies in Q3 is expected to be slower than the previous quarters. And this is the previous 2 quarters that we're talking about. Now, for Q3 FY25, analysts are expecting pharma companies to see sales growth of around 10 to 12%, EBITDA growth of around 13 to 15%, while profits are expected to see a growth of around 11 to 13% during this quarter, driven mainly by operational efficiencies, INR depreciation, I beg your pardon, as well as a reduction in freight costs. Now, in terms of the moderation and growth that we're seeing and the growth momentum compared to the previous quarters is expected primarily due to the pricing pressure and a high base effect that is coming in. Sales for pharma companies this quarter is expected to be supported by growth that one will see in domestic business, as well as US markets is also something that will support the growth. But India sales are likely to be the key driver during this quarter. And among the large players, Dr. Reddy's can see a very good growth of around 10% during this quarter, while in terms of India business that we're talking about, Sun Pharma is also expected to see a 9% growth on a year-on-year basis. Mid-sized companies, whether you're looking at JB Pharma, Torrent and Mindgan Pharma, are expected to outperform with 11 to 13% growth, driven by chronic portfolios, while Cipla and Zydus on the other side are seen reporting a relatively weaker quarter this time. 6 to 8% YOY growth is what we're expecting, mainly impacted by supply issues as well as base effects coming into play for both these companies. Now, coming to closely watching out, and what is watched out is the US markets. The US generics are expected to see flattish growth due to the price erosion and lack of significant launches in the US market. 5% growth is what is projected overall in the US market for all these pharma companies, and that will be mainly because we'll be supporting the growth. What is it? The specialty business as well as scale-ups that will come in on that front. Moderation in terms of price erosion. That is a key factor to watch out for. And key product launches by some of these companies like generic Spiriva as well as generic Myobatric is something that is a key focus in the US market. In the US market, what we can also expect is Revlimid sales are now going to start becoming lower. So that will impact Dr. Reddy's, Aurobindo, Sun Pharma, Zydus, as well as Cipla versus sales booked in the previous quarter by these companies. Now, company-wise, when you look at it, Sun Pharma could grow in the range of somewhere around 8 to 10%, mainly led by the US specialty portfolio. Cipla and Zydus could see a decline in terms of growth sequentially in the range of 5 to 7% in the US business, mainly due to supply constraints. Dr. Reddy's growth will be supported by contribution that's coming in from the latest acquisition. This is the first quarter where we'll be combining this acquisition, so keep an eye out on that one. EBITDA expected to grow in the 15% range YOY for the pharma sector. Overall, on overall basis, it's expected to remain flat on a sequential basis. Cipla, Dr. Reddy's are likely to witness margin contraction, while Sun, Lupin, DVs are expected to witness strong margin expansion this time. Commentary will be key from pharma players that will remain in focus. From Biocon, especially, they have got the clearance coming in for 2 of the biologics plants, so keep an eye out on that. Dr. Reddy's in terms of timelines of approval for new product launches, or Aurobindo Pharma in terms of progress of breaking even in penicillin G is something that they'll watch out for, and capacity addition. And also in terms of Cipla, watch out for timelines in terms of recovery for some of their sales and products is going to be a key factor to watch out for. Now, overall, while Q3 is expected to be stable quarter for the pharma sector, the growth momentum has seen a bit of a slowdown, and companies with diverse portfolios, strong execution in the US, robust India's business sales are the companies that will outperform overall in the pharma sector. And before we leave you all with what is expected in pharma sector, let's look at the valuation also, because valuation is very interesting. That what we are watching out for. Most companies are trading above or around the 5-year average, so quite high in terms of valuation, Nigel, and that's what we'll keep an eye out on.
Thanks a lot for that. Very well. Let's discuss this in further detail. We have Sumit Gupta, AVP Research at Centrum Broking, who joins us on the show. Hi, Sumit. Good to see you in after a while. Tell us, what is that company that can give a positive surprise for Q3, according to you?
Hi, thanks for having me. Good morning. Yeah, so like overall pharma space, we expect within our coverage universe, so we expect around 10 to 11% kind of growth led by good performance in Indian pharmaceutical market, as well as subdued performance in the US market. So US market continues to be led by niche launches, easing pricing pressure, and INR depreciation also leading to some bit of growth. However, if you see from company specific point of view, We expect Cipla's US sales to decline modestly by 3 to 4% due to supply side constraints in lendirotide. However, this phenomenon is expected to be for this quarter. However, we expect from next quarter also it will normalize. However, if we expect Dr. Reddy's sales, so we expect that to grow at around 7 to 8%. So, and Sun Pharma's specialty portfolio continues to drive the overall US portfolio, and we expect around 15 to 16% kind of growth in the US segment for Sun Pharma also. Coming to the domestic market, we expect basically growth will be led by new launches or the in-licensed portfolio and the core brands. So on organic basis, we expect around 10 to 11% kind of growth. Let's say for JV Chemicals, we expect 11% kind of growth. However, with including the off-health portfolio, we expect 22, 23% kind of growth. So this is the kind of growth that we are expecting for this quarter.
Okay, all right. In terms of commentary, as Vinny said, that's going to be essential. Give us a couple of those data points, company specific. What's the commentary you're looking at? If there's any particular trigger that you're looking forward to.
So let's say for USA Plus, so how the lendirotide or the specific key launches are there, and what kind of pipeline timeline that we can expect over the next few months or the few quarters. Or let's say for JV Chemicals, how they are planning, how they are expecting, you can say, how they're expecting their particular launches to go forward from here on. So it's very company specific to very drug specific and from company to company. Sun Pharma specialty portfolio continues to do well. So it will be very company specific.
Sumit, hi, morning. You have coverage on Aurobindo? If you do, no, you don't. Okay. Come off very sharply. It's basically back to previous lows of about 1150 or so from the recent high, about 10 days back, about 1350. So that is Aurobindo for you. Apart from that, we've had some fund managers we've spoken with talking to us, and this is beyond the third quarter. Maybe we'll hear some of it in commentary, etc. we've had in the past. Indian generic companies, pharma companies talking about the GLP-1 opportunity and how they plan to sort of go after it. Anything you expect to hear from any of the companies under coverage?
Yeah, this will be one of the key focus in the commentary for this quarter across the pharma space. So GLP-1 continues to be a good opportunity for the near to midterm. So we will see continued traction from analyst community too for the asking the pharma space, and overall we will see positive commentary on this.
Kind of commentary, and from which players and who is best placed according to you, Sumit?
So there are multiple players. So it's a multi-billion-dollar opportunity, and we see be it Reddy's, be it Cipla or some other companies. So there are various players which are coming.
Okay, all right. Various players which are coming. Just in terms of, we don't know whether this is really going to play out in what shape, form, etc. Do you expect, at least during campaigning, overhauling healthcare in the US was a big campaign promise, right? We've not heard anything on that front as of yet. Do you think, is that a question you get from investors at all, something to track? Or you think, it's really a non-event in that sense?
Yeah, nothing much on that side from the investor community as such. Basically, India, India's pricing is very attractive in the US market. So, I don't see much impact on the Indian pharmaceutical companies on the negative side. So I don't see any negative. On the contrary, it might be positive. So if there is anything which might come, and Indian pharmaceutical companies are very much positively placed in terms of pricing and in terms of volume share.
Okay, all right, Sumit, we'll leave it there. Thank you very much for joining us, and we'll speak to you once we start to get some of these numbers out from these pharma companies. Okay, I think the market, by the way, is still holding 80 points higher, 23,100. Mitesh is with us with what he'd want you to do this morning at 10 o'clock. Mitesh, what do you have?
So, Prashant, nothing much on the index. Seems like we'll go back to a choppy range. So we'll avoid the index for the timing. But on stock side, Wipro is something, which has caught my attention. Buy here with a stop at about 298. Look for a target of 318, 320 to begin with. Maybe eventually higher levels, but that is what I think the stock looks like poised to do. And the other stock on my list is a sell on IGL with a stop at about 396 for a target of around 365.
Okay, I got that. ICICI Pru is the big damage this morning, large cap stock which is selling off. Any levels here, Mitesh? ICICI Pru?
So ICICI Pru, I think, has had a gap down and then a big follow through on the negative side. I think the stock is heading towards 540, 535 zones. So there's still about 70% kind of a downside left.
Something like a Oberoi Realty, is it coming to some support levels? 1750 now after today's fall.
See, Oberoi had a big fall yesterday and today I think there's some continuation. There is minor support around the levels of 1650, 55, but that is still about 100 points away from. I won't be venturing into Oberoi Realities.
Okay, all right. That's basically all the way back to September 24 levels. And if it does get to those 1600 kind of levels, but big fall last two sessions. Mitesh, thank you very much for joining us. Good speaking with you. On the other side, Manisha joins in with commodities and focus on. So stay with us.
Strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
We own a bunch of these platform companies. We really have been in this space now for a while, and we continue to like it. We clearly believe that these are going to remain the wealth creators and the winners for a very, very long period of time. In between, there could be challenges for a quarter or two as companies essentially either accelerate or tweak their growth strategies. There will be competitive intensity, and in some of the cases, maybe some of the growth strategies may not work for a short while. We've seen, for example, like what the Zomato management itself has said, and we.
Welcome back. So the mid-cap correction is continuing 1.5% down on the mid-cap index. Let's look at stocks which are really reeling under pressure today, and IndiaMart is definitely one of them. After the numbers came through. So let's go across to Rima to look at the fine print. Rima, so what went wrong?
Well, for starters, the stock today has now hit a fresh 52-week low. It's down 18% in the last 1 year and now more than 30% off from its 52-week high. Well, what went wrong? The quarterly paid subscribers. That's the key metric to track the business health of the company, and that saw a decline of 3,700 on a sequential basis. You know, in the good days, the quarterly paid subscriber, quarterly addition used to be 5,000, 6,000. Then when things started getting tough, the business environment over the last couple of days, that quarterly addition came down to 1,500 to 2,000. But this decline seen in Q3 was unexpected and came in as a bit of a negative surprise. Now, the company has said this is on account of one, the company is focusing more on adding better quality, higher quality customers, and secondly, the holiday season in Q3. Nomura has downgraded IndiaMart to a reduce. The target price is slashed. Earlier, it was 3,150. It's now down to 1,900. They're valuing the core business at 20 times. So even the valuation multiple has come down. Earlier, it was at 30 times. And now they're valuing IndiaMart at a 50% discount to InfoEdge's business. Motilal Oswal, on the other hand, continues to remain bullish in the stock. They have lowered the target price to 2,600, but they argue the valuations are undemanding. Back to you.
Okay, all right. Thank you very much, Rima, for that. That is the sort of big mover, continues to be the big mover on the screen. Well, shifting focus to commodities, Manisha is here with what she's got top of mind. Manisha, good morning.
Well, morning, and I'm looking at the crude oil prices because since the inauguration for the US president has happened, we've seen crude oil prices only go one way, and that has been on the lower side. Well, we started this year on a positive note because there were some supply concerns, but not anymore. To begin with, Trump has declared national energy emergency, and he's talked about three things, especially one, that the permissions or permits would be eased on. The second is opening up more acreage in sense of onshore and offshore drilling. And third, most importantly, is that there would be a reverse of clean energy policy. So that is what really seems to be putting pressure on the crude prices there. And then there is conversation about more tariffs as well. The US president has now reiterated that there are more tariffs coming in for China, nearly 10% of that. And then there are more tariffs also coming in on Mexico and Canada. This would happen on 1st of Feb. Markets also are looking at higher supply concerns. Well, you look at the US oil production, well, that is at all-time highs. Also, OPEC and allies, which is the other part of it, is looking at a spare capacity of nearly 5.8 million barrels per day. So there's that much crude available or spare capacity in the international markets. So less reason that you could be looking at a strong run-up in case of crude prices. But then there are some supportive factors as well. When you look at the US president, he's talked about probably stop buying in sense of crude from Venezuela. That would perhaps bring in some supply concerns because US does import a huge chunk from Venezuela. The second point is that the winter storm in Gulf is continued to raging on. So that demand also is something that's seen in the markets. And then the US will start to refill strategic reserve at a more stronger pace, would mean more pickup in sense of crude from the markets there. The US sanctions on Russia that we've seen recently already have disrupted the physical oil and the tanker market. So there is some near-term premium that we are seeing in various crude varieties coming in. The markets also are reacting to the Saudi Aramco statement that was in Davos yesterday, suggesting that they're expecting oil markets to be healthy. For 2024, the global oil demand stood at around 104.6 million barrels per day. Saudi Aramco's Nasir anticipates that you could be looking at a higher demand at around 106 million barrels per day for 2025.
Okay, all right, got it. Manisha, thank you very much for that. So that's commodities. Now we'll take a break on that note. Coming back on the other side, our special segment, Budget Countdown, coming up. Lata will be in conversation with Deo Shankar Tripathi of Aadhar Housing Finance and Mahesh Mishra of India Mortgage Guarantee Corporation on what the budget can do for the housing sector.
Itself said that, look, they saw a similar thing playing out in the case of food delivery, where they went in aggressively and then had to pull back later. It's quite possible that quick commerce will also witness a similar situation. So it's honestly not going to be for the faint-hearted or for the more short-term oriented investors. So if you're looking at the next 1 or 2 quarters or maybe 4 quarters, it may not be the right place to be. But if you have a 3-year, 5-year, or 10-year view on this whole digitization opportunity, we have to use these weaknesses to essentially continue to buy and load up on the space.
I think we committed a few years ago that we would invest 250 million. We have made that investment. You are seeing the products, you're seeing the growth. There are more products this year, and with that we'll share more capex plans as well. We're a global company. We cater to so many markets, and we will further that in EVs as well. We have launched iQube in some markets outside India. The electric scooter for BMW is designed, developed by us, and is selling in European markets.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female.
Hello and welcome to our Budget Countdown special. In this edition, we look sector-wise for their demands. We start with housing. The budget approaches housing from two ends, as we know for the last so many decades. One, it provides tax exemption for interest and principal payments towards a home loan. It's a small amount, but it is there. Second, it provides housing for economically weaker sections through the PM Awas Yojana, the PMAY, both urban and rural. Since its inception in 2015, the government has sanctioned over 4.2 crore houses. And in June 2024, last year, 6 months back, this scheme was extended for a further 5 years, 24 to 29, with a target of 2 crore more houses. The total expense for the central government over these 4 years is approximately 4 lakh crore, which works out to around 45,000 crore per year for this subsidized housing. What more can the government do? What's the ask of the industry? I have with me two stalwarts, Dev Shankar Tripathi, the Executive Vice Chairman of Aadhar Housing, and Mahesh Mishra, the CEO and Managing Director of India Mortgage Guarantee Corporation, with me here in the studio. Gentlemen, Mahesh and Mr. Tripathi, thank you very much indeed for joining me. Well, Mahesh, first up on the tax, the one that perhaps our audience is more familiar with. This 1.5 lakh, which we get on interest, and 2 lakh on principal, was, fixed long back.
Right.
Do you think there is a reason to ask for more?
Yeah, so there are two parts to this. One, I think there is a consistent focus on growing housing because of the obvious upsides that housing provides. But can there be more? Yes, because there are certain stark data points staring us in the face. If you look at 2 years back, 52% of all home buyers were first-time home buyers. That number is now down to 48%. Okay. If you look at sub 15 lakhs, 61% used to be first-time home buyers. That's now down to about 57, 58%. So the first-time home buyer population is going down. The average borrower age is also remaining flat. So
youngsters are not buying.
Youngsters are not buying. or not buying as much. And housing, as you know, has moved from being a pre-retirement necessity in one generation to being something we like to do in our 30s. But that's remained flat. So one, as you pointed out, that this whole 1.5 and 2 lakhs was way back in 2014. And if you just look at the RBI's housing index, if it was 2014, it was 100, it's now 178. So there has been a 78% increase in prices without a commensurate tax benefit flowing in. So I think that's something which definitely the government should look at. The second part, which may not be tax exemption, is stamp duty. I think stamp duty ranges from 4 to 7%, but there is certainly room for a universal reduction to say 2% for first-time home buyers, or if borrower and co-borrower are both under a particular age. But I think the combination of tax relief as well as across-the-board stamp duty reduction for first-time home buyers is the need of the hour.
Okay. Well, point taken, but you know, why I am a little less optimistic about any such changes is, one, of course, stamp duty, state government. So, I don't know, the central budget can only incentivize or, you know, moral suasion, use moral suasion. Secondly, if you look at the new tax regime, they're discouraging exemptions altogether. So, will they give more...
So yeah, the probability could be low, but if you look at the PMAY...
Need for the hour.
Exactly, and if you also look at the PMAY 2.0, there is still, see, 50% of our homes are still bought in the top 5 cities. And the PMAY 2.0 caps your unit price at 35 lakhs.
Okay.
If you look at EWS in the top 5 cities, the average unit price is 26 lakhs. If you look at LIG, it is 47 lakhs. So there is an asymmetry in what PMAY hopes to achieve and what the real estate prices seem to show today.
Fair point. So anyway, you have to inflation adjust. But I think on the issue of PMAY, we have the expert joining us. So let me get to Mr. Tripathi. Mr. Tripathi, have you all presented something to the NHB? What is the ask of the housing finance companies in terms of PMAY urban first? I'll come to rural in a bit.
You see, Lata, the entire country, if you see, there are 2 schemes available, PMAY urban, PMAY rural. PMAY rural has got a complete different segment where the government of India and state government provide 1.25 lakhs to the very poorer section of society. But the rural area is not the villages where government is providing PMAY rural. In fact, if you see, if between 2 districts or between 2 big cities, there are large number of small towns are developing. Since the census has not happened from 2011, so there are many towns which were having 1,000, 2,000 population. They have gone now 5,000, 6,000 population. PMAY urban addresses the location which are approved location where subsidy is given. The large number of these small towns, they are excluded from the identified location for purpose of subsidy.
So 1 minute, Mr. Tripathi, what you're saying is that something like Rurban has grown a great deal.
I am trying to say...
And they are not getting subsidy, and they're not getting even the urban subsidy nor the rural subsidy, is your point.
The rural subsidy, they don't get, because that is hardly 70,000 rupees. That has make no sense. The cost of construction remains the same for everybody. The whole idea is that even government of India has given direction to state government. They can include as number of urban towns which they feel are going to be a pre-urbanization towns in the future. That is what the government of India has given direction. Some state government has given long list and covered many towns. Many state government has not done. So as you were telling, it is all the state government domain. They should see what are the small towns developing between 2 districts, headquarters or 2 big cities. They should be covered to reduce the congestion in the bigger cities. That's the whole idea, and that will. And you see, today the large number of people under PMAY are in the housing. They are moving tier 1, tier 2, tier 3, tier 4, tier 5 locations, because the commutation has improved. In 1 hour hardly traveling time, they reach the city center for the job work. So I think people will not try to live in the cities, but at the outskirts of city are these small satellite towns.
Okay. So the need to include them, I take your point. And you also agree with what Mr. Mishra is saying, that the EWS housing level has to be increased, and the LIG, from the current 35 lakhs, I think, we have to make it 45 or 50.
I will take up this point. Government of India in the PMI 2.0, they have authorized state government to revise definition of EWS depending on the location. Maharashtra has done 6 lakhs per EWS scheme, and Uttarakhand has done 5 lakhs. So in metros, I think if the state government can revise definition of EWS from 3 lakh to 4 lakh, 5 lakhs, the eligibility of loan will automatically improve. 25 lakh rupees is the coverage in the PMI subsidy. I do agree with Mr. Mishra that amount they have included 35 lakh rupees the cost of property and 25 lakh rupees loan, which precisely should go a little up, and that will cover large number of people in the big metro. The other thing. So another point, Lata, I will take up here.
Yeah, I wanted to ask you, sir, about this affordable housing in partnership. About 15 lakh homes have been done in that, and I believe you are a lender or you are a developer in that area. Now, under 2.0, do you think you can deliver another, 15, 30 lakh houses? Because the ambition is to do nearly 2 crore homes in 5 years. The previous program was 9 years. Now, the ambition is to do larger number of homes. Do you think the same rules will work?
Yeah, Lata, in affordable housing, supply side from big developer is almost negligible. The supply side has to be augmented from the affordable housing in partnership only, which is actually the major project of the Government of India, PMI 2.0. In affordable housing in partnership in 2016, the Government of India has allowed tax holidays to these developers for 5 years, which is now no more available. So in case of affordable housing in partnership, though government in PMI 2.0 has given a lot of direction to state government to reform and frame a policy of affordable housing, provide minimum 5% mandatory EWS LIG in the bigger projects. Number 2, they have provided zones in the development plan where the affordable housing property will be there. They give land to the affordable housing developer at a cheaper rate, but the state government are thinking the central government has got pool of land. Central government is thinking the state government has pool of land. I think they have to decide among themselves. It's merely making the schemes will not serve unless initiative has to be taken for providing land at the cheaper rate along with the land. Along with the land, another thing is there that affordable housing finance developer AHP, this has to be enhanced in a larger way by participation from state government, central government, developmental bodies, and the private developer. Once supply side increases, things will happen in a very nice.
Okay, yeah, pricing, I don't know, we spoke at the time of the election to the Andhra Chief Minister's team, and they were crying about getting land for their capital, Amaravati. I mean, they're going to rival locations. But even the government state government is not able to buy land cheap. Such is their problem. You wanted to add to anything that can be tweaked in PMA by 2.0?
Now, when we are talking affordable housing, incentives, whatever has come so far has come to the developer.
Yes.
Now, let's also look at the financiers. The target segment of 15 lakhs and below or 20 lakhs and below, wherever you want to peg it, this is a segment that will largely be addressed by housing finance companies. 70% of our lending is still by banks. Housing finance companies are committed to growing low ticket housing and what is genuinely affordable housing. Now, when we talk affordable housing, we only talk of potentially higher margins because interest rates that they can charge are slightly high. But I think we don't realize that it's a very difficult business to scale up. The headwinds are significant. One, the cost economics don't make sense always. They're not very favorable. Second, collateral quality is not always pristine. Third, underlying risk is high. So it's not very easy to build significant scale as an affordable housing finance company.
This digitization of land has not worked?
It is a slow burn process. I mean, it will definitely work.
Okay.
But it is a slow burn,
I take your point. It is. See, because the
process.
margins are very different. The margins for a bank in home loans are under 3%.
True.
But for housing finance companies, it is like 7 to 8%.
No, we are perhaps underestimating the cost of credit and the unit economics. But I don't see why the government should not provide tax benefits or tax breaks to affordable housing finance companies as long as 75%, I'm making up a number, it can be 75, it can be 80, as long as 75% plus of the origination is in the sub 15 lakh category. Again, I'm making up the ticket size. It can be a decision. But there has to be greater financial incentive to scale up the affordable housing finance business.
Okay. Running out of time, Mr. Tripathi, anything on the affordable rental scheme that I thought that would take off because they were going to use vacant government land. Do you see any proposal there?
Actually, in most of the state government, the large number of flats they constructed lying vacant. That is, the government has said, first of all, utilize those flats for renting. Okay. In bigger cities like Bombay, Delhi, there may not be a possibility. But here, the private sector has to be invited and they have to be incentivized to construct the rooms or dormitories for providing affordable housing and rental. It's a good beginning, but it will take its time. And I am sure that for those who are coming to cities and new people, they can't go to buy a house immediately. They need to be provided the rental housing. Yeah. This will take off. But again, the question of land comes. But if land is not possible, they has to be given to these private developers to create properties. And they can be incentivized by the tax break or something like that.
Okay.
This is what my view is there. One thing what Mr. Mishra was telling, very valid. I will take a minute Lata here. One thing is missed out. GST concession of 1% is available up to 45 lakh rupees property only. When the cost of construction has gone up by 25-30%, this has to move for the metro cities from 45 lakh to 60 lakh rupees for the purpose of 1% GST concession. Another thing, what Mishra told, Affordable Housing Fund used to be with the NHB. Providing refinance towards at 5% or 4%, depending on the Reserve Bank of India, what they are giving rate to them. In this segment, the pool is slightly depleting. If this pool can be enhanced, the Affordable Housing Finance Company will get rate funds at a lower rate.
Better refinancing.
And they will be able to provide at a lower rate to the customer. And in this segment, I tell you, RBI has given a sufficient margin to Affordable Housing Finance Company. We can charge 10-year GSEC plus 3.5%. If I'm getting fund at 5%, I can charge 10.5% to the ultimate customer.
Okay, I take your point, sir. That's a fund of this, ideas and suggestions that have come from both you and Mr. Mishra. Out of time, but we can tweak the existing schemes to ensure that they work better. But the more important point is, it is a 11.1 lakh crore capex budget that the government has. Of that, barely 40,000 crore is going for housing. If we want housing to have such a big multiplier effect, we have to scale it up manifold. If that has to be the plan, then we require a paradigm shift in the government's thinking. We don't know if that will come in the current budget. But thank you very much for this excellent set of suggestions. We wrap up on Bazaar. Chart process coming up.
This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return.
India Mart shares plunged close to 7.5% on the back of weak third quarter earnings marked by a decline in quarterly paying subscribers. Nomura too downgrades its stock to reduce, slashing the target price to 1990 from over 3,100 rupees.
ICICI Prudential plunges in early trade after insurer misses its VNB estimates despite strong operational growth. Morgan Stanley View trims VNB forecast for FY25 and FY27, while Macquarie sees downside risk to their FY25 VNB estimates.
Jana Small Finance Bank rallies on the back of steady numbers coming in, up 17% for the stock as the company reports strong loan growth in the third quarter. The management says worst is behind for the bank.
Cyient DLM declines over 11% after a mixed showing in the third quarter, while revenue growth came in reasonably strong on a consolidated basis. Margins and profitability were impacted by higher employee costs as well as a couple of one-off costs.
Oberoi Realty trades in the red after brokerage firm Nomura cuts target price on the stock to 2,300. Says the management believes the tower launch at Elysian could be delayed to FY26.
Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam, and as you can see, there's no worries on the headline index. The Nifty is doing quite well. The Nifty Bank well mildly in the green. The problem is in the broader markets. But Mangalam, as we've been saying as well, that in the near term, it could be a bit of a rocky ride. Though in the longer term, some of these opportunities, when you get some kind of skittishness in the market, they have proved to be good investing opportunities as well. So if you're in for the long term, well, in fact, it's presenting you an opportunity. In the near term, though, things are a little bit skittish, particularly with the broader markets.
I guess everyone will look at, when the FIIs return to the market when it comes to flows, etc. And at what point do earnings return as well is something that we'll most definitely keep an eye out on. Currently, the only thing more relentless than the way, bears are attacking is the way Novak Djokovic was playing versus Alcaraz yesterday.
Wow.
So we'll keep an eye out on that. The mid-cap index continues to be under pressure. But among all of that, one of the stocks which is on our radar is UCO Bank. They reported a strong performance in the third quarter, marked by a near 27% jump in net profit, led by 17% plus loan growth as well. Ashwini Kumar, who's the MD and CEO of UCO Bank, joins in to discuss the latest earning release and the outlook ahead. Thanks a lot, Mr. Kumar, for joining in. Remember speaking to you just a couple of weeks ago when you did speak about, the timeline for the QIP, and you did say that in the third quarter, when the numbers come by, you will be surprised because they are largely in the guided band itself of close to 12 to 14% loan growth, NIMs between 3.8 to 3.9% as well. But among all of those data points, what you've actually done is you've beat your loan growth estimate. Close to around 17% is what the loans have grown at. Even the NIMs, which have been above the guided band of 2.9 to 3% as well. So the question is on loan growth and NIMs, what is your target for this year? And if you can hazard a target, an aspiration for the next year as well.
Thank you for having me on the show. As you can see that our guidance for the loan growth was around 12 to 14%. We have already clocked in last 3 quarters above 14%. And in the 4th quarter also, we expect the same trend to continue. But within the overall guidance, we may exceed loan growth guidance in the 4th quarter as well for the year whole as well. On NIM, we have given a guidance of 2.9 to 3, and then we revised to 3 to 3.10, and we have surpassed that guidance also, 3.17. This is done by containing the cost of funds and also improving yield on advances. You can see that our yield on advances and cost of funds is much contained over a period of time. Next year, we expect the loan growth to be around again 12 to 14%. That will be our internal target, and we'll try to surpass our targets or the guidance which we give. And NIM, because of the upcoming rate cut cycle anytime next year, next quarter or thereafter, we expect some impact on the NIMs. But our intent will continue to be maintaining the NIM in 3 to 3.10 in the next year also.
Sorry, can you repeat the NIM number once again? To 3 to 3.10 is what you're looking at, irrespective of what the rate cycle says, right?
Yeah, currently our NIM is 3.17. So there is a possibility of a rate cut also.
Right.
So our intention will be to maintain our NIM in the range of 3 to 3.10.
All right. Hi, sir. Good morning and good to see you. And yet again, give us some color on asset quality, which seems to have improved. Slippages are down. Gross NPAs have cooled off. Net NPAs as well have cooled off. So on these 3 numbers, what is the guidance going ahead?
See, we have been improving our gross NPA and net NPA on a quarter-on-quarter basis. Our guidance was less than 3. We have already achieved 2.91. And net NPA guidance was 0.65. We have already achieved 0.63. And our target will be to further reduce our gross NPA in this quarter and next year also. We intend to reach to 2.5 our gross NPA in the next year and less than 0.5 net NPA in the next year.
All right, so less than 0.5 net NPA in the next year with 2 to 2.5% gross NPA, 3 to 3.1% NIMs, and 12 to 14% loan growth. We've got all those details from you. Also on the CD ratio, your target was 75%. You've come closer to 72%. So what's your deposit mobilization strategy from here on?
If you look at our deposit growth in the last 2 quarters, last quarter our deposit growth was more than around 10.5, and this quarter in December quarter is 9.36. So the momentum has picked up in the deposit front from the last quarter, September and December. The momentum will continue. We have made our resources team at zonal level. They are doing the Customer Connect program has been launched. Our people, our staff is reaching out to the customers for garnering fresh deposits and also for the quality customer acquisition. We have launched Tap Banking. We are reaching out to the customer for opening salary accounts. We have tied up with some of the institutes also for opening of salary accounts. So the focus on fixed deposit or the resources will continue in the next year, as we have already now reached almost 75% of CD ratio, which we were targeting it at the start of the year.
So what is your current CASA and what do you intend to take it to with this mobilization strategy?
See, current CASA guidance was 37 to 38%, and at the start of the year also we were at the same, we have not dipped in the CASA, and our intention will be that at least to maintain this CASA ratio, because currently, as you know, the CASA is getting, people are moving from saver to investor, and a lot of money is moving to the mutual funds. As a result, CASA is getting converted to the bulk deposits. So our target will be that we should not dip below 37-38%. We should maintain our CASA ratio to 37 to 38%.
And final question before we let you go on QIP. When does that happen?
Anytime after these results. Now we'll be going for the road shows, and then we'll be launching QIP.
In this financial year or the next one?
Yes, yes, this quarter.
Okay. Thank you so much for joining in and giving us all those details from a loan growth and business growth standpoint, but more importantly, in this quarter as well, there would be a QIP which may come by as well. That's UCO Bank. With that, we'll get you some ideas for profit coming in from our colleagues at Money Control Pro, and today we have Nitin Agarwal joining in.
Hello, the company that I've chosen for today is CEAT Limited, which is an auto ancillary company and manufactures tires for all the OEMs across segments such as PV, commercial vehicle and two-wheeler segment. First, let me touch upon its latest quarterly number. The company recorded a YoY growth of around 11.6% in its top line, driven by the strong demand. However, what spooked the investor is the significant contraction in its EBITDA margin, primarily driven by its significant rise in the raw material basket. However, there are a couple of factors that make us upbeat about the company. First, the demand outlook across segments continues to be very, very robust. Talking about the commercial vehicle segment, which has been continuing its momentum primarily on the back of government's focus on construction, infrastructure, and mining activity. PV passenger vehicle will also continues to have a strong momentum. Further, the company has been foraying into the high-value, high-margin product of highway construction and the truck radial tires, which are expected to improve the realization and the EBITDA margin for the company. In addition to that, the company has been taking price hike to pass on the rise in the raw material prices, which are expected to trickle down to its operating margin in a quarter or 2 quarters. In terms of valuation, the company currently trades at around 19 times FY26 projected earnings, which we believe is very reasonable given the growth outlook and the stock correction that has happened in the stock price.
Let's slip into a short break now. On the other side, we have the management of Cyient DLM. Don't go anywhere. This exclusive conversation coming up for you. We have Anthony Montalbano who will join in.
Confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today.
Well, Cyient DLM, that's a stock that's taking a hard knock in today's trading session. The consolidated revenue looks good. However, the standalone revenue growth appears a little bit tepid, and profitability has been impacted by a couple of one-off costs. To understand what went on in the past quarter, what's the way ahead, we're joined by Mr. Anthony, the Chief Executive Officer of the company. Hi, Mr. Anthony. Good morning, and thanks a lot for joining in. Well, give us a few details. If I look at your growth, it looks good, but that's more because of the inorganic growth. I recall you have been maintaining that you'll be growing by 30 to 40%. So could you tell us what is the reasoning for this weakish standalone revenue growth, point number one? And margins were impacted in the past quarter because of a couple of one-offs. What do the margins look like from quarter 4 onwards, because those one-offs will not be there?
Well, nice to be here. So regarding some of the organic business, that business is a good portion of that does come from sectors, including aero and defense, where some of those, programs, especially newer programs, can shift in timing and also on award of those deals as well. So as we've indicated in the past, this can be a bit lumpy in those sectors. And but the outlook in those sectors has actually been quite strong for A&D. That's where we have seen a good amount of our growth from our current client base. But there also has been in some of the other sectors, such as industrial and a little bit in medical, where we've had some softness there. And we have new programs coming up to try and mitigate that here in the coming quarters. Also, just regarding the profitability of it, obviously that's tied a big part of it due to client mix, program mix. We are currently shipping a very large defense program that is a little bit lower. It is lower margin than the rest of our portfolio. We'll complete that program next quarter, and then our profitability and mix, our profitability due to the client mix should improve after we complete that program.
So let's get this simplified. There were a couple of shifts, in some of the sectors that you work with, and there is an order, a large order, defense-related order that has impacted the margins that will end in the next quarter itself. So
that's correct.
This year, by the end of this year, where do you see your annual revenue growth? And for the next year, once the lumpiness is taken out, etc., what is the growth that you're targeting on your top line, and what is a normalized margin for you?
Yeah, so starting with the top line, we've tried to provide just some rough guidance, not specifically years, but just more of a CAGR over multiple years. We like to see it about a 30% growth. I think the year before we had over 43%. This year will come in less. Next year is still forming. So still over the midterm, that 30% year-on-year growth is where we like to be, which is in line with the sector as well. But again, that will vary quarter to quarter and even during parts of the year. Regarding the bottom line, we look to operate the business at about a 10% EBITDA, and that is a solid, really a solid baseline for the business that will, that can vary again quarter to quarter. But even as we go forward and as we have a higher concentration of business that is higher margin, we actually expect to see upside from that, and especially as we deliver the programs they have designed.
Okay, in the past you have been speaking about double-digit EBITDA margins by FY26. Is that on?
Yes, that is very much where we should be delivering. I think we'll definitely be there by FY26, if not even completing this fiscal year at that level.
Oh, all right. So maybe towards the end of this fiscal year as well, you'll get closer to around the double-digit mark. And in FY26, you're saying for the year, it'll definitely be in double-digit margins, right?
That's how we are trajectory in business at this time, yes.
A quick word on the order book. You had told us that the second half of the year is going to look very, very strong. The order book, well, it's holding at around that 2,150 crores odd. On a year-on-year basis, it's still a little bit lower. Could you tell us, you have won some orders, I think, post quarter 3 as well. So where do you expect to end the year with in terms of order book?
Yeah, so order book that is again dependent on a few key strategic deals that, as we close those deals and as those orders come in, you will see the, order book have the impact in that regard. And so, and again, during this year, we have been delivering for most of the quarters, record revenue, and that's had some impact, as far as consuming the backlog that we have. But the order book will come in here as we secure some of these larger programs that we have targeted. We hope to be able to announce those in the coming quarters, and that will provide some positive momentum in that regard.
Just a couple of questions before we let you go on the order book itself. First, you said that you are looking to get in some order wins, etc. If you could give us a aspirational target of what are the kind of inflows that you're looking at in the fourth quarter and the next financial year. And the second part is on Altech. If you could give us a sense of how much of the business has scaled, what's the aspiration here, and what could the synergy benefits be?
Yeah, absolutely. I'll start with the Altech piece, as that has really positioned us quite well. Again, this is the first quarter that we've had them as part of the operations. There's already a good amount of synergy happening from a client perspective. Recent political momentum has also had that U.S. operation ability be very interesting to our clients, as that opens up many opportunities. So Altech has actually had similar bottom line and recently even top line performance to what we've delivered on. So we see it as quite complementary to the overall business, and we also see it as an area where our current clients will find a very similar DNA and type of operation in Western markets than what they're experiencing with us today in India.
Does Altech hit $50 million of revenues? When do you think?
So we don't break down the specific numbers for that, but the business has currently been at a run rate just a bit shy of that. But again, we do see a robust outlook for that business. Absolutely.
Ask you about that because it's done around 35-40 million in the past. So, the street would like to see that scaling up, as you've been saying, tremendous potential, but it needs to show in the numbers. Thanks a lot, Mr. Anthony, for joining in and filling us in with those details. You're sounding reasonably optimistic. For the time being, the street is disappointed with the past quarter's numbers, but 30% revenue growth with double-digit margins is what they'll be looking forward to in FY26. Well, stock is down close to around 13% or thereabouts. Let's slip into a short break, come back, continue our focus on markets and all the stock-specific action.
Change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. This is the first India pavilion, so to speak, India Bharat, and as I pointed out, this is the first time that we have India putting its states together, technically under two roofs. And what we've seen happen over the last several years is that states have come out here in Davos. So it's of course been the central government, but also increasingly the number of states being represented here in Davos has gone up quite significantly.
Welcome back. After yesterday's sharp fall, at least the Nifty is up close to around 70 points. The problem is in the broader markets. You have close to around 3 stocks that are declining for every 1 stock that's advancing. And the Nifty Bank, that's as flat as can be. That said, we'll have to wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
Naidu, he was the original Davos man from a state's point of view, but now we've seen Maharashtra, Telangana, in fact even UP now here in Davos as well. Of course, the Chief Minister is not going to be here, but we do have ministers from the UP government who will be here. So this is the first India house, so to speak, and this is going to be home to UP, Telangana and Kerala. So Telangana, Kerala and UP are going to be part of the India House together, and it's also going to be interesting because this is the federal story. This is the beauty of India's federal story, and it's also its strength. So showcasing its diversity and its unity here in Davos will be something to watch out for. With the next India Pavilion, India, which is going to be home to Andhra Pradesh. Remember, Chandrababu Naidu is going to be here. It is home to Tamil Nadu and Maharashtra. So 3 states, so total 6 states here in Davos, 3 in the house that we just saw, which was Telangana, UP and Kerala. And here we have Maharashtra, Tamil Nadu and Promenade and Andhra Pradesh. Devendra Fadnavis, the Chief Minister of Maharashtra, will also be here in Davos, as will Revant Reddy, the Chief Minister of Telangana. So 3 Chief Ministers will be here in Davos. Let me show you what we are saying to the world here. And of course, all of this has been set up by Invest India. So let's take a look at the themes that India is going to be showcasing. We're going to go right inside. The themes that India is showcasing: the Indian semiconductor market is set to triple by 2032. So semiconductors will be part of the story that India is pitching, from silicon to success. And again, we've got Semicon, the mission that the government has announced. We've already started to see investments coming in there. So semiconductors, electric mobility, EVs to account for over 40% of India's automotive market. EVs will be the other big theme that will be discussed here as part of the India story. So this is India, the roadmap to a $32 trillion GDP by 2047. India's economic overview, so some data and numbers and statistics here being highlighted here at the India Pavilion. Hi, good morning. How are you? Good morning. How are you? Are you enjoying your time in Davos?
Yes, we are going to work.
And what are you looking forward to the most?
Meet everyone and for the betterment of the economy.
For the betterment of the economy.
Of the world.
So what?
You come from India?
Yes, from India. Where are you from?
Punjab, India.
Punjab, India. आप कहाँ से? पंजाब में कहाँ से?
पंजाब से मैं वैसे तो हरियाणा से हूँ, अम्बाला से।
अच्छा, तो आप यहाँ पे कैसे आए?
वैसे घूमते फिरते आ गए।
घूमते फिरते आ गए? बड़ी लंबी घूमते फिरते आ गए आप। तो कब आए आप यहाँ पे?
में रहता हूँ।
आप ज्यूरिख में रहते हैं। अच्छा,
20 years living here.
और तो आप ये डावोस में वर्ल्ड इकोनॉमिक फोरम के लिए पहली बार आ रहे हैं कि
नहीं, हम तीसरी बार आ रहे हैं।
तीसरी बार आ रहे हैं।
हमारे एक रेस्टोरेंट है खान्स तारा के नाम से,
जी,
तारा रेस्टोरेंट इंडियन।
हाँ,
तो उसकी कैटरिंग करते हैं हम।
अच्छा, तो क्या खिला रहे हैं आज आप डावोस में? क्या है मेन्यू पे, क्या है?
आप आए।
Well, that's lovely.
ये हमारे शेफ हैं जी दोनों।
नमस्ते जी, बहुत आपको शुभकामनाएं। आप कुकिंग करने वाले हैं और काफी लोगों को खाना खिलाने वाले हैं, तो
हम लोग शुरू हो गए।
Good morning. Welcome to Trading Hour. It's a Wednesday morning. The time is 11 o'clock for the markets after Tuesday's brutal sell-off. It's a tepid recovery. So we're in the green for the benchmark indices, but not by a whole lot, up about 0.3%. The Nifty is trading below 23,100. The Sensex is up close to about 300 points. The problem is in the broader market. The mid-cap index, the small-cap index continuing with the selling pressure, 1.5% gone on both those indices. The advanced decline ratio currently has two stocks advancing for 7 in the red. And the results casualties, they just don't seem to end. So today you've got Cyan DLM down 10%. You've got an India Mart down close to about 8.5%. India Cements, Tanla Platforms, and even a stock like Newgen Software. We'll get chatting with the management. Post the numbers, the stock has fallen 30%.
Absolutely right. Good morning, Rima. You put it very perfectly. Earnings casualties is what you can call them. Some of the names that you just mentioned, names like India Mart, Cyan DLM, Newgen Software yesterday down almost 18%. But overall, when you're talking about the markets, like you mentioned, it's the broader end of the market that are feeling the pain a lot more in today's trading session. The Nifty Bank, was flirting with the green territory, but now actually once again seeing quite a bit of selling pressure. Now, one stock that stands out, especially as far as the BFSI space is concerned, in terms of a positive reaction, we've been talking about quite a few negative reactions. It's actually Jana Small Finance Bank. Now, that particular stock, after a good Q3, has spiked up over 15%. So Jana Small Finance Bank definitely doing quite well in the session today. The other stock, a bit surprising, is actually PNB Housing Finance, given the fact that it was a good set of numbers, the commentary too quite decent. But the stock today has come in for quite a bit of profit booking. So BFSI continues to be a bit of a pain point. Banking cooling off and now flirting near the flat line.
And IT is having a good day. So that's actually holding up the index. The Nifty IT index is up more than 1%. The top 4 Nifty gainers are all IT heavyweights. You've got Wipro right on top, TCS, Infosys, Tech Mahindra all trading with gains of close to about 2%. But no such luck for Newgen Software. The stock has been declining for the last 5 consecutive sessions, was down 18% yesterday, and even today it's down close to about 10-11% now, lower on Newgen Software. The company's top line growth came in at about 18% on a year-on-year basis. EBITDA, though, was very strong, surging to 28.4%. Virender Jeet, CEO of Newgen Software Technologies, is now joining us on the show. Thank you very much for joining in. While it is an 18% growth that you've seen on a year-on-year basis in Q3, what the street is concerned with is that this is a company which was always growing at 20-25%. Even when we spoke to you 3 months back, you told us the pipeline is strong. There is no reason why the historical growth rates of 20-25% won't continue. So then in that context, the growth appears to be disappointing and the stock has sold off consequently. So what led to the weaker than expected numbers?
Good morning and thank you for having me on the channel. I think you're absolutely right. I think we have been growing at a steady pace of about 20-22% for last 9-10 quarters constantly. And I think, as I keep on saying, there's no reason why that should not.
Oops, I think there is a bit of a technical issue over there, but that's Newgen Software. Pull up a 5-day chart of Newgen Software and you would see the stock has fallen close to about 32% and the bulk of the selling pressure in the last 2 days. A quick recap of the numbers because the numbers came about 2 days back. The company's top line growth is at 5.5% quarter on quarter. On a year-on-year basis, revenue growth is at 17.8%. But this is a company which over the last 10 quarters has seen a more than 20% growth. In fact, in some of the stronger quarters like Q4, the growth would be in excess of close to about 30%. And yesterday, we had a Jefferies downgrade on Newgen Software too, where they're saying that the numbers are not matching up with the kind of rally we've seen in the stock price. Okay, here's what we'll do. We're still having some issues connecting with Virender. We'll slip into a short break. We'll come back and try and connect with him and get you more in the market. Stay tuned.
तो
आपको काफी फॉलो करता था मैं। लास्ट ईयर का गीता गोपीनाथ का इंटरव्यू पढ़ा देखा।
Thank you, जी. Thank you so much. It's very nice to hear that you're watching CNBC TV18.
कभी इंटरेस्टिंग होता है आपका 2-3 काफी
नहीं बहुत अच्छा लगा आप लोगों से मिलके एंड वी विश यू ऑल द वेरी बेस्ट। बिल्कुल जी, इंडिया वालों को अब नमस्ते, सत श्री अकाल।
हमें कुछ सक्सेस हो जाए।
जरूर होगी आपको बहुत सक्सेस मिले और बहुत शुभकामनाएं।
मैं ऑलरेडी किया कि promenade is captured by the
Indians. Yes. हम पहुंच ही गए। आप बिल्कुल भारत के सामने और आप लोग को भी डावोस के लिए बहुत शुभकामनाएं एंड थैंक यू। बिल्कुल खाएंगे जी, बिल्कुल खाएंगे। थैंक यू इंडिया की तरफ से, थैंक यू सो मच। It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC TV18 Budget Headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective.
As promised, we've connected with Virender Jeet, CEO of Nugent Software, who was telling us why growth rates in Q3 have slowed compared to historical levels. Virender, all yours.
I think we got dropped, yeah. So, as I said that, one of the issues is typically we still are a smaller number. A single deal changes the numbers for a quarter. But if you look at for 9-month period, we are still maintaining a 23% growth rate and almost a 40% PAT growth rate. So, which is substantially and also is in line with the kind of numbers we have been stating. What has happened, if you look at, I think the deal wins this quarter have been very significant. In fact, this is one of the largest quarters of license growth for us. We almost grew by 70%. And that also reflects in the margin growth on that. There was an element of challenge on our execution side about larger deals which have been previously, especially in the public sector and government front, which has typically taken the downstream revenues have got slightly delayed. And if you look at our annuity revenues have not really kept pace with our growth of licenses. That's where challenge. We do think that it will take a couple of quarters to streamline that, and we should be able to still compensate that by higher deal rates and higher wins. So we are on track. I don't see a lot of challenge out here.
So you're saying it was execution challenges for some of the large PSU bank deals which hurt growth this time. But for the full year, you're on track to clock a more than 20% growth? Could you inch even higher? Because Q4 is typically stronger for you.
Yes, so Q4 is stronger and you will see the numbers are stronger, but also, when you look at the year-on-year growth rates, also the last year, the Q4 was very strong. I think, this Q3 was also based on almost a 30-40% growth over last 2 years on Q3. So these are larger quarters in the revenue, but on a year-on-year growth basis, they have the same challenge because they're sitting on a bigger quarters of last year.
So 20% plus for the full year?
We do hope to keep on continuing our growth momentum. And I think, if you look at history, we have been able to do that fairly well.
Okay, so when you're talking about implementation cycles, you've actually mentioned that implementation cycles for large-scale digital bank that you won in FY24, the execution is getting elongated. So what's actually happening over there? Q4, FY26, how do you see that particular trend panning out?
Yes, so what we need to understand, our business typically stems from the sale of license and followed by subsequently implementation. And then what's more important for us is the downstream revenue, which is the annuity, which is we call the annual technical services and the support revenues. So unless the implementations are over, our downstream revenues, which are the annuity revenues, don't kick in. So some of these projects, since they get elongated, the subsequent revenue cycles don't kick in. That's the reason for the slowdown in annuity growth. So we are now, towards the later parts of these projects, and we think in this quarter and next quarter, so a lot of them should come to the end, and their annuity part of things should start, and that should, resolve the issue of annuity growth. And once the annuity growth gets resolved, I don't think our top line growth on the license win rate is significant. I think we should continue that momentum. And I think this is a midterm challenge of a couple of quarters. The deals which are winning now, at least in the current phase of last 2 quarters, are typically where their execution cycles are smaller, like 6 to 9 months to maybe 12 months. So we should be able to realize downstream revenues in these deals much quicker.
You're saying this challenge of, implementation, elongated implementation cycle, which is resulting in moderation in annuity growth, will last for a couple of quarters? Did I get that right?
Yeah. Yes, we do think that the impact of the previous orders not getting into the annuity thing will last for a couple of quarters. And what we are trying to do is we are trying to compensate it by new deals and getting new deals rolled out much faster.
Okay, can you give us a sense of how the deal pipeline is looking? You said that you have a couple of new deals where the implementation timeline is in the range of 6 to 9 months. So how is that particular pipeline looking? So FY26, would you be mainly focusing on smaller scale deals?
No, we do. So basically, I think when we book deals, some of the deals are generally, most of our deals are in the span of to be executed within 1 year. But some of the government deals are always slightly longer and they take much more than that. That's been the history of that. So what we are right now focusing on the velocity of wins. And if you look at, we have almost 15 wins this quarter. We do want to keep the wins ratios at about 10 every quarter. And once we are getting those executed, that should follow in the downstream revenue. So we do expect that our markets, both in India and EMEA, maintain the growth, while in the APAC, which is a smaller base, is already growing at almost 40% for this year. That should continue growing. But we're very hopeful that our US investments and our efforts should start showing some results. I think in this quarter, we're hoping to get some good insurance deals in US, and that should keep on adding to the momentum of the company.
So getting back to that point about, how this impact will last for a couple of quarters. So in the current quarter, your annuity revenue was just about 9% on a year-on-year basis. So are you saying that till FY26, annuity revenues could be in this high single-digit kind of range? I mean, can you give us some sense, because the street is clearly a bit concerned?
So I think what's going to happen, that generally, if you look at our annuity revenues have been around the growth rate of the company. They have not fallen back. This is the first time in last few quarters it's been seeing, but I think this quarter is more obvious. I think from here we are looking at recovering it. I think it should keep on improving few percent every quarter till it reaches for next 3-4 quarters back to that growth rate. That's how we are going about it.
Okay, and margins, 28%, is it sustainable at these levels?
See, margins are a function. See, typically we are a company which always plans for high growth. So our costs are front loaded. So our costs always are loaded at around somewhere between 17 to 20% in the beginning of the year, depending on how the planning is. Any growth rate which is above 17-18% keep on expanding margins for the company. And then we keep on reinvesting it for growth in newer geos and new products and new verticals. We do spend significant amount of money on our R&D, which is almost 10% of the revenue, and around 22% on sales and marketing. And that's where we keep on. So the margin expansion is a function of our business because it's a high gross margin business. We have almost 60% of our business is typically generating high gross margins. So we are just in terms of as soon as we grow beyond 17-18%, we keep on investing more in growth. But the margin expansion is going to always be a function of the business. And we want to maintain a steady net margin of around 20% and roughly 23-24% of the EBITDA margins.
Thank you so much, Virender, for joining us and explaining to us what exactly transpired in Q3. Wish you all the best for Q4 and FY26. Well, moving on, we'll now shift focus to the commodity space. Manisha joins in, and today we are focusing on precious metals.
Yes, Vivek, we're doing that because the precious metals have continued to gain, even as there is some jitteriness in energy as a space and base metals, as well as the markets await the impact that you could be looking at from all those tariffs that the US president seems to be talking about that could be levied on China and Canada and Mexico. So the street is reading it as in sense that this could be inflationary. At best, it spreads uncertainty into the international markets as well. And there is some safe haven buying that we have seen happen for gold and silver. Add to that the fact that the US dollar index is also off its 2-year highs. That has supported some buying as well, as you can see on your screens. And $2,750 an ounce, by the way, is an 11-week high that you are seeing in case of gold. And silver prices also have seen strong gains. Silver, in any case, is looking at a 5th straight year of deficit in 2025. The industrial demand is expected to be on the stronger side. So those are some factors which, in addition to a safe haven buying, are supporting silver prices there. Well, also, when you look at Mexico, it is a top supplier of silver, especially to US, and with those tariffs coming in, the expectation is that you could be looking at higher prices. Markets also are looking at reversal in sense of trade deficits with the European Union, is what US has said. So when you take into account all of these countries, the availability of metals and the added tariffs could lead the prices on the higher side. For this year, when you look at the prices itself, well, we have seen gold prices gain up by 5%. This is after 28% of gains in the previous year. And silver prices are up by 7% already in this year. This is after gaining 25% in the previous year as well. So the gains continue in case of precious metals.
Thank you so much, Manisha, for joining us and giving us a sense of that particular market. Well, it's now time for a short break. The management of South Indian Bank joins us next to discuss their Q3 numbers and the way forward.
Insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way. I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they...
Welcome back to Trading Hour. Well, in the last half hour of the session, the market breadth has considerably weakened. The Nifty small cap index is now down over 2%. And one particular stock that continues to remain in focus, one that's been in focus over the last 2 weeks, has been Kalyan Jewellers. The stock now near the day's lowest point is down 6%. And in fact, from just the recent peak in the last 2 weeks, this particular stock has lost more than 40% in trade. So significant selling pressure is what Kalyan Jewellers is witnessing. The other set of stocks that are seeing quite a bit of selling pressure today is the Nifty Realty Index. The Realty Index, one of the top laggards in trade, and along with that, quite a few of the constituents of the index are Prestige Estates, Lodha, Oberoi Realty. All of these stocks continue to see selling pressure today, down in the range of 4 to 6%. But moving on, we are now shifting focus to South Indian Bank's quarterly earnings. The company saw weak deposit growth in Q3, while net interest margin contracted, the asset quality actually improved. To discuss more on this, PR Sheshadri, MD and CEO of South Indian Bank, joins us now. Mr. Sheshadri, first of all, thank you so much for joining us. Q3, how exactly did it pan out? Deposit growth slightly muted, but how has Q4 started and what is the outlook as far as FY26 is concerned?
At the outset, thank you very much for having me on this show. We are very, very pleased with our Q3 actually. Across almost every parameter, we've shown positive traction. We hit our highest ever historical profit for a quarter this quarter. Provision coverages increased. Delinquency numbers reduced. So for a bank, I think across almost every parameter, the numbers were positive. The deposits, what you were talking about, we consciously took a call to actually reduce our bulk deposits. So if you were to excise or exclude the impact of the reduction in bulk deposits, you'll find that our deposits grew almost 8%. So, our aim is to ensure that our cost of deposits continue to remain the best in the category. If you were to look at our investor presentation, you'll find that we are significantly lower priced when it comes to cost of deposits than our competitors. And that is a competitive advantage that we want to keep. And therefore, we have decided to actually focus on retail deposits as opposed to bulk deposits. And that's the reason why you see muted growth in deposits.
And to garner retail deposits, are you going to get aggressive? What is the guidance on deposit growth and advances growth as you will end this year in 3 months?
With respect to retail deposits, what we're working on is redoubling on our NRI franchise. Approximately 30% of our deposits come from non-resident Indians. We continue to focus on that, and we are trying to build more linkages with our customers overseas. That's a great area of focus. The other area of focus is to ensure that our branches and our RMs in particular ensure that they are in close contact with our customers. We are not thinking of growing our branch footprint very aggressively at this point in time, merely ensuring that we stay in contact and ensure that we have the best products. We're also trying to see what we can do for corporates. We do have a large corporate book. Our corporate deposit franchise is not as large as we would like. That's an area of another focus. We think that we can grow deposits at between 8 and 10% annually, and we can grow our assets at between, in the early teens.
Okay, so you're looking at an early teen growth as far as assets is concerned. So Q4 FY24, could you help us with the following numbers? Advances, what is it that you're penciling in? Deposits, what is it that you will end FY25 at? And what is it that you're targeting for FY26? And where will you maintain NIMs at?
With respect to growth during the fourth quarter, we are trying to cycle out of some of our lower yielding assets and into slightly higher yielding assets. Consequently, the fourth quarter may see a slight drop in growth on the asset front, but this is to ensure that we can, manage our NIMs a little bit more actively. There is pressure on the NIMs on account of the fact that deposit costs are rising, in spite of the fact that deposit costs for us are lower than our peers. But still, there is this pressure and consequently the need to manage this balance sheet actively. So we do see NIMs dropping a touch in the fourth quarter, and they will then sequentially improve as we go into the following quarters in the next year.
Would you like to put a number to it? You said that as you get out of some of these low-yielding assets, growth will get impacted in Q4 and margins. So what's the growth that we're looking at on advances, and what would the NIM level be?
So the growth in the fourth quarter would probably be in the 10-11% range. And thereafter, in the following year, we'll go back into early teens. The reason is that in order to ensure that deposit costs are kept reasonable, we need to grow at a rate where we don't have to offer the highest rates to attract deposits. And consequently, that puts a limit on low-cost growth of deposits. And that happens to be approximately, historically, we've grown about 10% a year when it comes to deposits at the lower cost that we have. And that's what we intend to keep on in the next year. And as we cycle out of the lower yielding assets and get more higher yielding assets, that's when we'll start competing more aggressively for the deposits. We do think that we have a very solid franchise on the deposit front. And we think that if we were to start offering higher prices, we should be in a position to attract greater deposits, which we will need once we start growing faster.
Okay. Mr. Seshadri, where do you intend to maintain your credit deposit ratio or your loan deposit ratio? And also give us a sense of how exactly asset quality is actually panning out. On ground, how is collection efficiency? Do you expect to see further slippages, or are you hopeful that there could be a few recoveries that could be made?
Our credit deposit ratio right now is at about 82.5. We used to be in the late 70s for a long time. We're now at 82.5. We expect to stay in this neighborhood in the near term, which means that we will need deposits to grow our assets. From the perspective of how assets are behaving, across the board, we are seeing improvement. And the reason that we are seeing improvement is that our exposure to unsecured credit as well as microfinance is very limited. And consequently, we are not impacted by these two areas where there seems to be stress in the marketplace. And we think that the improvement that we are seeing on our credit ratios will continue as we go forward.
We'll leave the conversation here for now. Thank you very much for joining in. That's the outlook from South Indian Bank. In Q4, growth could be slightly lower, but on the whole, over the medium term, they are gunning for 8 to 10% deposit growth and advances growth in early teens, though Q4 could see a little bit of a drop, 10 to 11%. Mitesh is now with us for a quick technical check on the market. Mitesh, the sell-off in the broader markets is brutal. What does that tell you?
Yeah. So I think, the fact that the mid-cap is underperforming is nothing new. I think broadly, barring a few days of bounce back, we've seen the mid-cap and the breadth kind of underperform. But what is more important is the bank Nifty. I think, the bank Nifty is still showing signs of weakness, and 48,400, 48,375 is in marked area pivot support. But in case we start breaking below that, I would expect levels of 47,500 as well, and maybe lower levels as well. So I'm watching the bank Nifty closely. I think that could be a pressure point in case we don't rebound in the next few hours. Having said that, on the stock side, I have a sell on National Aluminum with a stop at 203. Look for targets of around 190, and Muthoot Finance is on the buying side. Keep a stop below 2150. Look for targets of 2235.
Thank you so much, Mitesh, for joining us, giving us a sense of what is it that you anticipate as far as indices are concerned, as well as your stock-specific calls. Time now for a short break. We'll get him on the markets on the other side.
Separating what rate and doing less damage more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
Testing.
Welcome back. It's a big earnings day today. BPCL, HUL, HDFC Bank all set to report their numbers, and our team is waiting by to get us up to speed with the expectations. Sudarshan, you go first with BPCL.
So it's the first oil marketing company that will be coming out with its Q3 earnings, and that will come during market hours. It's likely between 1:30 to 2 p.m. And we are expecting a strong set of earnings from BPCL. Talking about some of the positive factors, first, crude was range bound from October to December. Second, company is likely to have seen strong retail sales for both petrol and diesel, and in resultant, petrol and diesel margin are likely to rise somewhere around 24 to 27% if you look at sequentially. But there are some of the negative factors as well. First, company may report higher LPG under recoveries sequentially. Second, it's likely to see, it may see a decline in the throughput due to shutdown for 2 refineries, Mumbai and Kochi, that company had announced in October and November. Now coming to the numbers, profit may increase more than 100% to rupees 4,980 crore. Revenue may increase 9%. And talking about the operating numbers, EBITDA is likely to see a rise of more than 80% to rupees 8,300 crore. And in resultant, margin may increase by 300 bips to 7.4% against 4.4% sequentially. On GRM front, that may see an improvement as well. It's likely to be at $7.40 against $4.40 per barrel that company reported in Q2. Crude throughput may decline 12% sequentially and may come in at 9 MMT, that is 9 million tons. In the commentary, some of the factors that we'll be watching out for. First, commentary related to Russian crude throughput. Second, what does company say related to LPG under recoveries and if it has got any assurance from government. And last would be, what does company say on Bina refinery, because recently it has announced the financial closure with consortium of banks led by SBI. But on the earnings front, we may see a strong set of earnings from BPCL.
Thank you so much, Sudarshan, for taking us through what exactly to expect from BPCL. But HDFC Bank will also be declaring its third quarter results today. Abhishek is here with what to expect from HDFC Bank.
Well, to begin with, Vivek, they have given a preview of their business update, which showed that loan growth was strong in the retail segment, commercial and rural segment, while corporate and other wholesale book had declined on a YOY basis by about 10%. So net interest margin is expected to remain stable on account of the high-yielding assets actually growing for them. So it can be flat as per Kotak Securities and Citi estimate at and around 3.5%. Slippages can decline sequentially. Kotak Securities estimate slippage ratio of 0.4% versus 1.3% sequentially. But also watch out for the fact that this is a seasonal quarter for the agri NPAs for many lenders like HDFC Bank and ICICI Bank. So we may see some agri NPAs come in due to seasonality. Overall, credit cost is expected to improve sequentially. Kotak Securities estimate loan loss provision to decline 40% YOY and about 6.3% quarter on quarter. So asset quality is largely expected to remain stable or see marginal improvement over there. Management commentary with respect to business outlook, especially on the deposit front, will be seen closely. Our polls suggest NII growth of 7.7% YOY and about 1.8% sequentially. We are working with a PAT growth of just 1.1% YOY and a decline of 1.5% sequentially. Back to you.
Thank you so much, Abhishek, for taking us through what exactly to expect from HDFC Bank. But Hindustan Unilever is also all set to report its Q3 earnings today. Mangalam joins in with the key expectations.
Well, not much is expected to change from the second quarter and the third quarter for the FMCG sector, and Hindustan Unilever won't be much different from that as well. The stock is down about 22% from its highs, currently trading at around 47 times. The key things to be tracking, similar demand conditions as the second quarter, 1 to 2% domestic volume growth, 2 to 3% underlying price growth. Higher raw material and delayed winter may impact product mix and some of the margins as well. Just keep an eye out on the revenues. We're expecting 2.7% growth on the top line. The number you're looking at is 15,600 crores. The EBITDA grows 1.7% and the margins actually stay stable around the 23.1% mark. We might see a bit of a dip on account of higher raw material prices on that one. The net profit expected to be about 2.5% higher than the same time last quarter. The key to track will be management commentary on demand, but more importantly, if there is any move that the company does on M&A and any timeline on the demerger and relisting of their ice cream business.
Thank you very much for that. Get into a short break. On the other side, we bring you excerpts from our conversation with Honeywell's Chairman and CEO, Vimal Kapoor, from the World Economic Forum in Davos.
going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first.
Testing.
Welcome back to Trading Hour. Well, the selling pressure as far as the small cap index on the broader end of the markets has actually intensified. The small cap index now down almost 2.3%. The mid cap index down 1.9%. Some time ago, you saw a few flashes on your screen. This is regarding a company called Akums Drugs. The company has informed the exchanges that there was an income tax surge on the premises of the company as well as its subsidiaries. The stock now down almost 5%. Well, the other set of stocks today that are seeing quite a bit of selling pressure is actually stocks from the life insurance pack. ICICI Prudential came out with its numbers last evening, and there was a slight miss as far as the VNB margin was concerned. Post that, the stock has seen a sell-off of close to 8%, and there has been a rub-off effect as far as other insurance companies are concerned. Max Financial, the other life insurance company, down almost 2.5%. And the other stock that's seen quite a bit of selling pressure is actually Policy Bazaar, or PB Fintech. That stock today down over 5%. But another stock that Rima has been tracking, again, witnessing intense selling pressure, is India Mart. The numbers look quite okay. What actually went amiss in Q3?
Well, they have something called paid quarterly subscribers. The number of customers who come on their website, on their platform and are willing to pay, not just for free inquiries, etc. Now, typically, this number on a quarter-on-quarter basis, the paid subscribers would go up by 5,000 to 6,000. This was a few years back. Then we had that slowdown in the last 2 years, and that number came down to 2,000 of a quarterly addition. But in the last many quarters, we haven't seen a decline. So this quarter, the paid quarterly subscribers actually declined sequentially by 3,700, and that came in as a negative surprise. Nomura was also expecting a growth of close to about 2,000, improvement, but that's not come about, which is why the stock is tanked. In fact, it's a fresh 52-week low on the stock, and in the last 12 months, the stock is down in excess of close to about 23, I think close to about 30-odd%. Now let's get to what Nomura is saying, because there is a downgrade. Now, Nomura has downgraded India Mart to a reduce, and they've slashed the target price too. The target price now stands at 1,900 versus 3,150. They've cut the valuation multiple, and they are also valuing India Mart at a 50% discount to Info Edge. Motilal Oswal, on the other hand, is still bullish because of valuations. They're saying after the correction, valuations are fairly undemanding. The reason for this weakness in the subscribers, the paid subscribers, is one, the holiday season, and two, the company has said that they are focusing on some of the high-paying, high-quality kind of customers. So they're weeding out some of the low-value customers. So that explains the decline in subscribers. But of course, it's come in as a big negative surprise.
Thank you so much, Rima. So slightly muted internals, and that particular stock now down over 9%. Well, we'll now get you some voices all the way from Davos. Top global corporate captains laid out their India growth pipeline on CNBC-TV18. Vimal Kapoor, the global CEO of Honeywell, called India one of their fastest growing markets. Let's listen in.
What are you hearing from your clients? What are they telling you in terms of spends, in terms of investments? There was a pause on account of the elections. Now that is over and done with, and the fact that, global growth is expected at about 3.3%. What are you hearing from people at this point in time?
I mean, it depends on which country you go, right? If you US in particular, I would say the spend is much heavier on anything to do with AI and therefore data center and therefore utilities. I think that continues. I mean, we don't see any change in that. But if you pivot towards India and the manufacturing spend there just on electronics, on semiconductor manufacturing, we hear a lot more of that versus, traditional way. So I think the themes change where you go, but overall basis, I think I remain optimistic that Word is going to spend more money in 25 versus 24.
What's the view, the Honeywell view on India, and how do you see the next few years playing out for you? You've got a large presence there, large operations there.
We continue to do well. I would say, always look at India into three buckets. Yeah. The domestic business, our global capability center, and then sourcing from India. Like there are three different things. We've been there for like 40 years, so our maturity in each one of them is different. Our domestic business is doing extremely well. Can't be more pleased in terms of opportunities in India and how we are working in all the three segments we serve, aerospace, energy, and infrastructure. They're all relevant for India, so we do there naturally well. Our global operations are very mature. Overall, our headcount in India is more than 14,000 people, mostly engineers, so that gives you the scale we have. The new news I have is more around sourcing from India. Okay. We did not do that, a lot of it, because India had competition. But I think last 2 years, story of India on Made in India is actually holding. Okay. And companies like us believe now it's a place to seriously look at it from a sourcing perspective. Okay. Now, when I say sourcing, it's really looking at more complicated mechanical components which we use into our products. So aerospace, for example, is our largest segment. And we barely source anything from India, but we can do hundreds of millions of dollars. It means we have to do a supply-based development locally, and that's what we are doing right now. We're looking at a lot of companies and essentially growing an automotive supplier to an aerospace supplier. That's how these industries work. So I see that's the next way for companies like us. We do a lot of domestic business, we leverage a lot of global capability center, and now really leverage it for global sourcing.
Well, a very interesting conversation there with Honeywell. But time now for a short break. We'll get you on the markets on the other side.
Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting.
Welcome back. It's a 1,000-point sell-off now on the mid-cap index, and the advanced decline ratio now stands at 1:5. 5 stocks declining for 1 stock in the green currently. Some updates coming through on Bandhan Bank. But let's get you more voices all the way from Davos. Shireen's been chatting with top global corporate captains to lay out their plans for India. And one such is the Bank of America's CEO, Brian Moynihan. He says he remains optimistic about the India story. Listen in.
You think about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy, keeps moving north. All the programs of Prime Minister Modi and the governments over the years have been working. It's becoming hugely digital, 800 million phones and all the stuff we talk about. And you see the digital impacts with our clients and our customers.
What do you expect in terms of fund flows into markets like India on the back of what we're seeing happen in the U.S. with the dollar strength?
Well, I think the fund flows in India ought to be among the strongest around the world because it's sheer opportunity. And so, manufacturing as a major extra source, the services economy, which is strong. And by the way, it's building a huge internal economy.
The IPO market in specific had a stellar run in India. What's the expectation as far as public market performance is concerned in 2025?
IPO market, there are 100,000 startups, I think, in India. There's 1,000 of them that are getting towards big enough and interesting enough for the public markets. 100 of them, I think, are unicorns or something like that. Those statistics. Therefore, the markets will receive them. But I think the key is that with all the markets now, if you're, as we see across the world, if it's biotech or something that's really different, AI, that's different. But if you're a core business, you got to have a path to profitability because the markets won't support without seeing that profitability. So you either got to have pretty good cash flow and profit before you go public, or got to have a very, very understandable task, because you're competing against companies which make a lot of money and are making money. And at the end of the day, your valuation is ultimately going to reflect your ability to earn money and grow it in the future.
Well, with the news that there is significant selling pressure that persists, especially across the broader end of the markets, and as you can see on the top of your screen, the mid-cap index now down almost 1.8%. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
And it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports.
Declines far outstrip advances as mid-caps come under severe selling pressure, even as heavyweights notch some gains. Realty and industrials are the big losers, while IT and financials manage some green.
JSW Group Chief Sajjan Jindal tells CNBC-TV18 he expects some indication on steel safeguard duties from the government in the next 15 days. On the EV front, he expects the launch of a made-in-India car in the next 18 months.
Axis Bank CEO Amitabh Chaudhary tells CNBC-TV18 there is a risk of stress spreading to secured book from the unsecured book with regulatory tightening. Also doesn't see a rate cut spurring growth.
US President Donald Trump has indicated that he might impose a 10% tariff on imports from China from the 1st of February. The fear of tariff action prompts India to accept the return of nearly 18,000 illegal immigrants. Good afternoon, you're with us here on Halftime Report on CNBC TV18. I'm Hormas Fatakia. With me as always is Manglam Malu, and a similar script playing out. The indices are off the highs of the day, but the pain though is in the broader markets, and that is courtesy some extreme earnings reactions. That was the case yesterday as well, and that's following into today's session as well, Manglam.
Take that point entirely, Hormas. When the frontline indices underperform for a while and they see a bit of a selling pressure, you typically blame it to the flows. You say, okay, there is relentless FII selling, etc., all of that. But when it's broadening out like that, and the nature of the stocks which are declining have to do more with the kind of earnings reactions that we're seeing. I was just looking at some of the top F&O losers today. We had a bunch of them. Top F&O losers today would be something like an India Cements, which is down in double digits. We have a big cut coming in on India Mart, ICICI Pru, Persistent ahead of numbers, and real estate stocks. All of them are under pressure. So typically, it is a bunch of earnings reactions which is leading to this decline, because there are some good earnings that have come by. We'll talk about that, and there the stocks have seen an up move as well. So this is more micro than macro flows related picture, and that does not look very good. And as a result of which, we've seen the Nifty move back into the red as well from just the highs of the day. And typically the mid caps are a teller of what the big caps are likely to do. If the mid caps outperform, that means the lower end of the big caps are actually supported. But now if the mid caps are down, underperforming, that means the lower end of the broader caps or the bigger, indices is also not supported. Not supporting at all. A 1200 point cut now on the mid-cap index, almost 2.5% down on the small-cap index as well. You have to pull up Tanla Platforms. That is one stock that is also having an earnings reaction today. 6.5% lower on that stock as well. And it's down almost, it has almost halved from the peak that it had made, which was around 1200 or so in the near term. And Sterling and Wilson is the other one. And that stock too is facing some bit of pressure in today's trading session. And that stock is down more than 55% from the peak that it had made of 828. From there, the stock has now collapsed to 366 as of now. At the lowest point of the day is Sterling and Wilson. But we'll talk about a lot of these broader market losers all through the show, because there are plenty of them. But we'll start off with some more earnings reactions, and ICICI Prudential is one of them, and that is declining on the back of its third quarter results and subsequent price target cuts that have also come from brokerages. Vamakshi is here to list out more on that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. A weak set of numbers coming in for ICICI Prudential. When we look at the new business premium, that was up nearly 53.5% at 6,441 crores. The total APE saw an uptick of 27.8%. This is more or less in line with what the street was expecting, with the big hit came on the VNB margin front, because that has come in much below what the street was expecting. Now VNB margins have contracted from 22.9% to 21.2%, and resultantly it has led to a miss on the VNB as well. VNB is up 18.6% at 517 crores. Largely, we have a couple of brokerages as well that have come out with their outlook on their numbers. HSBC, who has a buy rating on the counter, has cut its target price from 825 to 780. We also have another note coming in from Morgan Stanley. They have an equal weight rating on the company with a target price of 695. They have gone ahead and trimmed their VNB forecast by 2% from FY25 to 27, following the miss on margins. And lastly, we have a note coming in from Macquarie. They have a neutral call target price of 725. They say that VNB margin growth has disappointed yet again this time around. Higher ULIP, declining savings and higher costs have impacted the margins, and downside risks are seen as far as FY25 estimates for VNB are concerned. So overall, not a good show for ICICI Pru.
Not a good show, and the stock is reacting understandably as well, down 8% right now. The other stock which is reacting to not a good show in their third quarter performance is India Mart, among the top losers once again today. Rima joins in with the earnings, fine print, brokerage views, and what exactly is causing the pain?
Well, the stock is now at a fresh 52-week low, having fallen 18% in the last 1 year and more than 30% from its recent 52-week high. The problem in the numbers was the quarterly paid subscribers has fallen by 3,700 on a sequential basis. The estimates were that the quarterly paid subscribers would grow by 2,000. So, a couple of years back when things were growing well, the quarterly paid subscriber addition used to be 5,000 to 6,000. This came down to about 2,000. But this is the first time in many quarters we've seen a decline on a sequential basis, and it came in as a negative surprise. The company said this is an account of the focus of the company to focus on the better quality customers and to the holiday season. Nomura has downgraded the stock to a reduced. The target price slashed to 1,900. The core business is now valued at 20 times versus 30 times earlier. And it's also now being valued at a 50% discount to an info edge. Motilal Oswal, on the other hand, has a bullish call on the stock. They have a buy rating, target price 2,600. They've lowered the target price, but they still have a buy rating on undemanding valuations. Back to you.
Subscribers has been a pain for India Mart over the last few quarters, and it's showing up in the price. And now it's still down almost 30% from its peak, which was close to around 3,200, 8.5% lower on India Mart. Time for a short break on Halftime Report. Corporate Conversations on the other side. We connect with Ajay Kanwal, who is the Managing Director and CEO of Jana Small Finance Bank, to discuss the quarter gone by. Stay tuned.
We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
I think,
Back with us here on Halftime Report. Just before we went into the break, we were talking about extreme earnings reactions on the downside. But one such stock that is bucking the trend and is doing very well after its third quarter numbers is Jana Small Finance Bank. Now, the company also said in its earnings call that the worst of its asset quality issues are behind. Now, to discuss this and a lot more, we have Mr. Ajay Kanwal, who's joining in, who's the Managing Director and CEO of Jana Small Finance Bank. Mr. Kanwal, good afternoon. Thank you so much for joining in. And I start off with what you mentioned in your earnings call, which is about the asset quality issues being behind, now the worst of it being behind. Does that also mean that slippages will now see a reduction from here on, or will they continue to remain higher than the historical average?
So first, good afternoon. Thank you for having me on your show. We certainly would see the slippages coming down. But see, here is the important thing for all viewers to know about Jana Bank. 68% of our book as of December is a secured book, largely property backed. So fundamentally, even if there is small slippages on the secured side, it's a matter of time when you get your money, and it doesn't become an issue in terms of it causing a loss to the bank. Our challenge really on the asset quality was in the microfinance business, which is now at 32%, where we had seen stress in the industry, and which is where we saw elevated flow-throughs in the first two quarters. It's come down in the third quarter. I must also add that microfinance collection still continues to be a hard work, which will continue to focus.
All right, we take that point. But, what was very interesting, apart from everything that you said, and I noticed this, is that you called it Jana Bank. And this, when the stock market calls it, and the name of the company is Jana Small Finance Bank. And that leads me to the question, are you looking to apply for a universal banking license? I mean, will this be Jana Bank instead of Jana Small Finance Bank?
So first, I've made sure that small finance is very visible behind me. So
yes, but when you said it, maybe it's a Freudian snip.
I'm hoping so, but listen, it'll be absolutely our full efforts to apply for a universal bank. You know the conditions which RBI has published. The one condition which we are doing our best to meet is to ensure that gross NPA and net NPA remain below 3% and 1% respectively. It does cause us to put additional provisioning because the year we are supposed to meet it has seen an MFI stress year. So it's a bit of a difficult moment, but touch wood, the business is doing well. We're able to provide for the accelerated provisioning, as we call it, to make sure that net NPA remains below 1. And we have been doing it for the last 3 quarters now.
So what are the other parameters that are left now, and how long before we hear that application going in?
So all of the parameters have been met. This one we have to meet for 2 years in a row. We met it last year. We meet it this year, then we are eligible to apply. As you know, it's not an automatic process, our eligibility, and then it's a decision for the regulator and the committee which has been appointed recently, which will decide whether Jana should get one or not. But we fundamentally are, in our minds, very clear that we will certainly apply for it.
So first quarter FY26, thereabouts?
That's right. So audited results in April, and then application by May.
Right. Mr. Kanwal, you mentioned in your earlier answer that microfinance collections still continue to remain a challenge. For how long do you expect that to continue, sir? And what's the situation on ground right now that you are witnessing?
So for us, the challenge is very simple. Normally, you would hit 99% close to the 20th or 22nd of the month. Now we hit 98.5, 98.6 by the 30th of the month. So by which I meant that, yes, the book has stabilized, but hard work will continue. It's not, like it was in the fourth quarter of last year, where doing 99% by 22nd of the month would have been like, okay, we are more or less sorted out. Here we are fighting to the last minute. And I think there has been some noise, obviously, within the industry, between employees, between various institutions. So it's not still back to the way it used to be. So I do think this will continue, which means hard work at our end till the last day of the month to get everything right. I suspect will at least be this quarter and possibly next quarter too.
All right. So, we'll take it as a given that your ratios, the net NPA and gross NPA, will remain below 3% and 1% respectively, currently at these levels itself. I just have a two-part question. One is on your advances growth. What do you project for the end of this year and the next year as well? And the second part is on NIMs. And the reason why I ask you about NIMs is because they've reduced both year on year and quarter on quarter. And we've spoken to a lot of financial institutions, banks, etc. They are, seeing the turn of the rate cycle sometime in the next couple of quarters. If that were to happen, that would put further downward pressure on the NIMs. So what is your outlook here? Where do you believe that, the NIMs would sustain? What the base would be here?
So Mangalam, thank you. So first question, very important and very relevant. Our growth in secured book, which is affordable housing, micro lab, MSME, gold loans, that is about 29% for the year in the first 9 months. So we should finish in the 35+% growth for the year in secured book. Our unsecured book first 9 months has been minus 11%. Let's say we end up with minus 11% for the full year. Then the overall growth this year will be about 20% growth in assets. We had given a guidance earlier that we'll grow 20% assets and 20% deposits. So we'll meet that guidance for sure. Our bias is to give a similar guidance for the following year too. And which is what we said in the analyst call, that at least while we discuss ROAs and ROEs and PATs, we certainly are in our mind very confident that we will grow assets and liabilities at a 20% clip. But for us, 20% asset growth has to be more secured than unsecured. We have clearly said that we would like to reach 80% secured asset book. From a zero, we have reached 68 as of December. We would like to get to 80.
And by when do you expect to get to 80, sir?
I would give ourselves 2 years of hard work to get there. But touch wood, I mean, the book that we have built, which is very organic in nature, has seen a COVID test, gives us comfort to go towards 80 using the same books, small ups and downs by geographies or some small changes here and there will continue happening. On the unsecured side, Mangalam, we have started CGTMC and CGMFU. So while we are cautious and we are careful and we are not growing very fast, we have never grown very fast. I do want to take away any tail risk that may come out from any unforeseen moment also. And for that, while it will cost us, we certainly will put into CGTMC and CGMFU. We have started the first bunch, roughly about 1,200 odd crores out in my unsecured book. I've already put under the guarantee programs. Not to your NIM. Is it okay if I go to the NIM?
Yeah, please go ahead, sir.
So NIM, good news, it's 7.6, sorry. The only gap is from the 11% drop in unsecured book, which has got a higher NIM. Because that has dropped, it has become 7.6. And in fact, in our investor deck, we have shown that even if my book as of December in unsecured would be the same as March, forget growth, just identical, my NIM would have been 8%. So good news, one, the asset NIMs are holding up very well. Second, once we come back to a normalized moment in unsecured, we will go back up on NIMs. We'll also go back in cost income because cost income has got challenged because, some amount of revenue, obviously, which should have come, has not only not come, but some we have lost also because of unsecured. So I think cost income will get better. NIMs will get better. On cost of deposit, we are expecting that our cost of deposits will come down this quarter. And we have repriced both our savings account. We've repriced our deposits. And we do see that we will be reporting a few basis point drop in cost of deposit when we finish this quarter.
How are you managing to do that? Because all the other banks that we speak to, they have gone on to this deposit mobilization spree, right? So if competitors or other banks are offering better terms for deposits, you've managed to reduce your cost of deposits. How do you plan to maintain the quantum of deposits at a lower cost at a time when competition for those funds is increasing?
See, one, I think, to be very honest, the size of the bank is not so large relative to the entire deposit, banking industry. So for us, the 20% growth is like, a 6 to 7,000 crore of growth of deposit in a year, which is a very nominal sum when you look at the entire size of the industry. Second, we are in the growth phase where, we really are opening up new branches. We're adding RMs. We have launched a few new segments, which were never there in the bank before. For banks who have been around for a long time and, they already have 1,000 branches, they open the next 20 is a small change. For us, when we open the 20 branches, it's like a big addition for us. Our segment launches are there, RMs are growing, new branches. We obviously have very good digital answers. We have good servicing capability, new RMs, they're more hungrier. I suspect that kind of foots the bill, yeah. We did find, Mangalam, on the savings account side, there's a very high end of pricing where, a lot of large savings account comes in and just demand a lot of price. We felt in this quarter that we should not cater to that kind of segment. While it does improve CASA, it kind of just, puts you into a lazy habit, which would not be a great culture to carry on with, which we have kind of moved back from. But other than that, listen, for our bank size, getting a few thousand crores every year with 778 branches across 24 states and 24,000 people, I wouldn't put that as a challenge we wouldn't be able to surmount.
Right. Final word from you, Mr. Kanwal, if you can just share a number on this, your cost to income ratio target for the next year.
Okay, I'll tell you what it should be when we become 80% secured. It should be a 52 or a 53%.
Okay, 52 or 53% over the next 2 years. So we will, assume that sort of glide path. Thank you so much for joining in. Congratulations on a good set of numbers. The street likes what you say. The street likes what you've delivered. The stock in a wobbly, weak market up around 17.5% odd. Wish you good luck for the remainder of this quarter and all of next year as well. And hopefully you will join us when you do apply for that universal banking license as well. With that, we take a short break, come back, get you more on the stocks and markets on the whole on the other side.
The trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut, also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
Testing.
On halftime report, let's take a look at the F&O setup at midday. And the reason why we're not talking about the frontline indices and the pain in the broader markets is because that's where, your portfolios start to feel the pinch. 2.5% lower for the mid-cap index, nearly 3% lower for the small-cap index. This week itself, both these indices are down 4.5%, 5%. And all of this also tells you the pain in the broader market is more, more internal rather than external flows-related stuff. Why do I say that? Because look at the top losers in today's trading session. The number of stocks which are declining, 1:7. We have 7 stocks in the red for every 1 stock which is in the green. And this number is startling. At the same time, the nature of the stocks which are declining tell you problems with earnings. So that is something we'll most definitely keep an eye out on. IndiaMart, weak numbers. ICICI Pru, weak numbers. India Cement, weak numbers, even though it is now a subsidiary of Ultratech. Just keep an eye out on Persistent Systems, reports its numbers today. Weak commentary coming in from Oberoi Realty in the conference call. And Kalyan Jewellers has problems of its own when it comes to promoter pledge, etc. If you look at the way the frontline index is positioned right now, there is some action on the 23,100 call for a premium of 50 rupees, telling you upwards of 23,150 we might face resistance. At the lower level though, put writers are active, close to around 1.3 crore shares, 1.4 crore shares at the 23,000 level itself, a level that we breached in yesterday's trading session. But they're hoping for some support coming in at 22,950 thereabouts, were we to break that 23,000 mark once again. Those who are selling the 23,100 call and the 23,000 put are expecting that the range would be close to 22,900 to 23,100 itself. IndiaMart, the 9% decline may take the stock into F&O ban today with the kind of open interest jump that we've seen. And just keep an eye out on Angel One, Kalyan Jewellers and RBL Bank. They're mildly above the threshold from which they get out of F&O ban, and we still have about 2.5 hours of trade left. So if there is more open interest unwinding on these stocks, then maybe these stocks will get out of F&O ban. If not all of them, at least 1 or 2 of them today. We'll watch out for that data.
It'll be interesting to see what happens when Kalyan Jewellers is out of the F&O ban. Mangalam, thank you for that. But just pull up Kaynes Technologies. There were flashes at the bottom of your screen just before we went to Mangalam on the F&O setup of the afternoon. The board has approved 1,600 crore rupee fundraise through the QIP route for Kaynes Technologies, and that stock is down at the lowest point of the day, 8.5% lower. Remember, it took a battering yesterday, courtesy the sell-off that was seen in Dixon Technologies after its results, and another 9% gone in today's session as well. So the stock now is down 25% from its peak, which was around 7,800. The stock now at 5,400 is Kaynes Technologies. Take a short break. Focus on Scient DLM on our Insight Edge segment on the other side. Stay tuned.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first.
Welcome back. As promised on our Insight Edge segment, we are putting the spotlight on Scient DLM, among the top losers in the broader markets after its earnings, and Upasana is here to shed more light on that. Upasana.
While the company has reported a weak set of numbers, the company reported strong revenue growth, but margins and PAT was impacted mainly due to higher employee cost, other expenses, and a steep fall in other income, making it a operationally weak quarter. Now, coming to revenues, it saw an uptick of 38%, while the margins were under pressure, almost 290 basis points at 6.3%. PAT saw a degrowth of nearly about 40% on a YoY basis. Now, management joined us today morning to discuss about the Q3 results and the way forward, and the company has retained its strong outlook for aerospace and defense segment. It has highlighted that certain program experienced timing shift and order pattern for select items remained uneven, impacting the overall ordering activity of the company. Now, company sticks to its guidance of 30% top line CAGR growth, and on margin front it says that the large defense-related order impacted margins, and these orders will be completed in Q4, and margins are expected to improve Q4 onwards. Company is also confident of achieving double-digit EBITDA margin guidance by FY26. Listen into this.
We've tried to provide just some rough guidance, not specifically years, but just more of a CAGR over multiple years. We like to see it about a 30% growth. I think the year before we had over 43%. This year will come in less. Next year is still forming. So still over the midterm, that 30% year-on-year growth is where we like to be, which is in line with the sector as well. But again, that will vary quarter to quarter and even during parts of the year. Regarding the bottom line, we look to operate the business at about a 10% EBITDA, and that is a solid, really a solid baseline for the business that will, that can vary again quarter to quarter.
All right, that is the management of Cyan DLM. Their commentary was optimistic, but the street did not like the third quarter numbers. The stock lower, as Upasana pointed out, currently at the low point of trade. Take a short break, come back on the other side. We bring you snippets from our exclusive conversation with the Novartis CEO. All of this from the sidelines of the World Economic Forum Davos Summit.
Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country. Sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, they're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting.
Welcome back. A couple of stocks are fighting for the frontline index. We have Infosys, which has moved to the high point of trade. IT has actually been a general outperformer in today's trading session. Infosys, by virtue of its weight on the index, is trying to support the Nifty or limit the decline that we're seeing. Maruti Suzuki is the other one which is picking up pace, currently at the high point of trade. It's been a decent month for that stock, up almost 11% And the third one we're looking at is HDFC Bank. Now remember, this has the highest weight on the Nifty, along with the Nifty Bank as well. So any recovery in HDFC Bank is something that would support the frontline indices. Can't say the same for the broader markets, where now the mid-cap index is again at a fresh low of today's trading session. Hormas, you wanted to say something?
No, I was just trying to, since you mentioned the broader markets, I took a couple of names that I wanted to highlight, the companies coming out with results today. Polycab is one of them. That too is down to the lowest point of the day, 4.5% lower there on the stock. And the other one is Persistent Systems, and that is also now to the lowest point of the day, 6.5% lower on that stock. Remember, Persistent was at the was an outperformer in 2024 on the Nifty IT. But over to Davos then, and the exit of the United States from the WHO will be a big blow for the organization, and that's the word coming in from Vas Narasimhan, who said this on the sidelines of the World Economic Forum, and he also spoke about the status of the Novartis India deal. Listen into a slice of that conversation.
Before I talk to you about Novartis, I have to talk to you about what's happening in the world today, and President Trump's decision to withdraw from the WHO. Not entirely surprising, but a big step back as far as healthcare is concerned.
Yeah, I think it's consistent with the general pullback from multilateral agreements. You saw also the actions on OECD, on the climate pact. I think it certainly will have an impact on the WHO, given how large a funder the U.S. government is. I think what will be critical is to find ways for the most critical health programs to continue, whether that's monitoring for future pandemics or also critical programs in infectious disease in developing countries. I think it can be managed. It was managed in 2020, but it certainly is a blow to the WHO.
But what about India? The last time we spoke, you had announced your decision to review Novartis India. You have almost a 71% stake there. Has there been any decision, or are you closer to taking a decision on what happens there?
I think we're not closer. We continue the process. I think the process is ongoing. I mean, our commitment to India is clear. We'd have 10,000 people in Hyderabad, fully integrated, as you know, into our, you were there with me, I think, last year in our operations. And I think from a market standpoint, we continue to watch and wait to see how the Indian pharmaceutical market will evolve. It's still a relatively small market versus our other global markets. I think hopefully as the government continues to invest in healthcare, continues to invest maybe in new drugs and new innovation, that market will come. It's probably still 10 years out, realistically. I think it's still some ways to go.
Still 10 years out, you think?
I think so. I think when I look at the scale of some of these other markets, if you think about Novartis'
China and
scale,
Japan?
Novartis is a $3 billion business in Japan, a $4.5 billion business in China, and a $500 million business in India. So I think that gives you a sense of the scale of difference. And so I think that will take time, but I think it will come. I mean, I recently spent 2 weeks in India, and I really get a sense of the energy, the booming middle class. I think it will come, but it's going to take some more time.
So what's the headline for 2025 for Novartis? commodities?
I think continued strong momentum and continued strong innovation with hopefully some big breakthrough discoveries along the way.
And you hope to get the India deal done in 2025?
I hope so, but you know how those go. Let's see.
How many people are you talking to at this point?
Yeah, I don't know. I should probably get an update. But what I can definitely say is our Hyderabad center is booming, and we're incredibly proud of it. And I think that's going to continue to be a place of investment for us.
All right, Hyderabad is booming and will be a place of investment for Novartis. What we'll do is take a short break, come back. On the other side, focus on all things commodities, where Manisha Gupta joins in.
And it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Testing.
Welcome back. And Evandro Gassi is President, Brazilian Sugarcane and Bioenergy Industry Associations. Nandro, hi, thank you so much for joining in. And ethanol clearly has been a buzzword now in India, but Brazil plotted it, piloted it, championed it. What are the numbers that we're looking at now for production and blending when it comes to Brazil to begin with?
Well, ethanol is an important part of our production in Brazil. We are producing now 33 billion liters of ethanol used in our cars. And as you are experiencing here in India, we have a blend in the petrol. In Brazil, we have 27% of ethanol blended in gasoline. We will arrive in 30% in the next months. And we have pure ethanol used in flex fuel vehicles.
Also, how would you look at Indian growth in ethanol with its targets now preponed 18% done already in the month of December?
Well, I think that India is I think that India is having a wonderful development here in terms of ethanol production. I am here at the Bharat Mobility, one of the most important expositions about mobility in the world, and I can see here flex fuel vehicles able to use up to 100% of ethanol, and this will be very important for sugarcane producers and for ethanol producers here in India, because with the production of ethanol, you don't have a necessity to have all the incomes of the sector from the sugar.
Mr. Kasi, also, how do you see India and Brazil trade relations? Because the numbers in 2024 have been quite an improvement. How also are you looking at knowledge sharing when it comes to biofuels between the two countries?
Oh, we have the best relations between Brazil and India. Brazil has 40 years of experience in ethanol production and consumption, and we are pleased to share the experience with India and see how fast you are developing the technology and the market of ethanol here in India. I can't believe in what I am seeing here. 5-6 years ago, we had nothing about ethanol in India, and now here in Bharat Mobility, I can see the development. I think that in the next course, after 20% of blending, because government of India is developing a roadmap for further ethanol blending of 20%, I think that India will be one of the best examples of sustainable mobility in the 21st century.
I also want to draw your attention to the Global Biofuel Alliance, which was launched between US, Brazil and India to increase biofuel production and demand. You are playing a pivotal role in that, but since that has been done, where would you say we are standing now? What kind of progress has been made onto this one?
I think that the Global Biofuels Alliance was a wonderful idea launched by Brazil, United States and India here in G20 when India had the presidency of G20. The schedule now is running a lot because all the bureaucratic and diplomatic assets are being done. India has the Secretary of Global Biofuels Alliance, and we are seeing a lot of countries understand the importance of ethanol and wanting to achieve the same target. The example of India, the leadership of India in ethanol is getting Indonesia, Thailand, Philippines, South Africa, and a lot of countries in the world for this pathway with biofuels, with bioethanol.
Mr. Kasi, a final question, and then how are you looking at, as you said, India has made leaps and bounds when it comes to ethanol usage and flexi-fuel cars that you have seen in Bharat Mobility Expo. How would you say Brazil is guiding, sharing its own experiences with India at this point?
I wouldn't say that we would or could guide India, but share experience. What we have in Brazil is first a high-level ethanol blend in gasoline. This is wonderful for cars, for people, and for environment. More than this, Brazil has developed the flex fuel vehicles able to use up to 100% of ethanol and up to 100% of gasoline. This experience is being showed here in Bharat Mobility, the Auto Expo, And what we are showing now to Indian government and Indian private sector, first is the measurement of the carbon intensity of ethanol. How to measure how many grams of CO2 equivalent you have in each liter or each megajoule of energy produced by ethanol. The second point, it's very important to have tax differentiation. We can't have the same taxation in ethanol and in gasoline, in petrol. You must have an important difference because while gasoline has emissions of CO2 in high level, in case of ethanol, you have up to 90% of reduction in CO2 emissions. Then I think that tax and carbon intensity measurement are the next steps that India is looking at, and this is very important for the program.
Mr. Kazi, thank you so much for joining in. Well, an important point being made that India needs to look at tax differentiation when it comes to ethanol and petrol being used in cars. And second point, of course, Mangalam, as he said, that you have to look at your carbon intensity. That's an important thing that India needs to start measuring.
Absolutely. The world is looking at carbon neutrality here. So carbon intensity extremely crucial. But what's also extremely crucial is that the mid-cap index is breaking those important levels, very close to that 52,500 mark, down about 2.5%. At the low point of today's trading session. And some of the stocks which are seeing a fair amount of sell-off. Pull up something like AB Fashion and Retail. Did well in the morning. From there, it's given up around 3.5% of gains. So currently sitting at the low point of trade. First Source continues to struggle, down about 6% now at the low point for that one as well. Polycab ahead of numbers, down 5%. InfoEdge down about 4% as well. So mid-cap IT not doing particularly well. AB Fashion Retail selling off, and a bunch of other stocks as well sell off, even as large-cap IT and the frontline index holds on around the flat line. Take a short break, come back on the other side. Business Lunch takes all the market action ahead.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen. We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all.
Nifty Sensex struggled to find direction even as mid-caps take a beating. Realty and industrials are the big losers while IT manages some green. JSW Group Chief Sajjan Jindal tells CNBC-TV18 that he expects some indications on steel safeguard duties from the government in 15 days. On the EV front, he expects the launch of a made-in-India car in 18 months. Axis Bank CEO Amitabh Chaudhary tells CNBC-TV18 there is a risk of stress spreading to the secured book from the unsecured book with regulatory tightening. He also doesn't see a rate cut spurring growth. US President Donald Trump has indicated that he might impose a 10% tariff on imports from China on February 1st. The fear of tariff action prompts India to accept the return of a near 18,000 illegal immigrants. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Markets, what we're seeing that markets have fallen from the day's highest point, but yes, not at almost at the day's lowest point as of now is where we're seeing. The Nifty trading at 23,000. It's just managing to hold on to that mark. So yes, keep an eye on the Nifty, 0.06% down. While Sensex, that's managing to hold on to gains of almost 0.1%. That too is down in trade from the day's highest point. What's underperforming today is the broader markets. A significant underperformance on that front. Nifty mid-cap, like you can see, is down 2.5%. Small cap also similarly is underperforming, down 2.8% in trade. Nifty IT, let's pull that up because that's the only sector that's managing to hold on to green today. So Nifty IT, we are seeing green coming in on the screen, 1.5% gains over there. Stocks in the Nifty IT, so TCS, TechM, Infosys, all of them are managing to hold on to strong gains coming in on the Nifty 50 front as well. So yes, IT is the one that's managing to hold on to gains. One more stock that I want to highlight in the Nifty 50, let's pull that up as well before we go to Nifty 500, is Sun Pharma, because Sun Pharma is also managing to hold on to good gains in today's trading session. So Sun Pharma, strong performance coming in there today in terms of a stock move up 1.3%. Now let's move to the Nifty 500 and talk about the top losers coming in on the Nifty 500 front. We have India Cements that's down and out. Aditya Birla Real Estate reported its numbers yesterday. So we had seen some fall coming in, and today also we're seeing Aditya Birla Real Estate seeing a sharp fall. India Mart also is tanking in trade today, not holding on to good gains. Other than that, we have Keynes, Sirma SGS. All these are under pressure in today's trading sessions. That's how we're seeing in terms of a market setup coming like. Broader markets, clearly a sharp, significant downfall that we've seen coming in versus the benchmark indices. But let's move on and talk about what's happening in US. Now, a lot of policies have poured in from the US after the 47th president, Donald Trump, has taken office. The latest in the bag is the Stargate project, which will invest $500 billion in the AI infrastructure and create hundreds of thousands of jobs in the US. Now, the project will be headed by the SoftBank CEO Masayoshi Son, as well as OpenAI CEO Sam Altman and Oracle Chairman Larry Ellison. they will be a part of this project. And while new projects are in the pipeline and executive orders are passed, doubts continue to remain among global investors about the H-1B visas and the looming tariffs on China. Listen to what Donald Trump had to say on this issue.
I also like very competent people coming into our country, even if that involves them training and helping other people that may not have the qualifications they do. But I don't want to stop. And I'm not just talking about engineers. I'm talking about people at all levels. We want competent people coming into our country. And HB1, I know the program very well. I use the program. Maitre d's, wine, experts, even waiters, high quality waiters. You got to get the best people. Now, then you go into people like Larry, and he needs engineers, and Masa needs, and this gentleman needs engineers like nobody's ever needed engineers, right? So we have to have the quality people coming in. Now, by doing that, we're expanding businesses, and that takes care of everybody. So I'm sort of on both sides of the argument, but what I really do feel is that we have to let really competent people, great people, come into our country. We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada. Probably February 1st is the date we're looking at. For Mexico and China, we're talking about approximately 25%.
And moving on, and earlier we also spoke to Mark Linscott, who served as an assistant trade representative in the first Trump cabinet. He had told us that China will be among the first countries to face Trump's tariffs. Listen in.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries. And China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
However, Linscott also said that the Trump 2.0 would want a trade deal with India. Here's why.
There's a strong desire among many in the Trump administration, or many of those who we expect to have cabinet level positions once they are confirmed by the Senate, that it's desirable to have a trade agreement with India. And that was true in the first Trump administration. And I think it's been reinforced ever since, that it's important for the U.S. and India to have a bilateral trade relationship. It could take a number of different forms. It could be a mini trade deal involving a few sectors, a few tariffs. It could be something more substantial along the lines of the GSP negotiation in the first Trump administration. It could be an FTA, which is totally comprehensive. I think it will not be a mini trade deal. I don't think it will be an FTA. I think it will be something in between, in fact, a little more substantial than the GSP deal.
Okay, on that note, we're going to slip into a very short break. Don't go anywhere. More news and updates after this break.
That drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, you know, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and...
Think about India, we have them growing strong next year, consistent with what they grew this year. It's now moved to the 5th largest economy.
The Honeywell view on India, and how do you see the next few years?
Domestic business is extremely well. Can't be more pleased in terms of opportunities in India.
It is, and there are lots of reasons for that. One is because he's in a much stronger position in the United States than he was in 2017.
They're working on AI. They're working on all the innovative capabilities that we want to input into our products. A lot of that's coming out from India.
If I were to say even heart and mind put together, India is an exciting story.
I mean, our commitment to India is clear.
And more from the World Economic Forum in Davos. Amitabh Chaudhary, MD and CEO of Axis Bank, says that if the regulator keeps a tight leash on lending, there is a possibility that slippages on unsecured side could slip towards the secured side as well. Listen in.
We also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side, because they're all linked. And we have to be watchful of that. I mean, I don't think we should be just gung-ho for the sake of being gung-ho. We need to be watchful. And I think that's what we're trying to share to the market, that we are not going to lose any opportunity to grow, but at the same time, we have to be watchful of what risks could potentially emerge. And if you look at our numbers, the numbers are always stabilizing. See, we've gone through a period where the credit costs in India were at a historical low. And we talked about the fact that this will stabilize. So I think you're going through a cycle, a little bit of stability. You've also seen the Indian consumer over-leveraging themselves in some case quite rapidly. So I think that also is getting normalized as we move forward.
Okay, and meanwhile, Roshni Nadar, the chairperson of HCL Tech, says that she expects to see more federal-level opportunities in the U.S. in the Trump administration. Listen in.
I think there was a certain element of unpredictability in 2024, and I think there were lots of customers, clients, and companies waiting to see what unfolds. There were, I think, more than 60 countries going into elections,
yes.
right, culminating with the US, and I think that now it's back to business and back to strategy and implementation. So we expect 2025 to be better.
And as we slip into the break, here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from Apple Store or Google Play Store, or just scan the QR code on your screen.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into.
Thanks for staying tuned into Business Lunch on CNBC-TV18. Now let's move on. India's ambitious Pradhan Mantri internship scheme seems to have fallen short of expectations in its pilot phase. Sources tell CNBC-TV18 that despite 6 lakh registrations, only a fraction of internships were filed. Shivani Bazaz is joining with us to give us more details on the story.
Well, yes, the government's ambitious Pradhan Mantri internship scheme seems to have hit a few roadblocks in its pilot phase. While over 6 lakh candidates registered on the PM internship portal, sources tell CNBC-TV18 that only 28 to 30,000 applications were accepted and less than 10,000 interns joined the positions offered to them. Interestingly, in the first phase, 280 out of the 500 selected companies, including big names like Reliance Industries, Tata Consultancy Services, HDFC Bank and Maruti Suzuki, offered a total of 1.26 lakh internship positions, exceeding the initial target of 1.25 lakh internships in the pilot phase. However, participation remained much lower than expected. Now, the government is reworking its strategy. Sources say that Ministry of Corporate Affairs may disclose company names and locations upfront in the next phase, allowing candidates to make informed decisions before accepting the offers. Because it seems like many interns accepted the positions and didn't want to travel out of their hometowns for these internships. Now, discussions are also underway to include candidates with master's degree and those currently pursuing any degrees in colleges. This is to boost the participation in the scheme. Remember, with the 2,000 crore allocated for the program in FY 24-25, the government faces the challenge of addressing these gaps to make the scheme a success.
Thanks for that. But let's move on. An External Affairs Minister, S. Jaishankar, met with the newly appointed U.S. Secretary of State, Marco Rubio, who in Washington, D.C. Now, the two leaders also attended the first ever Quad under the new Trump administration. Parikshit is joining in with us to give us more details on what's happening here. Parikshit, good afternoon.
Well, yes, this was an important meeting, the first meeting between the Indian government and the US government after the Trump administration took over. So External Affairs Minister Subramaniam Jaishankar was there in the US. He had a one-on-one bilateral meeting with Marco Rubio, the new US Secretary of State. What is notable is the fact that when Trump's inauguration ceremony was taking place, Subramaniam Jaishankar, the External Affairs Minister, was one of the leaders sitting in the front rows of the hall. Having said that, immediately after Rubio took over, there was a meeting of Quad leaders, Quad foreign ministers in Washington, D.C., followed by a one-on-one meeting with Jaishankar. Now, what was this meeting about? One was to widen the India-US bilateral relationship, the economic partnership, continue the emphasis on emerging technologies, defense, for the future as well. A lot of work has happened in the Biden administration, and clearly India would like to take that forward as well. There was a discussion on irregular migration as well. This has been a concern from the United States for the last few years. Recently, as early as November last year, the US had conveyed to India that there are approximately 18,000 Indian nationals illegally staying in the United States. Some of them are in detention centers and they would have to be sent back. So the Ministry of External Affairs has said that yes, there is a migration and mobility arrangement with the United States, and because India wants to push and encourage more legal migration, they will support any kind of move by the United States to check this illegal migration into the US. So it is quite possible in the days to come, India and US might come to some sort of arrangement to allow these people to be deported back to India. However, nothing has been finalized as yet. The immediate focus from the Indian side would be to ensure that the trading partnership continues. There is the possibility of talks on a free trade deal reviving as well, with several former Trump administration officials telling us that yes, the Trump administration and the Trump cabinet wants a trade deal with India. It could be on the lines of the US-Japan trade deal as well.
Okay, Parikshit, thank you so much for the latest update coming in on that front there. We'll keep an eye out on more updates. Quickly, just want to mark the numbers that are flashing at the bottom of your screen. With Polycab, that's come out with its Q3 numbers. We've seen a bit of a fall coming in the stock, though EBITDA seems like largely slightly above the expectations of the CNBC-TV18 poll. Margins also a bit better than what we were expecting at CNBC-TV18. 13.8% is what the EBITDA margins have come in at. We've seen a slight bit of a fall that came in the stock when the numbers were announced, but we'll wait out for more more internals coming in terms for the numbers of the company versus, last year, how they're looking like and what the individual segments are doing. As of now, the stock is down 5.7%, but it was trading in the red in today's trading session. As of now, did see a bit of a dip when numbers were announced. But another exclusive from Davos, Paytm CEO Vijay Shekhar Sharma has expressed his optimism over achieving EBITDA is what we're talking about, and we had an interesting chat with that as well. So that was something that we were watching out for. But it was a very interesting conversation that Shireen had with Vijay Shekhar Sharma. Let's move on, and apart from that, we also had a lot of announcements that came in, and in terms from the Davos side. But a quick look at what the market is doing as of now. The Nifty 50 is down 0.05% in trade. 23,000 is what it's managing to hold on to. Not much of an excitement there. We have IT that continues to do well. We have BEL. Let's pull that up because that's clearly under pressure today. So we're seeing clearly a lot of pressure on BEL, and that is among the stocks that are among the top losers for coming in the market as well. But like I was saying, we spoke to Vijay Shekhar Sharma at Davos. Shireen spoke to Vijay Shekhar Sharma at Davos and listened into what the conversation is actually coming in terms of the EBITDA profitability. When are they planning to achieve it? What was spoken over there? Listen in.
Well, the road ahead looks like that we have committed that next quarter we will be profitable, EBITDA before ESOP, meaning before the ESOP cost, which is also reducing incidentally, and we should be doing that. So we are working on the business which is now PAT profitable onwards. So after a couple of quarters, we should talk about PAT profitability, and I would go for that.
After a couple of quarters, so what does a couple of quarters mean? A
couple of quarters are a couple of quarters.
So you won't specify, is that 3, 4?
I learned that being a public company, one thing that you should know is that you should not have one information arbitration with other information. So what we've been talking, I'll be able to detail it further, just like we've said it. Okay. And we've said it that from this point onward, we in earning call also talked about that because our large cash pool gives us interest income, our two costs, which are capex sort of and lot of, let's say, other costs will get sorted out. So we should head towards a PAT profitability soon.
In few quarters is what you have to say.
I have to say that.
So let's talk about what's happening on the UPI side of the market, Vijay. And despite the fact that you've got the NPCI approval, we've actually seen market share come off quite sharply. A 50% drop as far as your market share is concerned, now down to 5.5%. Why is that?
It's very bad, and I can only say that. I mean, the situations and the reasons are public. I'd not like to repeat much of that, but I'd say that...
is it on account of the trust issues related to what happened with the bank?
No, we were not allowed to onboard at all for last... So our business was paused because of regulatory understanding and something that happened thereof. And post that it has come, I'm very happy that without any marketing spend, we are adding millions of customers. So I have a super brighter side ahead, just like this bright sun in Davos right now. We all are surprised, And I can say that even though we've fall market share exists, but it is easily recoverable with the product.
How do you ensure that it becomes easily recoverable? What are you going to do?
I think the customers are coming in. It's a product gap, deeper integration to UPI ecosystem, and more merchant acquisition, which creates a flywheel, will bring our consumer back. We do have a marketing budget, but right now we are focused on product-led growth.
Okay. That's all the time we have on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane.
Good afternoon, it's Midcap Radar time. We are reacting to results from Polycab on a day when the Midcap index is down 1,400 points. The stock too is reacting to results down 7%. But Vivek, there are plenty of earnings lined up through the course of the day.
Good afternoon, Hormaz. Plenty of results today. It's a big day, especially as far as some of the heavyweights are concerned. But it's a day where it's directionless, especially as far as the benchmark indices are concerned. The broad end of the market seeing quite a bit of pressure. So let's have quite a lot lined up on the show. Let's start off with the top headlines. Nifty Sensex struggle to find direction. Mid-caps take a beating. Realty and industrials are the big losers, while IT manages some green.
MCX rebounds from Tuesday's fall after UBS issues a buy rating with a target of 7,800, says that revenue growth was slightly lower than expected due to a decline in non-trading revenue.
India Mart shares plunged close to 9% on the back of weak third quarter earnings marked by a decline in quarterly paying subscribers. Nomura downgrades the stock to a reduced rating, slashing the target price to 1,990 rupees a share.
Signed DLM is among the top losers on the broader markets after a mixed show in its third quarter, while revenue came in stronger than expected, but higher employee costs impacted margins and profits.
Tanla Platform slips over 6% after reporting another muted quarter, sees flat growth both sequentially and on a year-on-year basis in Q3. Welcome to Midcap Radar. Well, it's a screen that is completely red. If you pull up the advanced decline ratio or the number of stocks that are losing compared to the number of stocks that are gaining, this particular spread or this particular ratio is clearly skewed in favor of the laggards. NSE declines when you're looking at the screen, over 2,000 stocks losing, only around 330 stocks gaining. We just had the results of Polycab some time ago. That particular stock seeing quite a bit of a strong sell-off immediately post the results. But we have quite a lot of stocks that Vamakshi is standing by. She's at the wall. This is our special segment, Midcap Movers. Vamakshi, take us to the midcaps that are moving around in the session.
Well, absolutely, Vivek. Not a great day for mid-caps, right? When we look at the list of the stocks that are losing out in trade, lots of names come up. As you said, the advanced decline ratio largely in favor of the declines. Look at NetWeb. The stock has continuously declined from the day's highest point. Today, the stock is down and out nearly 11%. Keynes Tech is another counter that is seeing a very sharp fall of almost 10%. PB Fintech and Sirma SGS Tech are some of the other counters that are declining in trade today. This time around in the earnings season, there are lots of stocks reacting to their numbers, and good numbers are being rewarded very well, while the bad numbers are being punished. When we look at India Cements, that stock is down nearly 12%. Sign DLM, India Mart and Tanla platforms are reacting very sharply to their numbers. Jana SFB, on the other hand, when we saw their asset quality improve, the stock is seeing a surge of almost 16%. Apart from that, realty stocks continue to remain under pressure. In fact, from the highs that they made in December, the realty index is down nearly 25%. Oberoi Realty, Prestige Estates, Godrej Properties and Shobha are some of the counters that are declining in trade today. But on the flip side, we have some stocks that are gaining in trade in such a weak market. Bombay Burma up nearly 3.7%, LG Equipment up 2.97%, MCX after seeing a sharp fall yesterday has seen a good recovery up nearly 2.8%, and Easy Trip also up in trade. Apart from that, lastly, let's also look at some of the stocks that are in focus on the back of strong volumes. CG Power is down nearly 5%. Kalyan Jewellers continues to decline in trade. PB Fintech and Sterling and Wilson are some of the other counters that are down and out on the back of strong volumes as well.
Vamakshi, thanks a lot for that. By the way, Polycab is now down 8%, is down to the lowest point of the day. And by the way, the numbers were not bad even when you compare them to estimates. The EBITDA was up 26.5%. It was better than expectations. Margins too expanded. They too were better than expectations. But the stock is reacting to those results. Mind you, Polycab has also been an outperformer in recent times. So the valuation concern for a lot of these companies are also weighing in on the kind of reaction that you are seeing on these stock prices post their results. But 8% lower now on Polycab, or 16% down in a month though. We'll get you more details as the show goes by, but let's get in Jai Thakkar now from ICICI Securities for a quick chart check. Jai, good afternoon. Thank you for joining in. The concern right now is not the index, because the kind of fall that you are seeing in the broader markets, the index has somehow taken a back seat. But is there more pain that's in store for the broader markets, so the mid caps and the small caps? What are the charts indicating there? And couple that up with your stock recommendations as well.
Hi, very good afternoon to you, Hormaz and Vivek. Well, see, broader markets definitely, as you pointed out, the breadth is quite negative, and we have seen a good amount of sell-off there. I mean, it's it's lately playing out there because we already had seen a correction coming in the Nifty and the Bank Nifty, and now the broader markets correcting since past couple of 2 days. And the lows are yet to be broken, Hormaz. If you look at the mid-cap index, I mean, 52,248 was the low, and it's still trading at around 450. So I think, it's still to break its low by 200 points and move lower. So from here on to the weakness is likely to continue on the upside. We believe that 54,000 on the upside till those levels aren't taken off. The Nifty mid-cap index trend is negative as far as the Nifty small cap index is concerned, Hormaz. I mean, the recovery which we had seen for almost 5 to 6 trading sessions has been wiped off in 2 trading days. That is yesterday and today. And the low made out there was 16,800. It's still trading around the levels of 16,950, 955 levels. So the low is yet to be broken by 150 points, and the way the momentum has weakened, Hormaz, and the way the kind of breadth weakening and the shorts that's getting built up, the probability of these lows getting broken is quite high, by around 200 points in mid-cap Nifty and around 150 points in small cap. And once that happens, we will see further weakness coming in. So yes, the pain is likely to continue in both of this as the weak bounce has been now been reversed with the sharp sell-off which we have seen since yesterday, and the momentum is completely reversed from up to down in 2 trading sessions. As far as Nifty is also concerned, I mean, 23,000 level is the level to watch out for, wherein we have good amount of put writing that has taken place. I mean, once it closes below those levels, I mean, today, tomorrow, whenever, you will see further weakness in Nifty coming in as well, and below those levels, we'll immediately see 22,800 to 22,500 coming in Nifty as well. So trend remains negative, Hormaz, till we don't see a clear evidence of a reversal from down to up. Hence, I have 2 sell recommendations. The first one is on Siemens. Now, Siemens has been forming low tops and low bottom. In fact, Hormaz, I would say that Siemens had broken down from its sideways consolidation range of almost 1,500 points. And now on the lower side, we are targeting around the levels of 5,500 in the near term. That's the immediate target. And below that, you can see the levels of 5,350 as well. On the upside now, 5,900 to 5,950 will act as a very crucial resistance. So till those levels aren't taken off, the overall trend in Siemens remains negative. Hence, we have a sell recommendation out there. And one more stock to look out for is HAL. I mean, there is where we have continuously seen lower tops and lower bottom getting formed. The momentum is also weak out there. So HAL can also be see or witness some further sell-off from here on. The previous lows are likely to be broken. On the lower side, we are expecting around 3,700 levels to be tested. On the upside, 3,900 will act as a very crucial resistance. So one can sell now, one can sell on rise as well. But HAL, Siemens, these are the stocks which are looking back negative, as well as Polycab also, which you were just mentioning. I mean, it's reversed after a long uptrend. The long-term uptrend line has been broken. The indicators are in sell mode, and we are now seeing fresh shorts getting built up out there as well.
Understood that, Jay. Thank you so much for joining us, giving us a view on the markets as well as stock-specific action. Well, some important flashes just came by on your screen, at the bottom of your screen just a while ago. Polycab actually has said that it intends to go ahead and they say that they would be able to achieve a higher revenue than what they had earlier anticipated at the start of FY25. So some strong commentary coming in. Remember, we've had 3 WNC or wire and cables companies that have come out with results: Havells, KEI, and now Polycab. Havells was a muted set, KEI inline, and Polycab at this point of time with the commentary appears to be a good set, but clearly market is not in a mood at this particular set of numbers. Markets actually have seen given it quite a bit of a thumbs down as far as this particular sector is concerned. Hormal, you wanted to comment?
The important announcement that they have made is the fact that they are going to achieve their FY26 revenue guidance of 20,000 crores in FY25 itself is what the management of Polycab is saying. As you can see the flash at the bottom of your screen, for the first 9 months, the revenue stands currently at 15,422 crore. So we'll keep an eye out on Polycab. The stock, though, still down 8% despite some positive commentary coming in from the management on the road ahead for the company. The time to take a short break. We'll be right back. But before we do that, India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. You get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download the app now from the Apple Store or the Google Play Store. You can just scan the QR code on your screens.
Many months ago, or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, they're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos.
Welcome back to Midcap Radar. Well, we are now joined by Vijay K. Tadani, Vice Chairman and Managing Director, NIIT MTS, to decode their Q3 results that just came about. Good afternoon, sir. Thank you so much for joining us. First up, at the end of Q3, would you continue to hold on to your FY25 guidance of 7% revenue growth and margins in the range of 22 to 24%? End of FY25, will you be at the upper end of the guided margin band?
So first of all, the answer to your question is yes. At the end of quarter three, I think quarter three has been good because we have a rebound from a -2% QOQ to +5% QOQ. And I think that momentum will carry it through in the fourth quarter. And therefore, we are holding on to our revenue guidance for the year. On the margin, I think we're doing a little better, but we would be in the upper end of the range of 22 to 24% that we had said in the upper quadrant.
Mr. Tadani, good afternoon. Thank you for joining in, and also congratulations on the quarter gone by. You know, what has the current quarter looked like so far? It's still early days, of course. It's just 20 days into the quarter. But how are demand trends panning out? What are you witnessing on ground when it comes to demand from, say, from your large clients or even from your smaller ones?
Yeah. So I think the overall economic climate, if I was to say, till end of last week was approximately the same. Of course, this week, the economic climate has shown a change, but the impact of that will be known over the next few weeks and months and maybe years. But definitely that the status was same. The uncertainty was high. It was a challenging environment with so many moving parts in the environment and in the economy. And I think the focus of everybody was on cost optimization, customers, and therefore that's normally good for us because it also means that the propensity for outsourcing will increase. We are in a very, very specialized niche of learning, and therefore we become natural candidates to be invited for any such discussion. Our win rates have been very good. I think last quarter, we have been able to get 2 new MTS contracts. We have been able to get 3 renewals and multiple expansions. So I think our overall revenue visibility has increased to $391 million. So in other words, in terms of customer acquisition, scope expansion, and involvement with customers, I think the going is good. I think what we have to see is the coming back of the spend on learning, which at a certain time was subdued, but is now beginning to recover. So I think that, in a sense, will describe the environment. But I think going forward, we should see more exciting times next year, but too early to talk about that. We are in the planning phase ourselves. The world is also in a little bit of transition as we go through the next few months. So I think by next quarter, we'll have a clearer picture of how the next year will come out.
Completely understand that, Mr. Tadani. If we could push you to quantify, when you say much better, would you be able to give us a ballpark figure for FY26? What is it that you're anticipating in terms of top line margins as well as profitability? Another sentence, that we just picked up from your investor release is that you've said that volumes in the management consulting business have been impacted, number one, due to the moderate environment and also a push for cost reduction. What exactly is transpiring in that particular space? Q4 FY26, how do you expect that to pan out?
Yeah. So let me answer your first part. I think too early to quantify how FY26 will be. Our long-term guidance for this business, as well as our long-term vision for this business, remains intact. We have shared that on a number of occasions. And I think on that, we continue to feel very, very comfortable based on whatever we have been able to do. But I think getting a clearer picture will emerge maybe 90 to 120 days from now. As far as the challenge which we saw in professional services and consulting part of our business, that it actually came from environment forces, where I think there has been a cost optimization drive at their customers' end, and therefore that reflects itself in their own spending patterns. And that challenge has been going on for the year as uncertainty was high. But I think as things are becoming certain, I think in coming quarters we will start seeing the picture emerging. But last few quarters we have been affected by it.
All right, Mr. Thadani, thank you so much for joining in. Wish you good luck for the rest of the year as well. That was the management of NIIT Learning on the road ahead for the company after their third quarter results. Time for a short break. More on the markets on the other side. We await results from HDFC Bank. Stay tuned.
Decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. from chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
You can see the recovery on your screen from Polycab after an 8% drop after the results announcement. The stock is recovering from the lows of the day after some positive management commentary that it came with regards to the revenue guidance which it planned on achieving in FY26, and it now says it will achieve that 20,000 crore mark in FY25 itself. Well, as a back of the envelope calculation of 15,422 crore means that they would need around about 4,800 crores in the fourth quarter to achieve this guidance. The stock 3.5% off the lows of the day. What is at the lows of the day though is HDFC Bank, and we are awaiting results from the Nifty heavyweight. Opened higher, was higher for most parts of the day, but now has seen some bit of selling pressure towards the final few minutes of this in the final few minutes. Of course, 0.8% lower HDFC Bank. We await results on that. We call time on Mid Cap Radar. From Vivek, me and the team that put this show together, thank you for watching. Your stocks on the other side.
Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time,
Conversations continue here at Davos 2025. I'm Shireen Bhan, and we've been bringing you a diverse set of guests, global as well as CEOs who head Indian companies, to talk about the outlook for the year ahead. Joining me now is a man who's delivered a very strong quarter for Infosys, ahead of estimates as far as revenue is concerned, and up the guidance once again. Salil Parikh, many thanks for joining us on CNBC-TV18. You've done the results threadbare, so I'm going to try and address other issues here with you, starting with the big claim that you're making here at the Infosys Chalet on the promenade in Davos, being AI first. We spoke about that a year ago. How do you back up that claim? Give me 3 numbers that back up the AI first claim for Infosys.
So first, thanks Shireen for having me here. And yes, we've had a good quarter. The focus for AI, there are 2 things that we're doing which we think are quite different. One, we're building 4 small language models. And these small language models are things that our clients are much more interested in today. These are models based on their proprietary data and our proprietary data. For example, we built one small language model for banking, and this is getting traction where clients are starting to use this in their environment. Another one for IT operations and so on. Second thing we are doing is building agents. And agents, today we've in the process of developing about 100 new agents. To give you one example, we built an agent for doing research work.
Okay.
And this is in production with a client for a technology company where their internal people and their external customers can research what the product specifications are and changes are by using an agent.
Right.
And huge benefit to them. Things that used to take 14, 15 days now down to 8 days and other such metrics. Another set of agents we built for an audit company, Big Four. There we built 3 agents which are looking at their full audit process. And again, changes in there. So our view of being AI first putting it for clients and then inside. So all of our service offerings have been infused with AI. We built AI roadmaps. We are doing AI which is secure by design.
Right.
And responsible AI where we want to make sure everything that we can build in to avoid what could be not good uses of AI, we're doing at the start itself.
So how many people now trained? The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are 2 types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So,
it's not
clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it and they're quite happy with it.
So what is this going to mean, Salil, in terms of incremental spends by customers and by clients? And what will it translate into as far as revenue for you is concerned as well? As we look at people moving from pilots now to scale and speed, which is of course the theme here in Davos when we talk about AI adoption, what will it mean in terms of a bump up both in terms of revenue as well as spends?
So there are 2 types of generative AI. One is the consumer one, where we see all of this discussion here, also at the World Economic Forum, but everywhere, the massive capex that we are hearing about. Our focus is more on this enterprise generative AI, which is a smaller amount because the consumer one is huge.
Yeah.
Now in enterprises, we are seeing the traction is large, but the revenue size is still not that large.
Right.
It's quite small. And so, but it's increasing. So every quarter we see good traction and progress on what's going on. My sense is, if you sort of look back to when cloud started or when digital started, it starts off with enterprises where there's a lot of interest, and then there's an inflection point, and then cloud picks up or digital picks up.
When do you expect the inflection point for generative AI at the enterprise level?
So difficult to say when that inflection point will come, but the way it normally works is you keep building different areas where impact is created, and then suddenly there comes a time when it becomes quite overwhelming and the inflection point comes about.
So are we 12 months, 18 months, 24 months away from possibly that inflection point?
So again, difficult to say, Shireen, when that time will come.
Right.
But if you look at digital as an example, it started maybe 8-9 years ago.
Right.
Today at Infosys, we are over 60% of our work is all digital. And so it's a big change from where we were, let's say, 10%. But it's difficult to say when exactly that time will happen.
So, what does this now mean, Salil, in terms of workforce? And I've been asking your peers this question, and most seem to suggest that it's not going to mean less number of people being hired. It's probably going to be the same, if not more. What's your own assessment? Are we likely to see a headcount reduction? Are we likely to see a status quo? Are we likely to see you hire more to be able to deliver on the capabilities you spoke of?
So there first, in Q3, we had a 5,000 person increase in headcount, 5,600. For this coming financial year, we have estimated in the range of 20,000 college hires. So all of this is pointing to an expansion. So why the expansion? Part of what happens with generative AI is you get more productivity benefit. But a lot of what's happening is you have much larger areas of the enterprise where you can do work in generative AI. So that larger area with the productivity, the net is still an increase in the headcount. And that's the trend we are seeing right now.
So you will continue to see an increase?
For this, we already have a sort of early plan of about 20,000 college graduates.
Okay. Let's talk then, Salil, about what is happening around us today. And the big change that's happened between the time that you announced your results and now is the fact that Donald Trump is finally in the White House and is signing a spate of executive orders. In fact, just this morning, he's also talked about a new AI infrastructure fund with Larry Ellison and Masayoshi Son and Sam Altman being part of that. When you hear what is happening in the US at this point in time, when you look at the possibility of deregulation, which has been promised for sectors like BFSI, what will that mean? You've upped your guidance already, but do you believe that there is a potential for a further upward revision on the back of the changes that are likely to come in?
So absolutely, I think to hear about 500 billion.
Yes.
I mean, it's staggering what type of thinking that they have in the US for technology and infrastructure. And this is all AI driven. You've also seen lots of other CapEx announcements over time. We see a lot of discussion on regulations coming down. The sense we get from sort of people we talk to, and even here the last 2 days, the general view is the economy in the US will do better. We have seen in the past when the US or Western Europe economies start to do better, our business starts to grow. So we have two axes, as you know. One is where we do more cost and efficiency, and the other is a lot of growth and digital.
Right.
And so that will start to play out more. My sense is if that US economy growth and so on happens, which is what it's now looking like, we will see more and more growth overall for Infosys as well.
So possible upward revision of the guidance that you already revised higher?
Well, there, as you know, we only go quarter by quarter. We will have the end of the year, so there'll be next year. But we did increase our guidance for this year because of what are the signs. Financial services was good, US and Europe, and then retail in US started to look better than the previous quarter. So the thing with the US, as the economy, all these things sort of filtered into the economy, we will see how it plays out.
Yeah, but specifically as far as the BFSI side is concerned, because I'm picking up a lot of optimism from the CEOs that we speak to. In fact, Brian Moynihan at Bank of America was here also talking about the possibility of deregulation. What are you hearing from them at this point in time on what they will perhaps need?
So I mean, you've seen their results are just incredible for some of the large US banks. Even the European banks' results, we've seen over the last couple of quarters improving. My sense, at least what we hear from our clients in financial services, they will continue to focus on cost and efficiency, which they want to do. But with this, there's much more investment in new technology, which can help them drive growth. So drive growth, for example, we could consider building, as an example, an agent that can help them do analysis of credit, that can help them do analysis of customer segmentation. So there's so much new generative AI work that can happen. And as they'll start to spend more, which will help them drive growth, we will hopefully support them.
One of the other interesting conversations that I've been having with some of your peers seems to suggest that perhaps Indian IT services also finds itself at an inflection point today as the world is moving into a generative AI driven world. Now, in that context, the advantage that Indian IT services has enjoyed is being able to deliver efficiency at scale. But now, will you need to be much more IP-led and IP-driven? And what will that mean as far as changing the DNA of your organizations is concerned?
So no question there's going to be much more focus on whether we call it IP or innovation. So there is definitely, with the way generative AI is moving, let's say to build a small language model, we've put together an innovative approach. It's actually an approach which takes existing technology and builds it on existing platforms at a much lower cost than a large language model. So that innovation in agents, innovation in where it can be applied will continue to increase. And that's something I think we've been doing at Infosys for some time. So my sense is that's a good sign.
Yeah.
Now, more of that will happen as we go through the next phase. And we will continue to have that, let's say, the intense focus on cost and efficiency. So both of those axes will go well.
But will you need to speed up on the innovation side? And what will that mean in terms of the capital required, the capital deployment that will be needed to push this agenda forward?
So for us, we are still, as you know, very much what they call a light asset or light business in that sense. So our investment, even this small language model we built, is significantly smaller, the investment, than what we have read and heard about what large language models take or other things take.
Yeah.
So our focus is going to be more on making those innovations, but without doing something that will stretch us on our balance sheet. We have a good balance sheet, but we are not in a position to do these massive capital investments. And we will work within that balance sheet to make that innovation happen.
But will that be enough? And I understand the constraints as far as the balance sheet is concerned, but will that be enough is the question, given the fact that we're seeing such rapid moves in technology and such a fiercely competitive space. I mean, you're talking about agents. Literally everyone here is pitching the same story. Agentic AI is the buzzword from Salesforce to you. Everyone's talking about it. And doing it.
And yeah, no, absolutely. I think we have to find ways to innovate constantly in that environment. So the thing that we, over the years at Infosys, have done well is make sure we have a trained workforce that can work on different technologies. Typically, with a lot of these other technologies, some will work well and some won't. So already today, as you're aware, in the foundation model world, we basically coalesce to maybe 3 or 4 that are doing well. Last year when we spoke, there were at least 15, 20 in the mix, and all of them have spent massive amounts. So our objective is really to work with all of them and make sure that our employees are skilled enough to work on the new ones that come up.
Okay. Let's move on, and we have HDFC Bank that has reported its numbers just a short while ago. Net profit 16,736 crores. And I think seeing a slight bit of an increase on a year-on-year basis. But what is it versus a poll? What are the numbers looking like? Abhishek is joining in with us to give us details on that front. Abhishek, how is HDFC Bank looking like? What is it versus the CNBC-TV18 poll?
Well, it's a mixed bag to begin with. The PNL is largely in line with our poll. The calculation might show there is an increase in net interest margin on a sequential basis because the NII growth is at 1.8% while the loan growth is about 0.9%. So a slight increase in margin could be, on calculation basis is what might be seen. Provisions have increased 16.8% quarter on quarter, and this is not sufficient looking at the asset quality of the bank. So gross NPA in absolute value has increased by 5.2% sequentially. Net NPA has increased by 12.4% sequentially. This means that the PCR or provision coverage ratio of the bank has declined. My calculation shows that, PCR or provision coverage ratio is down to 67.8% versus around 70% that they had, in the previous quarter. So around 200 to 225 basis point, there is a drop in the PCR, that is provision coverage ratio over there. Otherwise, seasonality might have kicked in this time with respect to asset quality. We know that, in Q3, they do see agri and NPAs coming in for large banks like HDFC Bank and ICICI Bank as well. So there is a hiccup in asset quality, but PCR decline is a key negative that I would take from the results. In an otherwise, a stable set of numbers with respect to the poll, with respect to NII as well as PAT. Back to you.
Okay, Abhishek, thank you so much for that. Abhishek indicating that, mixed set of numbers that's come in, but PCR ratio, that's the concern that he's highlighted. But let's also bring on board now Prakash Diwan, who's joining in with us to discuss the numbers for HDFC Bank. Prakash, good afternoon. And, can you firstly just talk to us about how you are reading the numbers for HDFC Bank? And I seeing a growth of 8%, a bit of a minor increase in terms of the asset quality that you're seeing. NPA, GNPAs, that's seen a bit of a minor increase, and Abhishek was highlighting the PCR ratio. That's where he's finding concern. What are you picking up right now?
So I do agree. There's nothing much in the numbers to kind of get excited about. But what's important for us to look at and understand from HDFC numbers is that the bank started off working towards a much more healthier credit deposit ratio. And if that is something which is going as per plan in terms of bringing it within a tolerable limit as per the regulators, that is going to be the primary area of this thing concern. The NIM growth, even in the case of Kotak, you saw was a marginal improvement because it's kind of coming in from a lower quantum of loans but better quality. The PCR ratio is probably a preparation for some sort of a bottoming out of whatever asset quality concerns that the bank would have, so that come April and the new financial year, when growth is likely to come back post the budget and maybe a interest rate cut, things will look very different and they will have a platform to grow rapidly from. So I think it's a quarter that's gone into that's like a work in progress towards the next financial year preparation. And from that perspective, the market won't get disappointed too much. There's nothing very outwardly disappointing.
Well, we also have Ashutosh Mishra joining in. Ashutosh, inline set of numbers, the net interest margin on my calculation might have expanded quarter on quarter. So stability in net interest margin would be a key positive for HDFC Bank?
Yes, so NIM expansion is a key positive, I think. And what we have seen is that they are now clearly focusing on balances consolidation, which they have indicated. So loan growth is relatively low on quarter basis compared to deposit growth. So that's what bank is indicating. And I think other important point will be to look at what is the quality of deposit franchise and how long they want to extend this gap between deposit and credit growth going forward from here.
Well, Prakash Diwan, we have seen other banks, see a decline in the net interest margin. And across industry, it's a fact that, cost of funds is on the higher side in this interest rate scenario. However, despite losing out on CD ratio, they have been able to improve their net interest margin. Is it a key positive for you?
Yes, it is. So as I said, their primary focus to rein in the credit deposit ratio is at work. But at the same time, if you have this marginal improvement in NIMs, as you rightly said, is definitely a positive, because remember, they will only look at expanding dramatically or rapidly in the next financial year once the balance sheet is restored to meet the basic requirement on most parameters. And for HDFC Bank, the cost of deposit is something which probably is tending to be lower than others, but it's the quantum of deposits that is going to be a concern for most of them as credit growth comes in. So I think they are preparing for that, and that's why you see the tweak in the PCR as well. But otherwise, quite okay numbers, nothing disappointing. It will only restore more confidence, and I'm sure the conference call will bring up a lot of the salience from these numbers, which otherwise look very staid.
Well, yes, Prakash, if you take a look, the deposit growth is close to 2.5% quarter on quarter, while the interest expenses are just 3.3% on a sequential basis. What's actually worked on the net interest margin is that the interest yield, on the yield side, it's been better. The 2.7% growth in interest income versus less than 1% growth on the advances front. Ashutosh, what do you make of the valuations that HDFC Bank has of now, and what is your target price?
So surely what we clearly see is that the valuation is still remain very attractive for the banks, and probably like Prakash indicated that the FY26 may be the good year for the bank given the base which is getting formed in this year. So backed by that, I clearly see like these banks will continue to deliver a good number in FY26. FY25 will be most probably was out here. Our TP is near to 2,100 rupees. Out there, and we have currently buy rating on the bank.
Okay, Ashutosh as well as Prakash, thank you so much for joining in with us, and Abhishek also, thank you so much for joining in with us to give us those details on HDFC Bank. That was HDFC Bank almost trading near the day's highest point. On that note, we're going to slip into a very short break, because after the break, we'll come back and maybe talk about Tata Communications numbers that are just reported right now flashing on your screens, so don't go anywhere.
Seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries. And China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life.
Welcome back to your stocks on CNBC-TV18. We have Tata Communication that also reported its numbers, so let's keep an eye out on that. When you're looking at it in terms of numbers that have come in from Tata Communication, net profits of the company coming in at 236 crores versus just 45 crores last time. Last year is what we're looking at. We have margins at 20.4% versus 20.6%, quite flattish on a year-on-year basis. And in terms of EBITDA, that's seeing a growth of around 2.4%. on a year-on-year basis, 1,181 crores. We saw a bit of a spike up coming in and then a fall coming in for Tata Communications in terms of numbers. 4% uptick in terms of revenue is what we are watching out for. So yes, that's the numbers that have come in for Tata Communications this time. The stock is seen a bit of a red again on the screen, tried to make a recovery but doesn't seem like it's holding on. So we'll have to watch out in terms of the estimates of what is coming for Tata Communication. Okay, that's all that we have in terms of Tata Communication, but that's all the time we have on this edition of Your Stocks on CNBC TV18 as well. Thank you so much for tuning in, and don't go anywhere. You have closing bell next to take you through the last hour of trade.
We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty.
The Taiwanese index is up over 1%. The Nikkei too is trading with gains of over 1.5%.
Hopefully, over the next 18 months, we will see a new product coming from the JSW saddle.
The support comes in at about 22,500, 22,800 in that zone.
So we should head towards a PAT profitability soon.
In few quarters is what you have to say.
I have to say that.
So 23,080 is where we are at, about 0.25% higher.
We don't really have a full handle in terms of what the implications of some of these global policies.
We are expecting a rate cut of about 25 bips. That will have an impact of 10 bips on the cost of borrowing.
After Tuesday's brutal sell-off,
it's a tepid recovery. So we're in the green for the benchmark indices.
I think continued strong momentum and continued strong innovation with hopefully some big breakthrough discoveries along the way.
Plenty of results today. It's a big day, especially as far as some of the heavyweights are concerned.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Okay, there is a recovery afoot and it's meaningful. Let's hope it stays and doesn't fade away. This is the last hour coming up. That was the day so far, and what you're seeing now has little bearing to what you saw, at least on the Nifty and the Nifty Bank, what you saw about an hour back even, because it started at about 210. So it's all happened in the last 20 minutes. The Nifty in the last 20 is up 100. The Nifty Bank is up 400 points. I'm Prashant. With me, my colleague Surabhi and Reema. Guys, hi. Afternoon.
Hi, and the mid-cap index is up 400 points from the lows.
Yeah, so there's been some recovery, and thank God for that. And actually what seems to be helping is the fact... okay, Reema, over to you.
Well, but it's not bad, right? IT, of course, has been leading from the front since morning. The Nifty IT index is up. But as we speak, Nigel, the benchmark indices are up close. Sorry, Nigel's also. It's just us right now, Prashant.
Anyway, I mean, television. What can we say? But it's a sharp move higher that we're seeing in the last 20 minutes. There you go. I mean, that's essentially what we're talking about. But we're not used to sharp moves up and down. And for example, yesterday was a case in point. Hugely volatile day. It's not been volatile. So far, it was one way till about 210. And since then, it's actually picked up a little bit on the upside. So there you go. But I have to say that broader markets are really getting crushed and smashed. So there is some recovery, as Reema said, in the mid-cap index, some recovery in the small-cap index, but they're still broadly down 2% on the small-cap, 2.33% down on the small-cap, even after the recovery. And the mid-cap index is down 2%. Market breadth is 4:1 in favor of declines. And, we'll get into these talks in just a bit. But there is pressure, a lot of pressure in the broader markets in mid and small caps. Surabhi's mic is back.
I'm back, guys, back again. So, before I break into the song, but on that mid-cap pressure, that's a picture, yes, while there's recovery from the lows, it's been, again, a crunching, grueling session, right? And just pull up some of the stocks and see the kind of price damage that's going on. Of course, there are names like Keynes down about 11.5. Look at the recent listing from the renewable space where there was so much excitement. Look at Vari. Vari is down about 10 to 11%. Look at names like Premier Energy is down 12%. A lot of the capital market plays where there's been a lot of frenzy and a lot of course, wealth creation as well. Nuvama would be a case in point under pressure today. The EMS space, it's actually not just Keynes. Again, PG Electroplast is down. Again, a couple of the other names are down. And then you have the earnings culprits where absolutely there's no room for error. And India Mart would be an example, which has also been down 7-8% right from the start. Actually, speaking of pressure, additional pressure on earnings, there's Cyient DLM, 14% of a cut on Cyient DLM. India Mart I mentioned. India Cements, where there's been pressure on profitability. The market's in no mood to spare. 8% down on those stocks. And of course, the saga on Swiggy continues, just pulling up Zomato as well. Yeah, no respite. Zomato's off the lows for sure. In the morning, these stocks were down 3-4%. But even then, the color's still been red. And it's been tough for the broader markets.
So, take Nugent, for instance, right? It came out with numbers on Monday. On Tuesday, the stock was down 18%. And today the stock is down another 8%. And this is a company which is growing at 18% year on year in Q3. It's just that in the last couple of quarters, the company has seen a growth in excess of 20%. So 18 is not bad, but it's not 20. And the stock has fallen nearly 30% in 2 days. And another example, Polycab, where the numbers were actually good. And the management said in their press release that they will surpass the FY26 top-line guidance of 20,000 in FY25 itself. They've been guiding up in the last couple of management interviews, but here they've come out and said that the stock has recovered from the lows, but still down close to about 5%. There was a margin beat also in Q3, strong management commentary, but the stock initially sold off.
No, maybe just a few more names, right? The big volume-led sort of losses. Put up Vari Energy if you can. It's down 11%. By the way, Vari by far is the #1 volume-led loser right now. as far as trade goes. ICICI Pru has been down from the word go. Some recovery, 1.5%, but still 6% cut there. Number 2 volume traded loser. Keynes is down 12%. It's a big one, 52.62 on Keynes Technologies. India Mart, of course, it was down from the word go. It's still down 7. Rima mentioned Newgen and Polycab. Look at something like a Lodha, and we'll talk about more of these names with news flow in a bit. 6.5 gone on Lodha. Stocks at about 1,073. That's Macrotech. India Cements is a big loser, 9%. And these have all got humongous volumes. So 318 on India Cements. Premier Energy is another one, 12% knock, along with Vari. I mean, fairly recent listings. So stocks at about 1,034. That is Premier Energy. PG Electroplast was a big loser yesterday, along with Keynes and Dixon. It's down another 8.5%. PG Electroplast. NetWeb is down 11%. NetWeb reported, I think, numbers early on this week. Had a bit of a up and down, but it's down to about 1,908. And along with Lodha, I mean, the real estate pack came under severe selling pressure yesterday. Look at Godrej Properties, which is down about 6% or so. And I can go on. I mean, this is not half the list of big volumes that you're seeing on the downside. Usually, even if declines outnumber advances, when the market was in an up kind of a phase, volumes were with what was going up. That's not the case anymore. There is a fair bit of sort of volume on the downside as well. But programming continues from Davos. My colleague Shireen is in conversation with the top banker of the country, Mrs. C.S. Sethi, is chairman of State Bank of India. Let's cut across.
Welcome back. You're watching our continuing conversations here at Davos 2025. A lot of the conversations, of course, focus on President Trump. They also focus on what his policies could mean potentially for inflation and what that could lead the Fed to do or not do. The conversations, of course, also around technology and technology use by banks. Joining us now is the chairperson of India's largest bank, State Bank of India, Mr. C.S. Sethi. Always a pleasure. Thanks so much for joining us here on CNBC-TV18. Let's get the bread and butter stuff out of the way, sir. As I pointed out, conversations around inflation, interest rates in the US, but what about back home? The MPC meets in February. Do you expect a rate cut?
Broadly, I think our house view is that there will be a rate cut in February. There are some important measures the regulator has taken of late, particularly to infuse additional liquidity.
Has it helped?
Particularly daily VRR definitely had sent signal to the market that the liquidity support from the central bank will always be available. We are able to see the change in the market perception in terms of the liquidity availability. While the system liquidity is still tight and is deficit, but the availability on tap liquidity from RBI definitely is a good indicator. But I think our view is that the way the global economy, particularly in the developed economies, is behaving, and the rate cut seems to be imminent in February.
A rate cut is imminent in February. You talked about tight liquidity, sir. Let me also ask you about offtake at this point in time. What is the indication that you're getting? Because there has been visible signs of a slowdown across different sectors, particularly on the consumption side. What are you seeing at this point?
So there seems to be some convergence in the credit growth towards the deposit growth. If you see, I think we've been talking about lower deposit growth rate, not in tandem with the credit growth. And I mentioned earlier also, I think there will be some equilibrium sometime. And the December numbers indicate that there seems to be some convergence towards the deposit growth rate. I think broadly they are at the 12% rate, both deposits as well as loans. But you're right, I think the loan growth predominantly continues to be personal loans. While we have some degrowth in the at the system level, of course, I can't talk about SBI because our numbers are due sometime in first week of February. But I think the results, whatever we have seen from the banking system so far, indicates that there is some slowness on the unsecured personal loans, but I think home loans are doing pretty well in the sense the growth rate in advances is still coming from the retail segment, whether it is a personal retail Our SME, our agriculture, corporate is still, I think, slower on that.
Still slower?
Yeah.
You know, you were feeling confident when we last spoke about a pickup in private capex. It's still elusive?
Private capex is happening in only certain sectors. I think the core sector, as I mentioned earlier, still is not investing as much as we have expected them to. So particularly on the steel, cement, while the capacity utilization have reached 75%.
Yeah.
I think they're all looking at how the external sector, external environment improves, or how it is going to behave, particularly on the trade tariff in the new presidency in the US.
Yes.
How it is going to impact the overall global economy. I think everybody seems to be watchful on that front.
So it continues to be wait and watch as far as large private capex is concerned at this point in time.
Particularly on the core.
In the core sector,
side.
yes.
Yeah.
Let me ask you about the unsecured side, sir, because that has been, of course, a red flag that the RBI has raised. I was having a conversation with some bankers. The possibility of slippages moving from the unsecured side to the secure side, is that something that you're watchful of? Are you concerned also?
Even on the overall level also, I think it has not reached a stage where we need to really get alarmed about it. Obviously, the proactive steps what RBI has taken has reduced the unsecured personal loan, obviously. But I don't see the contagion effect coming in from unsecured to secured. Obviously, the underwriting standards have to improve. One great systemic improvement which we mentioned earlier also in terms of the frequent updation of the credit history.
Right.
Now from 15th January onwards, the reporting to the credit information companies is moving to a fortnightly basis, which means that the frequent updation will help system to understand what is the leverage at the individual level, so that I think the multiple lending to the same individual or individual families will be avoided.
Let's talk about possible monetization plans in 2025 or beyond. The stake that you have as far as Yes Bank is concerned, any plans on that? Any thoughts at this point in time?
Not at this time.
No?
No developments which I can really share with you.
So nothing on the anvil, nothing imminent?
Nothing on the anvil.
Nothing on the anvil. What about monetizing YONO? And I know I've asked you this question previously as well. Do you feel more ready in an environment that we are in today where everybody is betting on digitization and AI? Any plans to monetize YONO?
The more than monetizing, we would like to leverage the YONO app. I think the great potential the app itself has to strengthen our own ability to give the services to our customers. We are focusing on that first, and probably the monetization or decoupling from our own system will come
happen later.
But in the 2.0, we are trying to build elements where some of the elements can be utilized for the overall banking system. So if not fully on the app basis, I think more in terms of the elements of YONO could be used elsewhere.
You're spending a lot of your time here in Davos focusing on what's happening in AI. What's the plan on that front as far as SBI is concerned in terms of adoption?
I think, one thing which is coming out clearly that the new technology frontier, in the last 2 years we've been talking about AI, and it's time for us to implement AI and use cases are to be identified. We have done that basic homework. And we have identified essentially in terms of personalizing our customer offerings could be one of the major use case. We are building that into the YONO itself. The other one is that we are strengthening our risk management practices, where particularly in the customer protection, where AI can be deployed. There's a humongous amount of discussion at the Davos today. I think AI is being talked about, AI at scale, both in terms of productivity and more importantly, I think one element which attracted my attention in terms of the change management, what we need to do among the employees when we are rolling out AI in a big way. I think these are some of the takeaways for me.
So any thoughts on being able to incorporate some of that at SBI?
Obviously, I think we have already started doing that. and now we will be scaling it up at the enterprise level.
So let me end then by asking you, you've got a new governor at the Reserve Bank. You've already told us that you expect a rate cut from the MPC in February. What else do you believe is the need of the hour today, given the external environment as well as the domestic environment, in terms of additional measures, especially as far as liquidity is concerned?
No, I think central bank is, in fact, I shared my thoughts with the governor also. Particularly the signaling what had happened through the daily VRRs and also the swaps which they're planning, I think is a good indicator of the support what central bank is providing to the banking system. There are no complaints on that front.
Okay, Mr. Sethi, always a pleasure to speak with you. Thank you so much for joining us. That is India's largest banker joining us here in Davos. A rate cut is the call there from SBI in February. We'll have to wait to see whether the MPC delivers, but more importantly, SBI focusing on more digital adoption, AI-led development and change for India's largest bank as well. We will take a break. We'll be joined by the Chief Minister of Telangana right after this. Don't go anywhere. We're back in a moment.
Okay, all right, Shireen, thank you very much for that. In fact, not going into the break, SBI making a lot of headlines saying that indeed there is some slowdown, and the pickup in private capex, there's not much sign of that just yet, barring a few large sectors like cement and steel. Mr. Sethi saying that corporate India seems to be in wait and watch mode. And AI is the buzzword everywhere, including at State Bank of India as well. Speaking of banks, by the way, pull up HDFC Bank. From what we sort of have at hand right now, it seems the performance is more or less in line. There has been no major hiccup in asset quality or any big ballooning of NPAs. Or we have to still wait by to see the exact picture on margins as well as slippages. But the market seems to have liked what it's got, because the numbers are more or less being delivered in line with the estimates. More on HDFC Bank as well in just a bit. Overall, 100 points up on the Nifty. So what trades can you look at now in the last leg of trade? We've got Mitesh joining in as always. Mitesh, afternoon once again. So tell us, how are you looking at things? Nifty, Bank Nifty, individual stocks? Mitesh, you're on mute.
Sorry for that. I believe that the declining movement might be, done with, and we might would have made, some kind of a low. And therefore, the idea is that cover your shorts, look at markets, look at stocks which are doing some reversal on the hourly to hourly charts, and I think that's where trading could be done. So getting beyond 23,100 again as we approach the closing, to me suggests that we are back to the range of 23,100, 350. And now, since we are coming back from the lower end of the range, I think we'll explore some ideas on the long side. So I have a buy on the TCS with the stop below 4,100 for targets of 4,250. Ambuja Cement is another one. That's a buy with the stop at about 525 for targets of 560.
Mitesh, that's interesting. Are you saying that the decline may be done for now?
That's right.
And, I mean, done, or just a pause, maybe a decent bounce, and then what's the
so in the short term, Prashant, you're back to the range. I'm not saying that that we have kind of negated the entire declining trend, but at least in the short term, it looks like that we might be done with the short term decline. So we may have made a important low in the short term. That's the idea.
And bounce till where?
So back to the upper end of the range, which is 23,350, 400 zones.
Okay, all right, fair enough. We'll come back to you, Mitesh, for more in just a bit. But back to Shireen in Davos, who's in conversation with Revanth Reddy, Chief Minister of Telangana, on the sidelines of the World Economic Forum. Let's cut across.
Welcome back. You're continuing to watch our conversations here at Davos 2025. As I've been pointing out, there is a large Indian delegation here being represented both by the central government but also by India's states. You have the state of Telangana being represented for the second time around by the Chief Minister, Mr. Revanth Reddy, and he joins us now here on CNBC-TV18. Mr. Reddy, many thanks for joining us. We spoke last year while you were here in Davos, and you had given us a number of 40,000 crores in terms of MOUs that you had been able to put together in your last visit. How much of that is actually materialized?
So actually we have signed with 14 companies and 17 projects. Out of 17, 16 projects are under pipeline. That's how progress is going on. So last time we have succeeded to attract investment to Telangana. So this time we are expecting more and more. So our success story will be there.
Well, speaking of the success story as well as drawing in more investment and investors, what are people asking you today in terms of the opportunities that you're pitching to foreign investors specifically? What is the ask in terms of what they want from the government by way of support, by way of approvals? What's the feedback that you're getting from them?
So most of the time the investors are worried about policies, particularly changeover government. And second thing, the protection of their investments. So my state is entrepreneur state. My predecessors like Chandrababu Naidu, YSR or BRS, now Revant Reddy, we are on the same page for policies for attracting investments.
So politics will not get in the way of policy continuity?
No. I wanted to tell you one thing. Mr. P.V. Narasimha Rao, who was Prime Minister of India, who has made all these liberation policies.
Yes.
So we know how to attract investment. We know how to protect their investments. So Telangana is the place for investments. We know how to do politics and how to attract investments. So
and keep the two separate.
Two separate. So no one is need not to worry about their investments or policies. So we are more aggressive on liberalizing our policies.
Aggressively liberalizing policies. Let's talk about some of the areas in specific that you're focusing on. Electric vehicles and electric mobility is a big focus area for the state of Telangana. And I don't know how many people know this, but in terms of penetration, it is now the #1, I believe.
Yes, India's #1. I have taken a conscious decision. I have removed all taxes and everything for EV vehicles, and moreover I have divided into 3 areas my Telangana. One is core urban region, the other one is semi-urban region, third one is rural. The core urban area is having 3,000 diesel buses are there to public transportation. I have given instructions to my people to remove all these diesel buses to send other rural area to improve the core urban region. So we have introduced the EV vehicles in Hyderabad. So we are more focusing on these EV vehicles in urban region.
What about the charging infrastructure, Mr. Reddy? Because that has often been a constraint to widen EV penetration. What is the state doing about that?
So we have an exclusive plan for that. Almost wherever government properties are there, we are allocating for charging, and we are calling for PPP model, public-private partnership, to improve the ecosystem. So next 1 year we are going to improve like anything.
Okay, so next 1 year we should expect improvement through the PPP route on the charging infrastructure. Any targets that you've set in terms of what capacity you will want to set up?
Yeah, our people are working on those lines. So my Hyderabad, the core urban region population is almost 13 million. So based on that vehicle traffic and other things, we wanted to improve our ecosystem based on the studies. So people are doing the studies, and shortly we are going to announce our decisions.
Well, one of the advantages that the state enjoys is the fact that it has been part of the tech workforce and the knowledge economy, and it's very well positioned there. You have a lot of GCCs, the Global Capability Centers, in your state as well. What's the expectation in terms of growing that further? Is there anything specific that you will be doing? Any particular focus areas? Life sciences, of course, is a big play for the state. Anything else that you will focus on specifically?
We are focusing more on AI and green energy and GCC centers, anyway, data centers also. Most of the world's leading data centers are coming to Hyderabad. We are going to sign more MOUs in Davos only for data centers. So we are focusing AI, data centers, and green energy. These are the main focused areas. We are focusing on those.
Reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be on the momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today.
Welcome back. Well, the market's looking up, and I think you need the market to look up. It's been too many days of non-stop pain and looking down and just red all over. So at least today, in that too only for the Nifty. I mean, I can't say that for broader markets. There is a little bit of green which is emerging. So that is good to see. Now, Sanjay Parekh is with us, founder and CIO of Soham Asset Managers. Sanjay, good to have you with us here. Thank you for your time. Appreciate it. I mean, you're a bottom-up investor, and you're always on the lookout for interesting new ideas that you can add to your portfolio. And I see that you have, or maybe I'm mistaken, you've added a new name in the portfolio. Pondy Oxides and Chemicals, Sanjay. I think it's a new one. If it's not, please correct me and run us through what you're seeing here with this one.
Yeah, so this is into a similar business, of course, smaller in size, but similar to Gravita. The promoters have been there in this for long, 25 years. But now, in terms of meaningful critical size, it's still a micro cap company. So you do have an execution risk, but here they are into lead recycling. And then now slowly they will also, of course, they are as a part of the process, you also recycle plastic. And then they will also move up into aluminum and other areas. We know the norms are getting more stringent for recycling. For battery manufacturers, of the 1,000 batteries that they make, 550 have to be compulsory recycled. This will go to 850. So they have to see that if they sell to the dealer and dealer says to customer, they have somehow to get back 550 of the 1,000 they sell. So each of them, and it's certainly a supply chain business. I mean, you have to manage supply chain very, very well. And you source a lot of scrap also from overseas. So these are the companies who source it from 60, 70 countries and then recycle. And the risk management has to be very important because the output is lead or plastic, in this case more lead. So you need to manage risk quite well. And the margins are not very high, but the asset turns are very high. So here is where we liked it. The market cap is 2,000 crores. It's a debt-free company. As I said, it's a micro-cap company which will do an EBIT of 100 crores this year, but has a potential to do more like, if they execute right, it could be 200 crores next year and then more like 300 crores. And if they get it, I mean, they are clearly expanding the capacity. So it has a potential to become like 450, 500 crore EBITDA company in FY28 and less financial risk. Execution is key, expanding capacities. They're setting up a new plant in Mundra as well, and also a continuous process plant. So we think that they have a right to win and it's reasonably valued. So we do look for such investments which are, and in mid and small cap, our return threshold is larger and this fit the bill quite well.
Any other purchases that you've done, Sanjay, in the last 1 month? Because you were sitting on a fair amount of cash, considering you were cautious on the market. And a quick word on EMS companies. They've all fallen 20% in the last couple of days, whether it's Syrma, Dixon, PG Electroplast. Any of them make it to your buy list?
Oh, they're still not cheap. We still find them expensive. And, we are GARP investors. Our portfolio price earning is 15 times. So on the way up, some of these we missed out. Of course, Syrma, we used to own it we bought it at 280, but we sold early in hindsight at 365. We were way early to buy it. But we didn't understand the valuation. And at our target price, we thought it was overvalued and we sold off. So we're following this opportunity very closely, but as yet we are yet not comfortable on valuation. In terms of new additions, we just added, after a very long time, HDFC Life, where we think if this, the regulations around the banking, the distribution through banking segment, if it's not capped, then I think it's very, very reasonable now. You take on any the DCF value, embedded value plus the future value, it's very reasonable, a very safe bet. They've demonstrated their earnings growth also. It's a little tepid, but very, very well in control. After 2.5 years of underperformance, we think there is clear opportunity here. So that's what we have added. And we've just added a little bit of DLF. After this fall, we think while there could be near-term uncertainty because of the market fall, but it's a very classic play of a super premium segment if you want to participate. And they have all the land for the next 15 years. It's a debt-free company. They have a rental business. They have a core business of residential. And even in the standalone company, there's some rental piece which will grow. So we believe it's a safe bet again. And here they don't have to go to purchase land and do JDAs. They clearly have land for the 15 to 20 years. And they have a very, very premium segment, which they're just finishing Camellias and now they launched Dahlias, which are at a super segment, super luxury at 1,20,000 per square feet. So I think it's a very large cash flow that they can generate. And hence we think it could be a good compounder from here, and we've added in a small way. But the cycle is important, and we need to watch if this market's being weaker is affecting the real estate cycle, which is a possibility.
Yeah, absolutely. And that, that's a word of caution, which is well taken. Stay on, Sanjay. We have more questions for you in just a bit. But since you brought up real estate, DLF, of course, is the stock that you like. Now, there's another one that seems to be getting into the eye of a storm, and I'm talking about macro-tech developers. Now, the stock has been down in trade after Abhishek Lodha has sued his younger brother, Abhinandan Lodha, in the Bombay High Court. We have Vinny joining in with the details. 6% down. I mean, the market mood also is very, very cautious. But what are the details of this case that we know as of now, Vinny?
Absolutely. So do not forget that this is a very old case that has been going on after that split in 2015, and then the agreement came in 2017. And since then, something or the other has been going on. 2023 also, there were issues and agreements that were coming in. Now, in the recent case, what they've said is Abhishek Lodha has actually filed for a trademark suit against Abhinandan Lodha. This is a 5,000 crore trademark suit in the Bombay High Court. Abhinandan Lodha, he is the founder of House of Abhinandan Lodha, and obviously this is coming after the split. Abhishek Lodha obviously is a part of macro-tech developers. Abhinandan Lodha had started his own thing that was called House of Abhinandan Lodha. So now what is the lawsuit about is using the word Lodha or Lodha Group by Abhinandan Lodha. That has to be restricted. That is what the case is coming in from Abhishek Lodha. The final hearing, what we're watching out for, is going to be on the 27th of January, 2:30 p.m. is what it's scheduled for. So let's keep an eye out on that. It's a very old case that has been going on, and now 5,000 crores is the amount that they're filing the suit for.
Okay, all right, got it. Thanks for the update, Vinny. Some macro-tech under pressure today because those are additional reasons as well. Sanjay, to go back to the point, you said that, DLF is a play and obviously the ultimate premium end of luxury. But is that a call you're restricting only to, say, the real estate space, or would you look to play that theme through other pockets of the market? Maybe, I don't know, jewelry stocks, or we don't have, super premium auto listed, so to speak. But is there any other way in which you'd play that?
Yeah, so we're watching each of them, even Titan we're watching, but we're worried about this lab grown. And the youngster in our office clearly have preference for lab grown. So we are a little worried about, it's a great company and I'm sure they'll navigate it, but we're still watching this space if there could be any displacement or disruption by lab grown on the studded jewelry. So that is one piece that we're watching, but otherwise it's a great company.
What about something like, Indian hotels, again, talking about the premium end of hospitality?
Yeah, but it's a different business, right? In terms of almost it's like a treadmill where you have occupancy and it's, but Indian hotels, it's great, but we just saw it and the valuations are really not now, they're quite rich. So that's where for us, the price value gap that we see and that we found at least even in real estate plays, this 40, 50, 60% premium to NAV, we are very, very uncomfortable, So we bought Century way early at 700 and then we sold off because we thought market is getting euphoric of giving a premium to NAV, which we just couldn't understand. But after this fall now, almost they are near to NAV or low. Some of them are now lower than a NAV, which makes sense now that you have a visible NAV. You, of course, would have assumptions around land bank and everything. But DLF we like because there's a real cash flow generation that they can do. In the DCCDL, there was 6,000 crore rent opportunity. They have a very good understanding of the consumer. It's debt-free company. In the main parent company, their last year operating cash flow was 4,500 crores. This we think that in 3-4 years, and this is assuming cycle is steady, it doesn't go bad, which is what we think that, we're not going to go way down. If we think that is the possibility, then this could have a 7,000-8,000 crore operating cash flow for the parent. So such sort of cash flows in 3-4 years through the rental company and through the parent company, if they can generate over 3-4 years, this could be a meaningful compounder over next 3-4 years. That's the reason we have added, and that too I'm saying it's in a small way because we are worried about the cycle in the near term.
Just a broader question, Sanjay. When you look at the market and how prices have fallen, do you wish you had more cash to deploy? Or is the market...
As always, right? So, and all our investments in our fund, everything of our family. So it's always, in hindsight, you feel you had more cash, but today also we have 7% cash because we're getting inflows. But the good part is, this large cap bias that we had, it does get vindicated that at least on the volatility side, our portfolio is cyclical, so it is a little more volatile. It has less defensives, but then compared to some of the mid and small cap, it does help to have our strategy, and that's where we have indicated. And we genuinely believe from your, price-wise, we are done. I mean, you can never say never, but by and large, we think that price risk is gone. The expectations have to be tempered, and we could have a back-ended return. But from here, 10 to 12% return is very, very likely for Indian markets. Now it's getting really comfortable to look into stocks in Nifty. A lot of them.
You own Aurobindo as well. You'd say that's the best placed pharma name? I mean, prices also come off sharply now.
Yeah, so of course you have the issue of perception of they're not generating the free cash flow over years. And it's a very valid argument. Now the capex is behind them. It's almost valued like a commodity. And historically it's been low. So that's been the case. So the change is that with the setup of this new Penji plant, as they ramp up, and the capex is, let's say, in the next 2-3 years, what we hear from them is going to be tepid ex-acquisitions, and I hope that's the case. And in that case, the free cash flow generation will be meaningful. And we've seen that earlier also, that even an expectation of free cash flow generation happens over future, the market takes note of it. And that is what we see even in Bharti that we added. As yet, the free cash flow generation is minimal. But the expectation of Bharti ability to generate free cash is what is giving the confidence, So this is what I think could change in Aurobindo, but we still have to watch, because if you see the last 7-8 years, because of the growth phase they were at towards acquisition and organic capex, they have really not generated free cash flow. So we have to watch whether they're able to generate 5,000 crore of free cash flow in 1 year. And if that is the case, we strongly feel that there could be a re-rating.
By the way, we're getting some more details on HDFC Bank. That's a 13% rise in slippages quarter on quarter that the bank has, showed up. And you can see a little bit of a tapering off of the stock from the top. I'm looking at the credit cost as well. Credit cost has moved up sequentially from 0.43% to 0.5%. So this is something the market will take note of. It's still stable. I mean, if you look at it year on year, it's not too bad. But just Q2 over Q3, there is a bit of an increase in the credit cost as well. Those are some of the internals that are coming in. But otherwise, on the margin front, they seem to be fine. They've managed about 3.4% net interest margin, which is more or less absolutely steady compared to last year. And it's a notch higher compared to the September quarter. Let's see how the stock performs right now. A little volatile. Sanjay, let's cap it off with your view on these large banks. And it's so different, right, for different lenders. We look at Kotak's reaction, that 10% massive move. There's HDFC where the market is being more measured. What would you do with the larger lenders? Would you buy anything now?
Yeah. So, we have all of them. You can see in our portfolio, we have HDFC Bank underweight. We don't have Kotak. We have ICICI Bank, we have Axis Bank, we have SBI. These are large exposures. So, clearly the growth has been tepid. 9 to 10% growth is good in this environment, and that's what we saw in Kotak. HDFC Bank also with 3% advances growth, 7% NII growth was expected. So we have to navigate. The CD ratio has to come down, and there's been explicit that this year will be equal to advance in the segment loan growth of the system, and next year will be higher. I am very confident in 27 would be a very good year for HDFC Bank, and in the current environment, even asset quality in terms of safety is better. They're better placed. So I think overall on valuation, they will underperform. But really for the lower growth also, now they're at very reasonable price to book. So I genuinely feel that this year should be better for banking in terms of stock appreciation, and particularly the larger banks.
Sanjay, great conversation. Thank you very much for joining in. Need to slip into a very short break, but look at the moves in some of the banks. IndusInd Bank has now surged 1.5%, and buying has emerged in Bajaj Finance and Finserv. Big moves in the last 10-15 minutes. Get into a break. On the other side, we'll get you a few BTST calls from our experts.
change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to U.S. inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage.
Welcome back. So that's what we've got going on the screen right now. 125 points up. The large caps have managed to hold on to the gains, and even for the mid-cap screen, the recovery is now looking a lot better. The index is down just about 1.3%. Bring up the intraday chart of the mid-cap index. Even the advanced decline ratio, it's not as bad as it was in the first half of the day. So there you see, recovery is on track. Let's go across to Mitesh for some final calls. Mitesh, final stock ideas for the day.
I think, I've been very positive on Bajaj Fins, and with the market correcting, they haven't fallen heavily sideways. But today, I think Bajaj Finserv is heading towards the high of the day. BTST here. Keep stop at 1734. Look for target of around 1765, 1770 for tomorrow. And eventually, I'm looking at higher levels, to be very honest. So there's a good positive bias over here. The other stock on my radar is Britannia. It's just getting past the supply pivot of 49.50, 49.55. So BTST here with a stop at 49.35 for targets of 49.90.
Thank you very much for that. Let's get to Polycab. That's under pressure. The stock is now down 6.5%. It attempted a bit of a recovery post the Q3 numbers. The stock fell. It tried to recover, but again, it's sort of failing. Upasana is here with the details.
Well, overall, it was a good quarter for Polycab India. It was a slight miss on revenue front. PAT stood in line while it was a margin beat in terms of the poll estimates. Now, coming to the numbers first, revenue saw an uptick of 20% on a YoY basis, and company has guided that it will surpass its FY26 top-line guidance of 20,000 crores in FY25 itself. EBITDA saw an uptick of 26% on a YoY basis, and margins also increased sharply by 70 basis points at 13.8%, while we were working with a poll of somewhere around 12%. PAT saw an uptick of 12% on a YoY basis, largely in line. Now, coming to company's key segment, that is wires and cables, it reported a revenue growth of 12%, and margins also increased 50 basis points at 13.5%. Now, company has given a 5-year guidance in this segment. It says that wires and cables business will grow 1.5 times and margins will range between 11 to 13%. FMEG segment revenue was up nearly about 43% on a YoY basis. Strong growth coming there, and PBIT losses also narrowed from 36 to 12.7 crores. Now, company has given a guidance for the next 5 years in this segment as well, and it says that the growth will range between 1.5 to 2 times and margins will range between 8 to 10% over the next 5 years. Overall, the company has guided that export contribution will be more than 10% over the next 5 years, and robust order book to sustain momentum in Q4 FY25. And lastly, company has highlighted that annual sustainable operating margin in EPC business is expected to be high single digit over mid to long term. So overall, good result and upbeat management commentary post the results.
All right, Upasana, thank you very much for the updates there on Polycab. We do have to take a very quick break, but as we do that, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or from Google Play, or you can, of course, scan the QR code on your screens as well.
Most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start.
Welcome back. Well, just a couple of minutes go before today's session winds down. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in. Mayuresh, good to have you on. It's been a last couple of days of very severe reactions to many earnings, and I want to start with Dixon or Cyan, DLM, or some of these other EMS companies where the prices have been damaged anywhere between 6-7% to 12-13%. Yes, valuations have been elevated, but would you use the dip to buy, or do you think this is the beginning of maybe a slightly longer correction?
Afternoon, Surbi. So I think on the question of how the run-up of these stocks had been, I think quite spectacular. So I think these stocks had moved 3 times, 4 times over the last year and a half. And therefore, I think valuations in excess of 90 or 100p for most cases within the spaces itself. And therefore, I think any sort of earnings mismatch which probably came through saw a knee-jerk and a very sharp reaction as far as prices are concerned. Now, are there tailwinds for the industry as a whole? Absolutely, yes. I think the EMS industry is expected to grow 4 times to around $80 billion from $20 billion where we stand. Plethora of opportunities, including semiconductor as a space that can come their way. ODM, where the margins are relatively higher compared to the OEM world, will definitely push up earnings going forward. But I think the structural breakdown that we've probably seen from a price strength perspective, as we see in markets with India, and valuations still remaining elevated. My own sense is that one should not rush into these stocks even after the correction that we've seen. Let them settle down, let them consolidate, make decent bases at lower levels, then we'll probably take it.
So any buy ideas? So you've got a few stocks like a Jana SFB reacting well to its numbers. PNB Housing Finance is managing to close up in the green post numbers. But otherwise, most of the reactions, even for decent set of numbers, has been negative.
Absolutely, you're absolutely right. And I think unless the stocks have given an exceptional performance than what the street probably believed in, I think you're going to see reactions like you're seeing in a Jana SFB as an example. But having said that, I think we are clearly going through a downtrend phase as we map our dynamics at William O'Neill India. And therefore, I think a large part of the emerging markets are probably going through this pain point in terms of earnings degrowth, downgrades, which will start coming through, in my opinion, as Q3 plays out. And therefore, I think a combination of this factor along with geopolitics is definitely going to create a huge upheaval as far as forward-looking numbers are concerned for most sectors. Having said that, I think a few sectors over the next few days that we'll probably keep on our radar. And when we probably see a rally attempt coming through and a follow-through day, I think a few sectors within the broader markets, including and not restricted to agrochemicals as a space. Paradeep Phosphate, as an example, has been a clear example within this. Very strong move in terms of how numbers have played out so far, expectations in terms of backward integration that Paradeep is going through, both in terms of its sulfuric and its phosphoric acid additions through internal approvals, and a combination of debt equity has actually come down and margins have expanded. So I think this space with the likes of Paradeep might do well with a very strong EPS-RS rating. Hospitals as a space might continue showing stable earnings growth in our opinion. And therefore stocks like Healthcare Global or Aster DM have shown resilience even in the market fall. And if they keep on posting reasonable numbers and better commentaries, I think this is one space to be in, and very, very selective of BFSI. So I think Karur has been something that we're holding for a length of time. A good set of numbers, and I continue to have my thesis that selectively private sector banks within the mid-cap space might actually continue.
Real estate, anything? Stocks have come off. Lodha, Godrej Properties, even Oberoi, DLF. You own any, looking at anything?
100%. So I think we had a couple of names, Oberoi and DLF. So I think we'll take a call post the moves and the numbers on whether to hold on to these stocks in our global portfolios. But again, I think they have played the cycle very well. So like the MS players, Realty had a good run for the last few quarters. And therefore, I think the next few quarters, in terms of their pre-sales velocity, in terms of them able to hold on to their margins, executing well, They've obviously deleveraged their balance sheet to a large extent. They have adopted an asset-light model, which ensures that they take on projects with a decent gross saleable value without having too much of leverage onto the balance sheet in terms of creating these assets and executing them is a positive. But I think a large part of the markets have now justified the move. But yeah, I think we continue holding something like a Uber or a DLF in our global.
Mayuresh, thank you very much for joining in. Coming to the close of today's trading session after Tuesday's brutal sell-off, there was a recovery today, and that recovery gathered pace in the last 30 minutes. The Nifty ending at 23,150, a gain of about 130 points. The Sensex higher by close to about 600 points. Mid-caps continue to remain under pressure, but at the session lows, the mid-cap index was down close to about 1,400 points, but it's ending down nearly 700 points. So there was a recovery, but still it's an over 1% cut on the mid-cap index and the small-cap index with a negative advance decline ratio. HDFC Bank, good numbers from HDFC Bank helped with the recovery in the last 30 minutes or 1 hour. HDFC Bank ending with a gain of about 1.7%, but on the whole, the Nifty banking index was up nearly 200 points. IndusInd Bank, Kotak Mahindra Bank ending up in the green. Bajaj, Finserv and Finance, the two NBFCs, had a good session, but the big gainers were the IT stocks. Large cap IT led from the front. Wipro top gainer, 4% up. Infosys, TCS, Tech Mahindra also seeing a lot of buying, stocks ending with a gain of 2.5%. On the way down in the large cap space, BEL, Tata Motors, Trent, Power Grid, Axis Bank, weakened trade, and we are awaiting HUL's numbers.
Absolutely, and you know, lots and lots of action and activity through the course of the day. Easier to count, at least in the broader market, easier to count what was up than down. So I'll just actually do that. MCX was a decent mover on volumes. We were just looking at Janaf Small Finance, JSFB, big volumes, but again, smaller name in that sense. Tejas Networks is another one, which ended about 2% higher. Otherwise, I mean, you know, the broader space, lots of losers. The renewable energy recently listed, Vari and Premier Energy, big cuts. You know, names like, they're all earnings related, Polycab, ICICI Pru, IndiaMart, selling off hard. The EMS companies, Kane, Sirma, PG Electroplast, coming off. I think Dixon was also lower, but these were down more. Lodha and Godrej Properties, we were just talking about real estate with Mayuresh, and these are the names which came under a fair bit of selling pressure today. Well, I think it's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thank you for staying with us. But Rima and I'll continue with Markets Forward when we come back in just a bit.
Day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think, you know, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, you know, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between.
Indian equities put Tuesday's 7-month lows in the rearview mirror. Indices end higher after another highly volatile session. The Sensex and Nifty end over 0.5% higher, led by IT stocks. Mid-cap counters continue to come under pressure.
Steady third quarter for HDFC Bank. Net profit grows 2% on a year-on-year basis. Net interest margins come in at a 4-quarter low. Slippages are up by 12% on a quarterly basis.
Polycab reports a mixed quarter as revenue misses but margin beats. IndiaMart shares plunge after a weak showing in Q3. SAI and DLM declines as higher employee costs hits the margin and profits in the third quarter. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to prep you up for tomorrow. I'm Rima and with me is Prashant. Prashant, a much better day, right, compared to yesterday?
I don't think we could have taken one more slam dunk kind of a day, right? And
but mid-caps did get slammed down.
Mid-caps did. Some recovery towards the end, but 2-3-4%, that's it. I mean, sharp cuts still there. It was just a hunch, and we were talking about how maybe the market finds a base around the levels where it got to yesterday. It briefly broke 23,000 on the Nifty and then, of course, saw a little bit of a recovery. We basically left off around the 13th lows, last Monday's lows. And today, starting 2:10 p.m., the market staged a bit of a recovery and we ended about 23,100 plus. It's too early. Let's see. People have been, every day the market stages some recovery. I mean, people come back with full hope that this is it and this is the turn. So far, it's not panned out that way. But it's also, of course, completely true that the market here has been a big underperformer this year so far. For the Nifty Bank, that level is on the downside is 47,898. That is nothing but the 13th of January low, last Monday's low. While the Nifty broke that low, Nifty Bank is not. Today's low is higher than the earlier one. Declines, and that speaks to the broader market damage. Outnumber advances some 3:1. And here, of course, the damage is largely in high PE stocks. Of course, you can wonder what is low PE or what has been low PE, and you'd be struggling for answers. But the exceptionally high PE names, you look at the EMS companies, Dixon, Kane, Sirma, PG Electroplast, etc. Even some of the real estate companies which have sort of gone berserk. Those are areas which are seeing a lot of pain. But it's not just limited to those. Many other stocks from various sectors are seeing a fair bit of selling pressure. Rima.
Okay, let's take all these stocks. We'll take these stocks forward in greater detail. Let's tell you what we've lined up for you on our show today. The big movers of the day, we'll get to Vivek in just a bit. Then you've got all the market events, the big corporates that we had a chat with earlier. So let's kickstart the show with Vivek, and he's going to put the spotlight on all the big movers of the day.
Well, thank you so much. A much better day after 2 p.m. is what the market actually saw. The first stock on the list has to be HDFC Bank. In fact, post the results of HDFC Bank, no negative surprises there. That saw a bit of an up move, and that actually also coincided with the kind of recovery that the market saw. The next set of stocks that did quite well in the session today and that were strong throughout the trading session was actually the entire IT pack. So the Nifty IT index, one of the top gainers, also aided by moves like Wipro, TCS, Infosys, all of these stocks today saw very strong up moves. The other set of stocks, or the other stock that did very well, was Jana Small Finance Bank. Almost at one point of time was perched at the upper circuit. Strong outperformance compared to peers, and this stock did very well in the session today. And MCX yesterday saw a very deep cut, but post the management commentary and a couple of brokerage notes saying that it's not as bad as what the market was earlier fearing. There was a strong recovery today, up almost 4% in the session. It's a kind of recovery MCX saw. But quite a lot of laggards. Remember, the broader end of the markets ended the day with cuts. Polycab. Now, despite what was a beat, especially across margins and profitability, and also a guidance upgrade coming in terms of top line, this particular stock ended lower by almost 6.5%. That is Polycab that we're talking about. The entire real estate pack today, all of them continue to see deep cuts. Names like Macrotech, Godrej, Prestige, all of them with cuts between 4 to 6%. One of the weakest sectors in today's trading session. Something that you alluded to earlier, the EMS themes, they continue to see quite a bit of selling pressure. In fact, the selling pressure continued in a Dixon Tech, almost 3% lower, and it, went ahead and expanded to other names like Syrma, Amber, remember even Cyan, DLM, that stock to post the results saw quite a bit of a deep cut. IndiaMart, another stock, while the numbers, were okay, the internals, especially in terms of paying subscribers and also a very steep target price cut by Nomura, is something that ensured that the stock ended lower by almost 7%. And L&T Finance Holding, yesterday, post-result, the stock held out strong, but internals again over here were quite muted. Analysts cut estimates, and one of the top laggards as far as the F&O space was concerned.
Thank you very much for that. Let's invite our guests, Mayuresh Joshi, Head of Equity Research at William O'Neill, and Shrikant Chauhan, Executive Vice President at Kotak Securities, on the show. Gentlemen, thank you very much for joining in. Shrikant, first question, what did the technicals of the markets tell you today, and how are we likely to perform tomorrow?
Good evening, Rima. Good evening, Prashant. See, what I can make out is that the markets have been deeply oversold, and whenever we see such type of put call ratio for the month and VIX at somewhere close to 16 plus or 17 around, that time most of the time we see some reversal in the market. So based on the overall technical formation, I am of the view that the markets are oversold and they are again rebounding back to the earlier resistance, earlier support levels of 23,350 or 400 sort of level. So again, we may see the levels of 23,350, 400 sort of level. But yes, in case if the market manages to surpass the level of 23,500, then in that case, the possibilities of hitting 24,000 would turn bright. And today's low and yesterday's low, if we see the levels of the market, then they are almost similar. And tomorrow, in case if we see the market is dropping or opening below the same, then the chances of hitting 22,600 would turn bright. But when looking at the overall activity in large cap companies like Reliance Industries or HDFC Bank, Bajaj Finance, I'm of the view that the markets are again heading higher, and we could see the levels of 23,400.
Okay, 23,400 possible. So another, 200 points from where we left off today. Well, let's talk about HDFC Bank, which reacted after reporting third quarter numbers. Abhishek is here with numbers from the banking major. Abhishek, over to you.
Well, Prashant, to begin with, it was a mixed set of numbers that has come in from HDFC Bank, almost in line performance with respect to P&L. The agri portfolio has impacted the asset quality this time around. So take a look at the net interest margin. Due to decline in CASA, the net interest margin has got impacted. On total assets, it's at 3.43% versus 3.46% in the previous quarter, a 4-quarter low. Now, other income this time was soft. That is in line with the loan growth that was again on the softer side. The operating efficiency has remained stable, so cost to income ratio has remained largely flat at 40.6% when compared to 40.6% in the previous quarter. Now, ex of treasury, operating profits are up 12.5% YOY and about 2.1% sequentially. This is better than the loan growth that they have seen. The return on asset has come in at 1.9% versus 1.96% in the previous quarter. Now, there were slippages of 8,800 crore when compared compared to 7,800 crore. If you take out the agri portfolio from these slippages were stable on a sequential basis. Annualized slippage ratio is at 1.4% versus 1.25% in the previous quarter. Along with agri, the gross NPA ratio has come in at 14-quarter high, net NPA ratio at 14-quarter high. X of agri, gross NPA ratio has remained stable. The PCR has declined, which is a key negative to note, at 67.8% versus 70% sequentially. The gross NPA ratio, as I mentioned, X of agri has largely remained stable. Their PNL is better than our poll, both on NII and PAT. Back to you.
Thank you very much for that. HDFC Bank ending with a gain of 1.5%, and it also crossed the 200-day moving average in the up move. Mayuresh, come in on HDFC Bank, and between HDFC Bank, Kotak and the others, where does your preference lie?
So, evening, everyone. I think as Abhishek mentioned, I think if you probably look at the granularity of the numbers, if you take out the agricultural slippages, GNPAs are looking stable. The slippages are probably looking stable as well. The only concern here is the PCR ratio probably coming down. And therefore, I think the management commentary, both in terms of how they're probably stacking up the entire slippages and the restructuring book, along with growth that is probably expected in the next few quarters, is going to be very, very critical for future performance. As far as banks are concerned, and as we look at rating and rankings on markets with India, I think Kotak Mahindra Bank probably seems to be the best placed at this juncture. A decent set of numbers. Capital adequacy remains very, very high for Kotak Mahindra Bank as well. Expectations of the cost to income ratios are expected to dwindle lower. Asset quality pressure is also expected to come off. And though valuations might remain a tad bit higher, I think the rating and rankings of Kotak Bank probably a tad bit better at this point of time.
Shrikant, the chart of HDFC Bank?
Well, for HDFC Bank, the view is that it is very close to its important support levels like 200-day simple moving average. And since June 2024, if you see the overall technical pattern of the stock, then whenever the stock has fallen to 1600 or 1630, from there, most of the time it rebounded back to the levels of 1750 or 1760. This time also, I am of the view that the way the stock has spent time close to these levels, and now the volumes are there, and if you go through with the results, then based on that, I'm again expecting stock to move towards 17, 20 or 30. So quick pullback is not ruled out.
Quick pullback not ruled out in HDFC Bank. Let's get to the other set of companies. That's the cable companies. Now, earlier we had numbers of KEI, Havells. Actually, KEI came out yesterday. But today, during market hours, even Polycab came out with their numbers. Upasana is here with a quick recap.
Well, let us look at the common trend seen in cables and wires company in the numbers reported till now in its Q3 FY25. Now, revenue growth of all these companies was led by stable, strong demand for cables, and cables has certainly outperformed wires. Now, wires saw weak demand and lower growth due to destocking of copper prices softening. Now, copper and aluminium prices have corrected in November to December, which is leading to this. Now, let us look at the results company-wise. Havells has reported a weak set of numbers, lower revenue growth of 11%, which was mainly dragged by company's key segment, that is cables and wires. Now, margins have also seen a sharp decline of 110 basis points. KEI Industries have also reported an overall mixed quarter. 20% of the revenue growth was led by cables and wires segment, in which the revenue grew 26% on a YoY basis. Now, EBITDA margins were also under pressure for this, overall at 9.7%. And lastly, Polycab India reported their numbers today. It was a slight miss on the revenue front, and Morgan Stanley says that the numbers are disappointing when it comes to domestic cable and wire volume growth of the company, which led to this sharp fall in the stock. Now, EBITDA margins was a beat for this at 13.8% with a sharp increase of 70 basis points on a year-on-year basis, while we were working with a poll of somewhere around 12%. So all in all, these are the common trends that we've been seeing in the cable companies.
Okay, no, absolutely. Upasana, thank you very much for that. Mayuresh and Shrikant, the Vedas, Shrikant, the names like Polycab, KEI, RR Kabil, and there are so many others. Anything looks interesting?
Yeah, see, like in this particular space, if we consider any particular stock, then Polycab should be on the watch list because it is correcting from the highs, but at the same time, it is deeply oversold and it is very close to its lower boundary where most of the time the stock has taken support. If we consider other stocks like KEI or RR Cable, I think there the formation is not clear. I'm seeing if there is any weakness in the market, then we could see furthermore deeper sell-off in these stocks because they are very close to their important support levels. But for Polycab, I'm of the view that since last 1 year, if we see the overall trend, then whenever the stock has fallen to 6,000 or 1,500 levels, we saw smart recovery. So in case if there is any further more correction, we should look for adding Polycab to the portfolio.
Thank you very much for that, Shrikant and Mayuresh, for joining in. We will slip into a very short break on that note. On the other side, we'll get you the big corporate voices. We'll talk about HUL as well and the Q3 performance.
Hired in actually growth. So I think that more and more not looking at them as, a direct correlation is something that will happen. But for example, in our engineering services in ERS, even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st.
Okay, welcome back. We've got the market, of course, which saw a bit of a rebound. Earnings so far have kind of largely, at least on the mid-cap front, mostly disappointed. Large caps maybe a little better. Lever is just about come out with its numbers as well for the third quarter. One-time gain boosted profits for the FMCG giant. Mangalam is here with highlights. Mangalam.
Well, for HUL this time around, the company did not disappoint largely because the street did not expect too much. So in line of that, the numbers are reflecting what is the underlying condition in the demand, which is not much changed from what we've seen in the second quarter itself. If you look at the margins at 23.2%, the street was working with a number of 23.1%. If you look at the revenue as well, it's a 1% growth as against street expectations of 1.5% odd growth itself. The net profit, you would look at it, 3,000 crores versus street expectations of over 2,500 crores. And that's largely because of a one-time gain of 509 crores on account of the sale of Pureit business, which they've accounted for this time around. A large part of the analyst community was expecting an exceptional to come by. It was just the quantum that they weren't making an estimate on. It's 500 crores. So the bottom line has been boosted by an exceptional. If you look at the volumes this time around, the company has reported flat volume growth. Again, the street was working with no more than 1 to 2% volume growth as well. So we can call it a disappointment, yes, but largely in line with no major expectations from Hindustan Unilever this time around. But the highlight of the numbers are the acquisition of Minimalist. Remember, the rumors and news reports were rife that the company would go ahead and acquire Minimalist. They've gone ahead and done that. They believe that this will go ahead and improve the strategic focus that the company has on the beauty and wellness care business of theirs, which in the third quarter has been slightly flattish, 1.5% growth itself as against a much higher number expected, but that's largely because of the delayed winter. So maybe the beauty and wellness business is something that the street will be looking at in the quarters to come ahead. Going forward, the commentary on management as well, there is sustained rural recovery, whereas urban is still under a wee bit of pressure. So those are a couple of things that we'll be watching out for. The stock is down 22% from its highs already. So not much in terms of a downside, but with these numbers, not much in terms of an upside as well.
Thank you. Well explained. And as we wrap the show, we'll bring you the key market events to watch for tomorrow. Vinny's here.
It's an important event to watch for on the global front. First, with the US market, we'll watch out for the consumer confidence data as well as in the Eurozone. Similarly, also, we'll be watching out for the consumer confidence data in the Eurozone. In Japan, let's watch out for the trade data that will be coming in tomorrow. So important to watch out for that. On the domestic market front in India, we're watching out for the Nifty weekly expiry that's there tomorrow. Other than that, in terms of earnings from the Nifty side, we have Ultratech Cement as well as Dr. Reddy's, which will be reporting the numbers tomorrorow. And another earnings important ones to watch out for, we have Emphasis, Signed, Syngene International, Ujjivan, Small Finance Bank, Indus Tower, Sona, BLW. All these companies also will be reporting their numbers. So a whole lot of non-Nifty companies that are reporting their numbers tomorrow. In some key corporate events that you should be keeping an eye out on tomorrow, Bank of India, IREDA, as well as Ugro Capital will be considering a mulling fundraising plan. So these are the important ones to watch out for in trade.
All right, Winnie, thank you very much for that. So action-packed once again, lots of numbers, etc. as well. Before we wrap, we'll leave you with this week's growth code. This is, of course, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we help traders understand the difference between high-frequency trading and algorithmic trading.
Algorithmic trading and high-frequency trading, or HFT as we know it, they're often confused, but they're different. They use computer algorithms, both of them, to execute trades, but the key difference between the two is in speed and strategy. On the one hand, algorithmic trading uses algorithms to automatically execute trades based on set rules like price, there could be volume, time. It aims to trade efficiently to reduce human error and improve the accuracy of those trades. Now, this can involve various strategies such as order routing, market making, or even arbitrage. It's commonly used by institutional investors, hedge funds, and some individual traders as well. High-frequency trading, on the other hand, is a subset of algorithmic trading, focused on executing trades at incredibly fast speeds, sometimes making millions of trades in fractions of a second. The goal here is to capitalize on any tiny price movements that last just nanoseconds or microseconds. The main difference here is speed. Algorithmic trading can execute trades at various speeds, but HFT is all about speed, processing thousands of trades every day. HFT targets short-term gains by exploiting small price changes, whereas algorithmic trading may involve fewer, slightly longer-term trades. Is it suitable for retail investors? Well, for algorithmic trading, it is accessible by various platforms offering automated trading tools, making it useful for individual traders. However, HFT typically requires massive investments in technology and resources, making it out of reach for most retail traders. In short, HFT is a fast-paced subset of algorithmic trading, which encompasses both short and long-term strategies. In short, all HFT is algorithmic trading, but not all algorithmic trading are HFT.
There could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we
are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately.
Hello and welcome to Business 360. I'm Arundhati Ramnin, and here are the top headlines that we're tracking for you this evening. Indian equities put Tuesday's 7-month lows in the rearview mirror. Frontline indices end higher after another highly volatile session. Sensex and Nifty end over 0.5% in the green, led by IT stocks, but mid-cap counters continue to come under pressure. The rupee strengthens 25 paise to close at 86 rupees and 32 paise to the dollar. President Donald Trump announces Stargate, a venture created in partnership with Oracle, OpenAI and SoftBank that will invest $500 billion to create AI infrastructure in the U.S. On his second day in office, Trump says the U.S. is considering imposing 10% tariffs on Chinese imports starting as early as the 1st of February, also expresses support for the H-1B visa program. External Affairs Minister S. Jaishankar and new U.S. Secretary of State Marco Rubio hold their first bilateral meeting. Both nations reaffirm their commitment to stronger ties, especially in technology, defense and energy sectors. India also in talks with USA to take back 18,000 Indian nationals staying illegally in the U.S. HUL meets street expectations in the third quarter. Volumes remain flat, but a one-time gain of 509 crore rupees boosts its bottom line. A steady third quarter for HDFC Bank. Net profit grows 2% on a year-on-year basis. Net interest margins come in at a 4-quarter low. Slippage is up by 12% on a quarterly basis. SBI Chairman C.S. Setty says a RBI repo rate cut is imminent in February, says banking results so far show a slowdown in growth of unsecured loans, but rules out a contagion effect on secured loans. Also highlights an uptick in private capex only in some segments like steel and cement. Infosys CEO Salil Parekh says Infosys will invest in innovation without stretching its balance sheet, says they are focusing on enterprise generative AI, adds that 84% of their employee base are now AI aware. Government to soon open applications under the new electric car manufacturing scheme. Sources say scheme to offer a concessional import duty of 15%, but will come with a sales target of 7,500 crore rupees by the end of 5 years and a commitment of 4,150 crore rupees towards domestic manufacturing. Those were the headlines that we're tracking for you this evening. But first up, the market action of the day. Dalal Street made a smart recovery to end the day largely higher. Nifty and Sensex ended over 0.5% in the green. IT stocks led from the front. However, the pain in the broader markets continued. That index ended with cuts of over 1%. Prashant Nair is here with all of the day's trading action. Prashant?
Finally, after many days of losses, the market had a positive close, at least on the Nifty. That shone through. Remember, the market had yesterday broken the previous week's low, which was around the 23,047 levels. The 23,000 level had broken briefly. Those levels got tested again, but they held. And now the hope is that we're able to build and some base formation can happen from here out. Nifty Bank also did see that bounce come through. It's been the bigger, it's the index which has seen the bigger beating. Mid-cap and small-cap indices down over 1.5%, but off the lows because both were down 2.5% at one point during the course of the day. I'll start with what was up on the Nifty. Wipro, Infosys, TCS, Tech Mahindra, IT services stocks did well. There were the Bajaj twins, Finserv and Finance, both looking up. In terms of cuts, in terms of pullbacks on the Nifty, BEL, Tata Motors and Trent. Trent, of course, continues to be something which has come off quite sharply from the highs. In the broader markets, advanced decline did improve. Still, more declines as compared to advances, but the gap narrowed. Vari and Premier Energy recent listings, both in the renewable space, sharp knocks. Both, by the way, I think are below their listing prices, the opening price on day one. You had the result reactions come through. Polycab, sharp cut. ICICI Pru, sharp cut. IndiaMart, sharp cut. The EMS companies, yesterday it was Dixon, led by Dixon, but others were not spared. So you had Kane, Sirma, PG Electroplast, all three got hit. Lodha was down sharply. Godrej Properties from the real estate space, that's again an area which has seen a fair bit of battering. Newgen, India Cements, Netweb, some of the other names. Cyient, DLM was a big one. Zentech, Sterling Wilson Solar, which continues its downward free fall. And there was something like a Novava, which was down about 5%, a capital market play. And of course, markets have not been doing well. In terms of gains, far and few in between. MCX was a notable one. It had a meaningful up day after losing sharply over the last 2 days. Jana Small Finance Bank, big volumes, but again, bombed out name. And you had something like a Tejas Network, which was up about 2.5% or so. The global is global, and I think we'll continue to watch headlines from Trump, etc. But here in India, the hope is standalone, the market is able to find its feet after getting badgered over the last many days now. Back to you.
Right, Prashant, many thanks for those details. Now, HUL came out with its third quarter numbers just a while ago, and the management is addressing the media, so let's cut across.
Media approach, we launched Lakme's Rouge Bloom range and Treseme's Silk Press range, expanding our masstige offerings. Nor joined forces with Squid Game 2 for a one-of-a-kind, digitally interactive campaign to promote its Korean ramen range. We have continued to drive sharper portfolio choices during the quarter, including divestment of water business, decision to demerge ice cream business, and our recent acquisition of Actives-led premium beauty brand Minimalist. Let me take a moment to give you an update on all these transactions. We have completed the sale of our water business on 1st of November, received consideration and recognized profit for the same this quarter. Coming to ice cream, we previously spoke to you about our intent to separate the business. The board of directors has approved a scheme of arrangement for demerger of the
So HUL, they're meeting expectations in the third quarter, but staying with earnings, HDFC Bank's third quarter numbers have come in line with street expectations, while asset quality was slightly deteriorated on a sequential basis. Net profit jumped 8% to over 30,000 crore rupees, while net interest income rose 2% on an annual basis. Abhishek Kothari joins us now with the details. Abhishek, take us through the numbers.
To begin with, it was a mixed set of numbers that has come in from HDFC Bank, almost in line performance with respect to PNL. The agri portfolio has impacted the asset quality this time around. So take a look at the net interest margin. Due to decline in CASA, the net interest margin has got impacted. On total assets, it's at 3.43% versus 3.46% in the previous quarter, a 4-quarter low. Now, other income this time was soft. That is in line with the loan growth that was again soft also on the softer side. The operating efficiency has remained stable, so cost to income ratio has remained largely flat at 40.6% when compared to 40.6% in the previous quarter. Now, ex of Treasury, operating profits are up 12.5% YOY and about 2.1% sequentially. This is better than the loan growth that they have seen. The return on asset has come in at 1.9% versus 1.96% in the previous quarter. Now, there were slippages of 8,800 crore when compared to 7,800 crore. If you take out the agri portfolio from these slippages were stable on a sequential basis. Annualized slippage ratio is at 1.4% versus 1.25% in the previous quarter. Along with agri, the gross NPA ratio has come in at 14-quarter high, net NPA ratio at 14-quarter high. Ex of agri, gross NPA ratio has remained stable. The PCR has declined, which is a key negative to note, at 67.8% versus 70% sequentially. The gross NPA ratio, as I mentioned, ex of agri has largely remained stable. Their PNL is better than our poll, both on NII and PAT. Back to you.
Right, Abhishek, many thanks for those details. But let's go back across to the HUL management, which is addressing the media on their third quarter numbers.
Remains on driving competitive volume-led growth across our portfolio, prioritizing investment across core, future core, and market makers portfolio. If commodity prices remain where they are, we expect a low single-digit price growth in the near term. Amidst inflationary market prices of materials, we expect to maintain EBITDA at lower end of our range of 23 to 24%. We will continue to manage our business dynamically, driving savings through our net productivity program and provide the right price-value equation to our consumers. We remain focused on our job of transforming the portfolio. The mid to long-term opportunities in the FMCG industry is immense. With strategic clarity and operational excellence as our foundation, we are well positioned to leverage this opportunity and grow competitively. With this, I complete my prepared remarks and we can now take questions.
Thank you, Ritesh. Shilpa, would you like to ask the first question? We'll come to you, Sesa.
Yami?
Shilpa? Okay, Sesa, you can ask the first question.
Right. So thank you for the opportunity. So, firstly, I would like to know, how is the current demand scenario looking like? As we speak, are you seeing any signs of improvement in urban demand? And also, are there any near-term triggers that you think would aid demand going forward? That is one. And second, on the minimalist deal, if you could give some more insights into, how this fits into HUL's overall strategy, as we know that the company is focusing on, sharpening its BPC focus. So on those lines, if you can just share some insights.
Maybe I can speak to the market trends and then request Ritesh to give you some understanding in detail on the minimalist joining our family. On the market, we clearly see rural gradually improving consistently over the last few quarters, and that's good news. Urban, on the other hand, continues to moderate in terms of growth, and at this point, we see that trend continue in the near term. As a result of which, the overall market is muted because it's a combination of these two sectors. We expect going forward, given the good signals from both the Kharif and the Rabi crops, that the rural markets will improve. And on urban, it really depends on the macro factors. But as far as we are concerned, as I have been saying in the past such calls as well, that our job is to do what we can control, which is to go where the growth is, invest behind our operational efficiencies, grow competitively, which we are indeed. We're growing competitively across our business by way of volume. And importantly, we will at the same time keep doing what we need to do to be future fit, which is basically as our strategy, which we shared in our capital markets recently, contemporize our core, premiumize our future core, and lead market making. So we're very focused on doing both the operational excellence, competitive growth in the near term, and our strategic investment in the long term. And minimalist is a great example of how we are investing behind building a portfolio, especially in B&W, that's absolutely fit for the future, and probably a great segue to hand over to Ritesh to speak about the minimalist brand and why we're so excited about them joining our family.
Yeah. We had mentioned about our own strategy of beauty and well-being, where one of the key imperative for us is to improve and increase our share of the premium portfolio. Minimalist as a brand is deeply rooted in product efficacy and consumer love. The brand operates at masstige price segment within skincare and hair care, and which is why it is a fabulous fit to the portfolio of Hindustan Unilever. It has a very good presence online and hence strengthens our position on e-commerce as well. We have acquired the business at an enterprise value of 2,955 crores. The brand today has basically in the last 4 years' time grown to become a 500 crore business and also profitable. We acquired the business at 5.9 multiple, and we believe that once we unlock synergies of Hindustan Unilever and bring that, so the team Minimalist and team Hindustan put together can come and create a bigger version of Minimalist, and the synergies that will unlock will also be able to invest more behind the business and realize the potential that the brand has.
Right. And if I can just squeeze one more in, with the rise of quick commerce, as a preferred channel, what is the percentage of your sales coming from e-commerce, and also how much of that is contributed, from quick commerce?
As I mentioned before, e-commerce obviously continues to grow faster than the rest of our business. Still, it's below double-digit contribution at the moment to our business. Within that, quick commerce is indeed growing faster. And I will not be able to share with you the exact share of that, but it is clearly increasing its contribution to the total e-commerce business in our case. We are very mindful of our models, where we have a very clear intentional strategy of differentiated assortment by channel. We serve an omni-channel consumer who's shopping for different shopping missions. The quick commerce consumer and the shopper is increasing in their shopping mission. So clearly all the platforms are now, so we have the convenience mission. We also have, the indulgence mission. So therefore including, we are increasing our assortment in quick commerce, and we are also therefore clearly growing quite high in that channel. And we intend to make sure that we are competitive in that channel and make sure that the assortment is clearly differentiated so that we serve the shopping missions that the Kirana stores are there for, and we also make sure that there's little overlap between the two channels.
All right. Thank you so much. I'll come back in the queue.
Thank you, Sesaj. Shilpa, would you like to ask the next question?
Hi, gentlemen, can you hear me?
Yes.
Hi, good evening. Congratulations on the acquisition also of Minimalist. Just at the risk of a little bit of repetition, I just want to come back to talk about what are we looking at going ahead in terms of urban demand? The numbers suggest that the situation has not really improved a lot. How are we supposed to now look at the entire demand scenario going forward? And a little bit, if you could touch upon rural as well, and also in terms of inflation. I believe some price hikes were taken in soaps and the tea portfolio. How much more of price hikes can we expect going forward? And also, if you could, give us a little more lowdown on how on the ice cream business separation, and also any timeline, if you could share with us on the listing and all of that.
So I'll speak to the market, and Ritesh will take the questions on pricing, inflation, and ice cream. On the market, first of all, I know we are reacting to a quarterly trend, even an in-year trend, but let's not first of all forget that we are in a very exciting consumer market of the decade. The per capita consumption across all our categories are extremely low. When you look back from a more of a wider lens, we can clearly see all categories that we compete in and build are going to grow exponentially 3 to 4 times. Take any market which is in our neighborhood, we're going to see growth there. Now, in the near term, there'll always be fluctuations, and no line of growth is stable or clearly predictable. At this point, a year or two back, we were talking about how rural was compressed, but now we see rural coming back. It's consistent, it's gradual, but it's consistent growth. We expect also that the future signals in terms of the monsoon and all other signals we pick up from the rural are good. But at the same time, urban that was carrying was doing the heavy lifting of growth for the last few quarters is compressed and is muted. But we should not, try and extend this beyond what we can see in the near term, which is maybe a quarter or two. But I think we as a leading company in serving our consumers, our job is to invest for the future, do what's right for our consumers. And importantly, in the near term, the best we can do is what we can control, which is, are we executing well? Are we innovating extensively? Are we serving our consumers in a superior way across all our 6 Ps of our brands? And we are exactly focused on that. And that's the reason why our near-term metric is competitive volume growth that is profitable, and we are delivering that. At the same time, we are investing for the future, and Minimalist is an example of that intention. But I'll now request Ritesh to take the other points that you had asked.
Ice cream, Shilpa, it will take little about a year from today for us to finish. So we expect in March quarter 26 to finish the all process of getting all approvals and getting the company listed. That's our current timelines. Of course, this is subject to appropriate approvals along the way that we'll end up taking. Coming to your question on pricing, and from a commodity perspective, today crude oil, which impacts, let me say, home care and many other parts of the business, that's benign. We have seen inflation in crude palm oil and in tea. And hence, both in soaps and tea, we have taken price increases about 4 to 5% in the current quarter of December, as we reported results. And this is always a policy that when we see price increase of commodities, we take price increase in small chunks. Once we have a more deterministic signal of total quantum of inflation, then we do the balanced job of taking either further price increase, but more importantly, keep driving savings across all the lines of the P&L. So only the net cost is what we want to end up taking price increases. Now, crude palm oil increased very sharply by 40% in December quarter. But since then, as we speak in January, we have seen it has come off by almost $100. So we will factor that into consideration along with what's happening with Indian rupee volatility and then decide our pricing actions for March quarter. So that's on pricing for both soap and tea.
Trying to get a sense, like last quarter, I think 2 to 3%, correct me if I'm wrong, was the quantum of the price hikes. Can we expect the same kind of quantum? And also, Videsh, we've been talking about, how last couple of quarters when there was a slightly deflationary scenario, we spoke about, maybe price-led growth is over, volumes will start coming back, but then that situation seems to have reversed now. So in terms of whether it's, low single-digit price-led growth that you're talking about could go on for how many quarters? When do you think, I know it is a bit of a crystal ball gazing, but when do you think volume-led growth could come back?
Yeah. So let me first talk about pricing, Shilpa. So, of course, there are 3 big commodities which impacts the portfolio: crude palm oil, tea, and crude oil. If at all we do see, and along with that, very important, the way currency pans out, Indian rupee vis-a-vis, let me say, dollar. These 4 elements determine the total amount of quantum of inflation. Today, we are seeing increase, as I saw and I spoke about, increase in crude palm oil and tea. Both of them have come off in last few weeks compared to the peak inflation that we saw in December quarter. So as I look at two, and then when I look at impact of crude oil, which at circa $80 is pretty benign. So all put together, our view is that as we see commodities today, we expect a low single-digit price growth go forward. I don't expect a material change to that in near term. Now, when it comes to the mix of volume and value, and hence linked to growth, Shilpa, to your point, this quarter as well, we have grown our tonnage volume ahead of the market, and we have gained volume market share. We also have grown competitively overall, and our turnover-weighted market share is positive. Now, what has happened in the quarter, the tonnage growth that we have, and remember, our UVG matrix that we publish is a combination of volume and mix. So while volume has been positive, even in this quarter, the mix has been negative, which is what has negated the impact of positive volume growth. And on a net basis, we have reported a flat UVG. Now, why has mix become negative? Number one, our home care business has grown ahead of the rest of the business. It's a very strong business, complete portfolio, and has driven extremely well good growth. Home care also operates in essential category where it is very resilient to inflation and deflation. Even in high inflation period, you had seen we had driven positive volume growth in home care business. But when it comes to price elastic skin cleansing and tea, these are always, they get impacted. As you take price increases, volumes do get impacted. So that's, which is why overall at a category mix, we have seen mix getting impacted because of this dynamics. Second, we also have seen small price growth ahead of large price growth as urban growth have basically moderated. So that's a impact, second impact that we have seen. These two impacts put together have netted off to some extent because premium overall as a portfolio continues to grow well. But on a net basis, the mix has been negative. Now, we do believe that the dynamics of small pack growing ahead of large pack, given what's happened in urban market, this is transitory in nature. But as far as we are concerned, the job is very clear for us, which is to keep driving growth in the premium part of the portfolio. You heard from us earlier as well that our intention over the next few years is to drive 900 BPS improvement of premium portfolio within beauty and well-being. Today, the acquisition of Minimalist that we have announced is in a direction exactly to deliver that. Launch that we did of Simple Love Beauty Planet, the recent launch that we did of Novology, or for that matter, portfolio expansion that we did of Pond's and Lakme, all these put together will keep driving premium portfolio for us. And this is exactly how we want to also keep improving overall mix of the portfolio.
That was HUL's management on their third quarter numbers. But on that note, it is time for us to head into a short break. More news and updates coming up on the other side. Stay tuned.
Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end.
Welcome back. You're still with us on Business 360. A renewed tariff threat for China, a thumbs up to talent, and announcement of a mega AI infra project. Day 2 of Trump 2.0 remained as eventful as day 1. Trump has said he was considering imposing a 10% tariff on Chinese goods as early as February 1st. He said that this was because China was sending fentanyl to the US through Mexico and Canada. Speaking at the World Economic Forum in Davos, the Chinese Vice Premier Ding called for win-win solutions to trade disputes without mentioning the United States explicitly. Trump also unveiled that what he referred to as the largest AI infrastructure project in history. Under this project, OpenAI, Oracle, and SoftBank will form a joint venture to build data centers. The venture, called Stargate, will invest $500 billion over the next 4 years. Trump also addressed the debate over the H-1B visa program and said he appreciates both sides of the argument. However, he added that he would like competent people to come into the country.
We have to have the quality people coming in. Now, by doing that, we're expanding businesses, and that takes care of everybody. So I'm sort of on both sides of the argument, but what I really do feel is that we have to let really competent people, great people, come into our country.
With that, it's a wrap on this edition of Business 360. But before we end the show, let's talk about the Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed trading decisions. Market manipulation is something every investor should be aware of. But what exactly does it mean? Today, we'll focus on two common forms, spoofing and layering, and how to avoid falling victim to them. Take a look.
Market manipulation is something that every investor should be aware of, especially tactics like spoofing and layering. These deceptive practices involve misleading others to create artificial price movements, putting regular traders at a disadvantage. Now, spoofing, for instance, happens when a trader places a large order far beyond the current price to create a false impression of either demand or supply. The goal here is to push prices in a particular direction and then cancel the order before it is executed. For example, a trader might place a large buy order on a stock only to push prices up and then will cancel it immediately as the price moves higher, tricking other traders into following the trend. Layering, on the other hand, is similar but involves placing multiple orders at different price levels to make the market appear more active than it actually is. These orders aren't meant to be executed but mislead others into thinking that there is either strong support or resistance on the way up. The manipulator then cancels these orders once other traders react, further distorting the market. So, how can you protect yourself? Watch for unusual order book activity on a stock, or if orders are placed and cancelled quickly, or if there is a sudden market depth change in a stock, be cautious. Stay informed about broader market conditions such as long-term trends, which are harder to manipulate. Use limit orders, avoid reacting to sudden fake price movements, and use tools to spot patterns of spoofing or layering, such as order flow analysis. By staying alert and using the right tools, you can protect yourself from these tactics.
And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn. From weeks ago, without even a token of defense, They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any.
Let's talk money.
Hello and welcome to this week's edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Now, there has been a fair amount of chatter around stress that has perhaps crept in retail lending, especially loans that are unsecured, which basically means that they're not backed by collateral. These could be, for instance, credit cards, or they could be personal loans. In fact, the Reserve Bank of India flagged off this trend a few months back, along with tighter regulations for this segment as well. Let's actually first hear out the head of one of the largest banks of the country speak on this subject. Here is a take coming in from Mr. Amitabh Chaudhry, the MD and CEO of Axis Bank.
We also have to be cognizant of the fact that if the regulator continues to keep a tight leash on lending in general, there is a possibility that some of this slippages you're seeing on the unsecured side could flow on the secured side, because they're all linked. And we have to be watchful of that. You've also seen the Indian consumer over-leveraging themselves in some case quite rapidly. So I think that also is getting normalized as we move forward.
Okay, so perhaps we consumers have gone a little overboard, but the regulator is watching and so are banks. So the onus is on us, the borrowers, to be more responsible, to ensure that we don't go overboard and fall into perhaps a debt trap of sorts, and that we make use of credit judiciously to further our financial goals. Now, how do we do that? To answer this question, we have a panel of experts joining in. I have with me in the studios today Frederick D'Souza, Business Head, Credit Cards at Kotak Mahindra Bank. Also Bhavesh Jain, MD and CEO of TransUnion Sybil. And joining us all the way from Prayagraj is Mr. Ashutosh Khajuria, former Executive Director at Federal Bank. And of course, he's been a career banker and, has watched these trends unfold over multiple cycles. So, gentlemen, thank you very much for joining in. I want to start with some context setting because, as customers or borrowers or viewers, we've been hearing all these headlines around stress in unsecured loans, stress in credit cards. You tell us, what do you see around you? And has this meant that there is lesser availability of loans in general for the retail janta out there? Frederick, let me open with you.
Thanks a lot, Surabhi, for having me on your show. It's always a pleasure to be here and learn. No doubt, there has been an increase in the risk that we are seeing in our unsecured portfolio in general as an industry, right? And there has been a lot of stuff that the various issuers have done in order to manage either the new issuances or the kind of exposures they take on customers in terms of credit limit programs and things. Yes, but that does not mean that this is, not an opportunity to expand your risk or to get the right kind of customers in. It is more of a phase of responsible borrowing, as you rightly put it. So that's I would say, the spirit in which banks are operating now.
Fair. So that's why we're here to educate, inform, and to sort of, get people to take charge and take responsibility behind their actions, even if it is taking on that credit card or a loan. Bhavesh, come in on this, and you guys are the holy grail, right? Everybody's talking about their CIBIL score. I think that level of education has happened, that I need to maintain a good credit score, a CIBIL score, right? Yes. What have you observed in the last couple of months, the trends around us?
Firstly, thank you so much, Surabhi, for having me on the show. Yes, with the timely regulatory guidance along with the relatively high credit deposit ratios, we have seen a moderation in the retail credit growth. And let me put out some data points. We have seen housing loan decline year on year with a 9% reduction in volume. Credit card, in fact, has declined by 30% year on year in terms of volume originations.
This is as of the June quarter?
Yes, June quarter as compared to 23.
Previous year. Yeah.
Yes. But the interesting thing is that two-wheeler volumes in terms of financing has gone up. And what we see from the CIBIL data is that there are emerging pockets for lenders to tap into these deserving and credit-eligible consumers across different age groups, across different geographies, across different socio-economic categories, which gives an opportunity for the credit institution to go deeper into multiple geographies, bring these consumers into the credit fold.
Sure.
And we see an opportunity for the consumer to reach out to these institutions and get the right terms and conditions.
Yeah.
So we see a win-win opportunity still existing.
Okay, fair enough. Let's bring Mr. Khajuria into the conversation as well. Now, sir, you've been a career banker and you've seen so many of these cycles play out, right? And I guess for a borrower, the temptation will always be there as there is more access to credit. I'll always want to have a fancier car, a better looking house, better clothes. I'll want to go on a big fancy foreign holiday. But where do we begin? How do I determine how much can I leverage myself?
See, I think there should always be a proportion of, what your normal expenses are, which are the ones which are to be met necessarily. And once they are taken out, then one can look at the discretionary spending. And that spending can be substituted by loan, subject to, of course, the cost of borrowing as well. And then multiple borrowings at the same time sometimes create problem for the lenders also to assess. Now we have very good credit bureaus and all sorts of information is available. And therefore, lenders are also becoming more informed before taking a call. But whatever said and done, for a borrower, they definitely must look that they do not fall into debt trap. And debt trap is a situation where it is difficult to service the liabilities. You need to borrow more to service the earlier ones. And that should not happen.
No, absolutely. Frederick, your thoughts on this? And the fact that there's easier availability of credit as well, right? You tell me, I mean, there are fintechs, there are NBFCs. So is it true to an extent that just because it's become easier, one has a propensity to borrow more? And how to guard against that?
I think, fundamentally, when you're thinking about borrowing, I would advise all your viewers and the customers to think about how much of their income can they actually service for either some EMI or any other debt obligation, right? As a rule of thumb, I would recommend, say, 40 to 50% of all your net monthly income should not go into servicing. Beyond that, should not go into servicing an EMI, right? And I think when you look at that as a metric, and this is a rule of thumb, right? It varies from individual borrowers. Each of them have their different requirements and financial situations. The other thing I would add is that, like Mr. Khajuria also rightly pointed out, one should understand their income and their expenses also, right? A lot of times, while we get a salary in hand, but really how much of our income is disposable, right? So we have our rent payments to do, education for kids, insurance premiums, and day-to-day expenses, right? And some of the discretionary expenses also not really non-discretionary, right? So to that extent, having a good understanding of your disposable income, ensuring that you do not cross a certain amount of your monthly take-home in debt repayments is something that fundamentally an individual should monitor and govern.
So 50% is the rough cap that you'll go with, that all your repayments should not be more than 50% of your income. Mr. Khajuria, to come back to this point, weigh in also for people who do have some cash in the bank or in their investments or in their fixed deposits. Sometimes the choice is between breaking that fixed deposit versus taking on a new loan. And that can be a little difficult. What would you guide on this?
Surabhi, I'll slightly differ on that count wherein we fix a particular percentage. There could be a situation where for subsistence itself, the borrower needs to spend almost 75 to 80% of one's income. If that be the situation, then the leeway is very little. Then he has only 20% of income available to him, through which, he has to manage his EMIs, his liabilities. Now, as regards, breaking the FDs and all, it's give and take between, what sort of rate of interest you are having on your existing FDs. If suppose FDs were opened in a cycle where rates of interest were higher, and the FDs are continuing, I'll just take some numbers to understand it better. Suppose if you are having a fixed deposit which is running at about, say, 8.5%, and the interest cycle, changes, and now you have, say, this FD is for, say, 5 years, and it has run for 3 years. Now you have a balance tenure of 2 years. But the borrowing is available at lower than the rate of return on FD. Then one should not break, because he has a backup to repay his liabilities. In that situation, it would be advisable to go for a loan.
Okay. All right. Fair enough. So you need to understand which way the borrowing cycle is moving. And we will spend some time doing that in the next couple of minutes as well. But before that, how do institutions decide whether you'll get that loan or not? Obviously, your credit score plays a big part in that. So, Bhavish, come in on this. We all know that, 700 is that holy grail mark, right? But what happens if someone has a score below that? Are your chances really, considerably reduced then? Tell us more about the credit profile.
Sure. So first, let me take for your viewers' benefit few minutes to talk about the CIBIL score. So it ranges from 300 to 900. The closer you are towards 900, which is a reflection of a healthier credit profile. And yes, it does ease up your availability of credit within the country. And the rates of interest, the terms and condition, the speed with which you get loans improves as your score is higher. And to your question around saying that if you have a score below 700, what does it do to you? So each institution have different score thresholds based upon the type of loan you are seeking, the tenure of the loan you are seeking. Are you looking at an unsecured loan like a credit card or personal loan? Are you looking for a housing loan? But does that mean a low score means end of everything? The answer is no. Because you can make sure that you work on your financials, you continue to pay your loan on time. If you have multiple obligations, you consolidate into one loan. You make sure that you don't max out your credit limits. Then it's important that you don't continuously keep applying for different loans or credit cards across different institutions. And you live within your means. You sort of have a good credit discipline. And over a period of time, you should be able to get back into a healthy score band.
And when you say low score versus healthy score, define the rough ranges that institutions typically go with.
So generally, there are a bulk of institutions who consider 700 and above good. There are bulk of institutions who consider 725 or 750.
Okay.
But between 700 to 900, yes, you will be welcome with a sort of a red carpet.
Okay, so let's ask the bankers then, because obviously the credit score is one criteria. There are lots of other things that will be checked before you get that second credit card or that second personal loan to go over an auto loan that might already be running. So what are those conditions and what all should I be mindful of, especially if I already have a home loan and an auto loan going on?
I think to add to what Bhavesh said, right? See, a score is also something that builds over a period of time, right? So as a bank, we obviously, the fundamental thing is to see the cash flows of the individual, right? So if somebody especially someone has a bank account with you, you have a very good understanding of the relationship, the vintage the customer has with you, right? And you get a lot more information that the kind of transactions they do. And at Kotak, we also use a lot of that information to build scores to underwrite customers. So I would say fundamentally in any lending relationship, understanding the cash flows of the customer is the primary evaluation that you do, right? The second thing you would obviously do is the stability of the income, right? So how many years of employment and things like that, the kind of industry they're working in. There are various parameters you can evaluate and consider while giving a loan, right? I would say bureau information is very critical, right? In fact, vintage on the bureau also becomes a critical consideration. And frankly, that could also be the reason why your score may not be high enough in the beginning, but over a period of time, you would be getting the red carpet that Bhavesh spoke about.
All right, let's quickly get in Mr. Khajuria to respond to this as well. Mr. Khajuria, is that the lens that typically, all your fellow bankers have always put on somewhere between 700 and 750? And what happens if you do have a couple of loans and you happen to be below 700? I mean, is that zilch chance? And also tell us if there is a prevailing trend between PSU banks and private sector banks, whether different entities look at it differently, if there are any sector trends.
So I agree with my fellow banker on the panel. Yes, we do look at cash flows, but I would go a step ahead and say the trend of cash flows also is very important. As to somebody is having a rise in his salary, say about 15-20% every year, and that is happening for the last 3-4 years, I think a fair guess can be made as to what his cash flow is likely to be. And then with the, while discussing with the customer, normally in personal loans and credit cards, you go, mainly buy the scorecards and all, and there is a lesser sort of occurrence of the interaction, one-on-one interaction with the borrower. But wherever it happens, I think we try to understand as a banker as to, is there any addition to the number of his dependables? And as rightly said by Bhavesh, more a borrower tries to shop around and applies to various, credit cards and all, his score gets impacted because that gets reported as to so many inquiries were there. So I think cash flows are very, very important. And it's not limited to only credit cards and personal loans or other retail loans. It's also very, very important for other segments of lending, including the corporate bank.
No, absolutely. Bhavesh, just to complete this point, so just clarify this for us. Even if someone goes to inquire around for a loan and multiple loans, that means the credit score and the profile is going to be impacted?
Okay, let me explain it for the benefit of the viewers. That if you go and seek information from different credit institutions, it does not impact. But if you apply to 5 banks or NBFCs seeking a loan or a credit card, which means you are seeking credit at the same time for multiple institutions. There's a difference between seeking information versus seeking credit. When you seek credit from multiple institutions, yes, it sort of impacts your score to some extent.
Okay.
But at the same time, if you come on to any of the websites, including Sibyl.com, and pull your own report as an individual, it does not impact your score.
That's fine, because you're just checking where you stand.
Exactly.
So one more question on this. A person having 4 outstanding, personal loans or credit cards or home loan, auto loan, versus someone with just 1 outstanding loan, say a home loan. The guy with the 4 loans will have a lower credit profile or a lower credit score. Is that a, general way of looking at it?
So I would say the most important aspect here is the repayment behavior.
Okay.
Whether an individual has 1 loan or 3 loans, the most important aspect is this individual paying it on time or not. That's the biggest deciding factor.
Got it. So it's not the number of loans, but how are you servicing those loans? That determines the credit profile and the credit score that you are going to keep. Okay, we need to take a very quick break. On that note, this is a very interesting conversation. On the other side, we talk about how you can use a falling interest rate cycle to improve your credit history, to perhaps repay off some loans. How do you do that? Discuss this after the break.
Let's talk money.
The world, and we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly. My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos.
Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we are putting the spotlight on how one can borrow responsibly to avoid a debt trap and yet to achieve your financial goals. Well, we have a panel of experts with us. And the fact is that this year is supposed to be the year when the Reserve Bank of India starts lowering interest rates. So if we are indeed going to be in a falling interest rate regime, then how can we utilize this time to perhaps take on the right kind of loans, repay some of the old loans, and improve our debt profile? Mr. Khajuria, that question for you. Help us out over here.
So I think in a falling interest rate scenario, which is likely to come, that's what the expectation is. If the inflation is reined in, then there is a likelihood of policy rate being cut by the central bank. In such a scenario, I think for retail borrowers, there's already good news, and that is that RBI wants all the banks to lend to retail borrowers only against an external benchmark. So it is not their internal benchmark through which customer may feel little, cheated or so. It's a very transparent one. External benchmarks could be, repo rate, which is the policy signaling rate, or it could be a treasury bill rate, or it could be a certificate of deposit rate. Now, when the interest rate is expected to fall, assuming that repo rate, which is currently at, say, 6.5%, is likely to move to, say, 5.5%, 1% cut, then I think the new underwriting, when it happens, borrowers should ask for, or rather request for, a floating rate interest, so that whenever repo rate falls, their effective interest rate would go down. Suppose today it is, say, repo rate plus, say, 2%. So that means it is at 8.5%, 6.5 plus 2, 8.5%. And assuming that repo rate is cut by, say, 25 basis points, then repo rate becomes 6.25. At that time, the effective interest rate for the borrower would automatically become 8.25%, and so on and so forth. Suppose if the fall is of 100 basis points, the borrower would be benefited by a lower rate of interest of at least 100 basis points. Now, this is one part. Second is, the lenders may ask for, fixed interest rates, or maybe earlier contracts would have been there at fixed rates of interest. Now, assuming that interest rate is going to fall, and therefore the earlier loan is assumed to be, or is believed to be, a costlier one, borrowers can reach out to their lenders and say, we want to prepay our loan, subject to the prepayment penalty and all those things, in case you are making payment from your own resources, from your own cash flows, and not doing the balance transfer. Even regulator permits that without penalty. So in such a scenario, borrowers should go in for making prepayment of fixed rate of interest loans.
Okay, get the fixed rate out of the way, fixed loan out of the way, and move to a floating rate if the rate environment is going to become a little more benign. Got that, sir? So very quickly, gentlemen, down to the final thoughts and the checklist. Frederick, why don't you take it up again? Just again, the hygiene factors that we must keep in mind to ensure that we are not getting into a debt trap and not over-leveraging where we can't service the loans.
I think the starting point for any customer should be their long-term financial goals, right? They have to keep in mind that they're saving enough and investing in the right place, right? An understanding of your disposable income, right? Like we discussed earlier in the discussion too, exactly how much do you have available with you to pay your EMIs, right? While we spoke of rule of thumbs, but each individual is unique, right? So having that clear understanding, what are your fixed obligations every month, and therefore what is it that you have available to pay? And Bhavesh also rightly pointed out that it's the repayment that matters, right? So I would say these are two very critical considerations, and then figuring out exactly, what could be your exigency fund requirements.
Right.
So at times you may need a certain cushion of cash with you for whatever exigencies you may have, or even a foreseeable long expense coming down the line, right?
Sure.
It could be even a holiday,
Sure.
right? So having that financial soundness and understanding of your disposable income is very critical before you take a fresh loan. I think add to that, when it comes to being more responsible with the loans that you have, not missing your payments is holy grail, right?
Sacrosanct,
it doesn't go, it goes without saying, right?
Yeah.
I would actually encourage, we do it for our customers, and I would encourage the viewers to actively track their CIBIL score also. It's freely available. Even TransUnion offers it to customers on their website, right? So please keep track of your CIBIL score, because once it's like, once you know a metric and you're tracking it, then you want to make it look good.
No, absolutely. And, just to finally, come down to even those who are stressed, because we are in an environment where people who are watching this could be facing, challenges in servicing loans. Bhavesh, any sort of way out or any tips you'd like to leave them with? Where can they seek help, and how should they try and sort of, get out of that situation?
So keep it simple, I would say, that if you have multiple loans, credit cards, do a simple consolidation, keep bare minimum number of financial obligation, continue to pay on time, don't apply for additional new loans across multiple institutions, and keep monitoring your credit report and your credit score, because that's a reflection of your financial health.
Yeah. Okay. All right, gentlemen. This was a helpful conversation, and hopefully the takeaways will help our viewers and, of course, your borrowers to borrow more judiciously and responsibly. Thank you very much for sharing some insights. Well, with that, we're out of time, so it's a wrap on this week's edition of Let's Talk Money. Keep sending us your feedback, comments, queries, and questions. We'll see you again next week.
Let's Talk Money.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about
Well, the conversations continue here at Davos 2025. I'm Shireen Bhan, and we've been bringing you a diverse set of guests, global as well as CEOs who head Indian companies, to talk about the outlook for the year ahead. Joining me now is a man who's delivered a very strong quarter for Infosys, ahead of estimates as far as revenue is concerned, and up the guidance once again. Salil Parekh, many thanks for joining us on CNBC TV18. You've done the results threadbare, so I'm going to try and address other issues here with you, starting with the big claim that you're making here at the Infosys Chalet on the promenade in Davos. Being AI first. We spoke about that a year ago. How do you back up that claim? Give me 3 numbers that back up the AI first claim for Infosys.
So first, thanks, Shireen, for having me here. And yes, we've had a good quarter. The focus for AI, there are 2 things that we're doing which we think are quite different. One, we're building 4 small language models. And these small language models are things that our clients are much more interested in today. These are models based on their proprietary data and our proprietary data. For example, we built one small language model for banking, and this is getting traction where clients are starting to use this in their environment. Another one for IT operations, and so on. Second thing we are doing is building agents. And agents, today we've in the process of developing about 100 new agents. To give you one example, we built an agent for doing research work.
Okay.
And this is in production with a client for a technology company where their internal people and their external customers can research what the product specifications are and changes are by using an agent.
Right.
And huge benefit to them. Things that used to take 14, 15 days now down to 8 days, and other such metrics. Another set of agents we built for an audit company, Big Four. There we built 3 agents which are looking at their full audit process. And again, changes in there. So our view of being AI first putting it for clients, and then inside. So all of our service offerings have been infused with AI. We built AI roadmaps. We are doing AI which is secure by design, and responsible AI, where we want to make sure everything that we can build in to avoid what could be not good uses of AI. We're doing at the start itself.
So how many people now trained? The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are 2 types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal. There's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it, and they are quite happy with it.
So what is this going to mean, Salil, in terms of incremental spends by customers and by clients? And what will it translate into as far as revenue for you is concerned as well? As we look at people moving from pilots now to scale and speed, which is, of course, the theme here in Davos when we talk about AI adoption, what will it mean in terms of a bump up, both in terms of revenue as well as spends?
So there are 2 types of generative AI. One is the consumer one, where we see all of this discussion here, also at the World Economic Forum, but everywhere, the massive capex that we are hearing about. Our focus is more on this enterprise generative AI, which is a smaller amount because the consumer one is huge.
Yeah.
Now in enterprises, we are seeing the traction is large, but the revenue size is still not that large.
Right.
It's quite small. And so, but it's increasing. So every quarter we see good traction and progress on what's going on. My sense is, if you sort of look back to when cloud started or when digital started, it starts off with enterprises where there's a lot of interest, and then there's an inflection point, and then cloud picks up or digital picks up.
So, what does this now mean, Salil, in terms of workforce? And I've been asking your peers this question, and most seem to suggest that it's not going to mean less number of people being hired. It's probably going to be the same, if not more. What's your own assessment? Are we likely to see a headcount reduction? Are we likely to see a status quo? Are we likely to see you hire more to be able to deliver on the capabilities you spoke of?
So there first, in Q3, we had a 5,000 person increase in headcount, 5,600. For this coming financial year, we have estimated in the range of 20,000 college hires. So all of this is pointing to an expansion. So why the expansion? Part of what happens with generative AI is you get more productivity benefit. But a lot of what's happening is you have much larger areas of the enterprise where you can do work in generative AI. So that larger area with the productivity, the net is still an increase in the headcount. And that's the trend we are seeing right now.
So you will continue to see an increase?
For this, we already have a sort of early plan of about 20,000 college graduates.
Okay. Let's talk then, Salil, about what is happening around us today. And the big change that's happened between the time that you announced your results and now is the fact that Donald Trump is finally in the White House and is signing a spate of executive orders. In fact, just this morning, he's also talked about a new AI infrastructure fund with Larry Ellison and Masayoshi Son and Sam Altman being part of that. When you hear what is happening in the US at this point in time, when you look at the possibility of deregulation which has been promised for sectors like BFSI, what will that mean? You've upped your guidance already, but do you believe that there is a potential for a further upward revision on the back of the changes that are likely to come in?
So absolutely, I think to hear about 500 billion.
Yes.
I mean, it's staggering what type of thinking that they have in the US for technology and infrastructure. And this is all AI driven. You've also seen lots of other CapEx announcements over time. We see a lot of discussion on regulations coming down. The sense we get from sort of people we talk to, and even here the last 2 days, the general view is the economy in the US will do better. We have seen in the past when the US or Western Europe economies start to do better, our business starts to grow. So we have two axes, as you know. One is where we do more cost and efficiency, and the other is a lot of growth and digital.
Right.
And so that will start to play out more. My sense is if that US economy growth and so on happens, which is what it's now looking like, we will see more and more growth overall for Infosys as well.
One of the other interesting conversations that I've been having with some of your peers seems to suggest that perhaps Indian IT services also finds itself at an inflection point today as the world is moving into a generative AI driven world. Now, in that context, the advantage that Indian IT services has enjoyed is being able to deliver efficiency at scale. But now, will you need to be much more IP-led and IP-driven? And what will that mean as far as changing the DNA of your organizations is concerned?
So no question there's going to be much more focus on whether we call it IP or innovation. So there is definitely, with the way generative AI is moving, let's say to build a small language model, we've put together an innovative approach. It's actually an approach which takes existing technology and builds it on existing platforms at a much lower cost than a large language model. So that innovation in agents, innovation in where it can be applied will continue to increase. And that's something I think we've been doing at Infosys for some time. So my sense is that's a good sign.
Yeah.
Now, more of that will happen as we go through the next phase. And we will continue to have that, let's say, the intense focus on cost and efficiency. So both of those axes will go well.
So let's come back to the bread and butter stuff. When you took over, margins were between the 26 to 28% range. What's the expectation now on when you will be able to get there? And also, the specter of double-digit growth, and I've been speaking to your peers about it as well. No one's giving a definite timeline, but everyone says it's not improbable, it's not out of reach.
So on, let's say, margins, we've put in place over the last few years a program internally to make sure that we improve margins. It's a very comprehensive program. Our CFO is leading the charge on it. Internally, we are very positive about it. And over time, our aspiration remains to be in that sort of a high margin range. And my sense is we will achieve it over time.
What is over time, Salil?
Over time is over a period of time when we make all of the sort of actions within that program make that happen.
So is that a year out? Is it a 2-year period? Is it a 3-year period? What are we talking about?
So we've not externally called it out in that way, but internally we do have some pretty clear goals of what we want to do over the next few years. And we have, my sense, a good set of levers that can help us to get to higher and higher margins. On the growth, we've already 6.1% growth in Q3. My sense is that if what we discuss about the US economy that starts to come about, the European economy in many parts, for example, the Nordics, working well, we will start to see that flow through to our business. And as that starts to flow through, whenever that happens, we will see a good sort of connection and good growth. But we don't, again, have a view on what the timeline is for when that double digit will happen.
So let me get a little bit more specific, because the view from everyone that I've spoken to so far is that 25 is expected to be better than 24, and 26 could perhaps be, in the words of one of your peers, an explosive growth year. So let me get you to either confirm or concur or disagree with what you hear.
I think for them it could exactly be that. For us, we have given our structure a guidance for this financial year. We don't have sort of externally a guidance for the next financial year, which will start in April, and we certainly don't have a guidance for the following financial year.
A sense, not a guidance, but a sense that you can leave us with.
A sense is difficult because we don't have a view which we share externally beyond March. It becomes more, we have to be focused on what we can see in our pipeline and so on. And so for this year, we've increased our guidance. The macro environment, seems to be giving us indications that over time things will improve. So we'll wait and see how that goes.
Okay, so wait and watch, but feeling better overall is the story today. On deals and, given the opportunities that you see, do you believe that the large deal bucket could potentially be an even bigger play in the year ahead?
So large deals, our pipeline is actually in good shape, slightly better than last quarter. The large deal announcement was 2.5 billion, which was a very good number, 60% net new. That was a good outcome. We also see mid and small deals looking good over the last 2 quarters. So my sense is a whole range of these would be impacted positively. If and when we see more of the financial services and retail come to other industries, that will also open up other deals for growth and for cost. So overall, the deal flow at this stage looks quite positive in the pipeline.
Looks positive. Let's talk about the workforce as well. You said that you will be hiring more, but what about wage hikes as well, Salil? And, the conversation keeps coming back to the fact that at the bottom end, we haven't really seen any significant appreciation on salaries. Is it time now for the Indian IT services industry to do more, to do better? And can you afford it?
So there, firstly, we've just on wage hikes, we've announced ours Jan and April. It's in motion. We don't sort of comment about the numbers, but it's very strong wage increases both outside India and in India. I think at all levels we've seen changes over the years. We've seen even when individuals are entering from college, in addition to wages, the sorts of other benefits, training, just the environment on the campus. I think what we provide is an incredible positive experience.
So, Salil, 7 years now at the helm of Infosys, the 7-year itch for you at this point in time in terms of how you want to continue to transform the organization. I know you've laid out a transformation plan. Are you satisfied with where you find yourself today? And are there any specific focus areas that you will prioritize in 25?
So there, I mean, it's been incredible to have this opportunity for 7 years. We've completely changed the focus in terms of digital. We were talking about it earlier, from quite low to 60%. As we look out, the focus is going to be much more on AI. But equally, there are things, for example, to build AI, you need a very strong data infrastructure. And we are extremely good at that. So that's going to be a massive growth area. Cloud, you need a very good cloud infrastructure for our clients, both private cloud and public cloud. So that will be in a big way. But the most critical thing really is we want to be relevant to what our clients are looking for. So there's, in the next several years, quantum is going to be a big part of discussions. We're already building in our research area things on quantum. And then how we put Infosys together, which is this concept of one Infosys, which is a little bit sort of a softer concept, but really works very well because everything we do, we bring together for what the clients are looking for.
Well, Salil, it's been an absolute pleasure. Many, many thanks for joining us on CNBC-TV18, and we wish you the very best of luck for the year ahead and look forward to hearing back from you more on what your clients are telling you as more clarity emerges on the Trump changes and what it could potentially mean as far as the US economy is concerned. We will take a break, but the conversations will continue. Don't go anywhere. We're back in a moment with more.
Market maestros before crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems, suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage, more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs. both from the perspective of raising revenues for the US so that he can cut taxes more, which he needs to.
Joining us now is the chairperson of India's largest bank, State Bank of India, Mr. C.S. Sethi. Always a pleasure. Thanks so much for joining us here on CNBC-TV18. Let's get the bread and butter stuff out of the way, sir. As I pointed out, conversations around inflation, interest rates in the US. But what about back home? The MPC meets in February. Do you expect a rate cut?
So broadly, I think our house view is that there will be a rate cut in February. There are some important measures the regulator has taken off late, particularly to infuse additional liquidity.
Has it helped?
Particularly daily VRR definitely had sent signal to the market that the liquidity support from the central bank will always be available. We are able to see the change in the market perception in terms of the liquidity availability. While the system liquidity is still tight and is deficit, but the availability on tap liquidity from RBI definitely is a good indicator. But I think our view is that the way the global economy, particularly in the developed economies, is behaving, and the rate cut seems to be imminent in February.
A rate cut is imminent in February. You talked about tight liquidity, sir. Let me also ask you about offtake at this point in time. What is the indication that you're getting? Because there has been visible signs of a slowdown across different sectors, particularly on the consumption side. What are you seeing at this point?
So there seems to be some convergence in the credit growth towards the deposit growth. If you see, I think we've been talking about lower deposit growth rate, not in tandem with the credit growth. And I mentioned earlier also, I think there will be some equilibrium sometime. And the December numbers indicate that there seems to be some convergence towards the deposit growth rate. I think broadly they are at the 12% rate, both deposits as well as loans. But you're right, I think the loan growth predominantly continues to be personal loans. While we have some degrowth in the at the system level, of course, I can't talk about SBI because our numbers are due sometime in first week of February. But I think the results, whatever we have seen from the banking system so far, indicates that there is some slowness on the unsecured personal loans, but I think home loans are doing pretty well in the sense the growth rate in advances is still coming from the retail segment, whether it is a personal retail, or SME, or agriculture. Corporate is still, I think, slower on that.
Still slower? You were feeling confident when we last spoke about a pickup in private capex. It's still elusive?
Private capex is happening in only certain sectors. I think the core sector, as I mentioned earlier, still is not investing as much as we have expected them to. So particularly on the steel, cement, while the capacity utilization have reached 75%. I think they're all looking at how the external sector, external environment improves, or how it is going to behave, particularly on the trade tariff in the new presidency in the US, how it is going to impact the overall global economy. I think everybody seems to be watchful on that front.
So it continues to be wait and watch as far as large private capex is concerned at this point.
Particularly on the core.
In the core sector, let me ask you about the unsecured side, sir, because that has been, of course, a red flag that the RBI has raised. I was having a conversation with some bankers. The possibility of slippages moving from the unsecured side to the secure side, is that something that you're watchful of? Are you concerned also?
Even on the overall level also, I think it has not reached a stage where we need to really get alarmed about it. Obviously, the proactive steps what RBI has taken has reduced the unsecured personal loan, obviously. But I don't see the contagion effect coming in from unsecured to secured. Obviously, the underwriting standards have to improve. One great systemic improvement which we mentioned earlier also in terms of the frequent updation of the credit history. Now from 15th January onwards, the reporting to the credit information companies is moving to a fortnightly basis, which means that the frequent updation will help system to understand what is the leverage at the individual level, so that I think the multiple lending to the same individual or individual families will be avoided.
You're spending a lot of your time here in Davos focusing on what's happening in AI.
Yeah.
You know, what's the plan on that front as far as SBI is concerned in terms of adoption?
I think, you know, one thing which is coming out clearly that the new technology frontier, in the last 2 years we've been talking about AI, and it's time for us to implement AI and use cases are to be identified. We have done that basic homework. And we have identified essentially in terms of, you know, personalizing our customer offerings could be one of the major use case. We are building that into the YONO itself. The other one is that we are strengthening our risk management practices, where particularly in the customer protection, where AI can be deployed. There's a humongous amount of discussion at Davos today. I think AI is being talked about, AI at scale, both in terms of productivity and more importantly, I think one element which attracted my attention in terms of the change management, what we need to do among the employees when we are rolling out AI in a big way. I think these are some of the takeaways for me.
So any thoughts on being able to incorporate some of that at SBI?
Obviously, I think we have already started doing that. And now we will be scaling it up at the enterprise level.
So let me end then by asking you, you've got a new governor at the Reserve Bank. You've already told us that you expect a rate cut from the MPC in February. What else do you believe is the need of the hour today, given the external environment as well as the domestic environment in terms of additional measures, especially as far as liquidity is concerned?
No, I think central bank is, in fact, I shared my thoughts with the governor also. Particularly the signaling what had happened through the daily VRRs and also the swaps which they're planning, I think is a good indicator of the support what central bank is providing to the banking system. There are no complaints on that front.
Okay, Mr. Sethi, always a pleasure to speak with you. Thank you so much for joining us. That is India's largest banker joining us here in Davos. A rate cut is the call there from SBI in February. We'll have to wait to see whether the MPC delivers, but more importantly, SBI focusing on more digital adoption, AI-led development and change for India's largest bank as well.
Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, you know, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications. And those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our cities. This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a
Hello and welcome to the CNBC-TV18 special. We're coming to you from Davos 2025, and as I've been telling you here on the program, there is a different approach that India has taken, and here's what's new, here's what's changed. It is an all-in-one. So you have, of course, the central government here, headed by Minister Ashwini Vaishnav, who's here with us, but you also have India being represented by states, but the states now are all housed, well, technically under two roofs, but nevertheless, it's an all-in-one approach that's been taken. Mr. Vaishnav, many thanks for joining us. This is a first that India is doing, and this is what's different this time around. Take me through what was the thought process here.
Well, the thought process was that India Pavilion should be unified pavilion. It should be integrated. And our Prime Minister, Shri Narendra Modi ji, got this feedback last year after last Davos. And he insisted and he gave us a very clear thought process that we should have all the state pavilions integrated within the India Pavilion. Then we spoke to the chief ministers and all of them were very happy to actually be a part of this thought process. And that's why we have this entire India Pavilion.
Yes.
One unified, one integrated pavilion.
Absolutely. As I said, technically under two roofs, because you have Maharashtra, Andhra Pradesh, and the third one over here was...
so logically it is one.
Yes, that's right.
The same
that's
thing.
right. And then, of course, you have on the other side, you have Telangana, UP, and Kerala. But Mr. Vaishnav, let's start by talking about the pitch here that you continue to make to investors in an AI-driven world, in an AI-led world. You've just finished a roundtable with people in the semiconductor space. What's the feedback that you're getting? What's the status update on Semicon?
So the confidence that people have on our government, on our policies, on our leadership is huge. What we can see very clearly is people had a lot of skepticism a few years ago, but now they are very clear that India is having a consistent growth. India's policies are very clear. Prime Minister Modi ji's entire thrust on having a very strong technological base in our country is very real. So people today in the morning, they were saying, just 3 years back, we heard that there is a semicon program starting in India. And today you have 5 units where the construction is in very advanced stage. And the first chip will roll out in this year itself. So that gives a lot of tremendous confidence to the people. So we just had a small kind of announcement that Inox will be the materials partner for Micron as well as Tata's, and that's a very big thing because we were used to manufacturing in parts per million. Now we have to manufacture chemicals, gases in parts per billion purity, right?
Yes.
So that requires tremendous investment in R&D, in your manufacturing capabilities, in the process purities. All that thing is happening now. So that gives a lot of confidence. The second thing is people know that we have a huge AI talent pool in the country. And people have taken very strong note of the approach that we have taken. We have taken this approach of having public investment to create a AI 10,000 GPU compute facility, which will be available to everybody. So I heard in the morning session as well as yesterday and in this session also, people really like this facility because the startups don't get the opportunity to have that compute facility. And in our case, because our Prime Minister always says that we must democratize technology. So democratized technology means it should be accessible to all. And this is one construct that we have been able to very successfully create. So this was also highly appreciated.
You know, you're talking about the compute power and of course the 10,000 GPU order that the government has put in place, and the RFP of course is out also. But I'll ask you about the big announcement that's come in from President Trump overnight, and that is the $500 billion Stargate fund, you know, with Sam Altman and Masayoshi Son and Larry Ellison and others getting together. When you see capital of that kind, Mr. Vaishnav, and you look at what India's aspiration is to play in the AI game, do you think we need to do much more in terms of portioning capital for, especially on the infrastructure side?
That's very true. But of course, even in that, rather I would say, every project which is happening across the world today, India is a big contributor to that. Our talent pipeline is the biggest pipeline that we have, right? And the quality of talent is improving every day with the Future Skills program, with the way the industry is so closely integrated with our talent development program. So this is another thing that we heard from multiple number of meetings that we have had, that this whole idea of integrating industry and university system is very good. So that's being appreciated. So yes, we definitely, our approach of having the 10,000 compute is great, but definitely we need to do much more. We are also looking at, we are actually evaluating, developing 25 chipsets which are critical for our industry, critical for our strategic needs, where we can have those chipsets designed in India, then fabbed in India, with the fab coming up. We are looking at the next phase of the fab. We are right now working at 28 nanometers. Can we have that next level 14 nanometer where the IP also is vested in our country? Right. So we had very good discussions today morning, and the approach that the Japanese have taken probably will take the same approach, where we partner with some R&D institutes. We have shortlisted 2 of them, already have some MOUs with them. Take that IP from where it stands today and build upon it. So multiple things are happening. So that's why I would say that in every program which is happening in the world, India will have a major role.
Major role, but you know, just on the capital side, do you believe that Semicon 2.0 will require a higher allocation?
We are working on it, and our approach again, as you would have noticed, right from day one we were very clear that ecosystem has to be developed, which means the gases, the chemicals, the equipment. So we will be focusing a lot more on the ecosystem this time. We'll have a lot more allocation and a lot more focus on getting the chemical and gas manufacturers properly settled in India, established in India. And we'll also do a lot more on the design side. So once we have the fab, then the right time to have our own products in place. That's the that will be the focus of Semicon 2.0.
Okay, let's talk about the other big development, in which is President Trump in the White House. Of course, the External Affairs Minister has met with his counterpart in the US post the inaugural. We have the ISET between India and the US, which focuses on the partnership on critical and emerging technologies. What's the expectation? There was a lot of progress that was made on these areas under the Biden administration. What's the hope that you have now with this present regime?
I think this will accelerate the fundamental point of Prime Minister Modi ji's thinking in terms of technology, in terms of economy, in terms of foreign policy is trust. And trust is a very important element in our relationships with US, with Europe, with Japan, and that has really helped us get the MOUs and MOCs signed, because people really believe that yes, India is a country, India is a geography, it's an economy which can be trusted. And that trust is going to accelerate our cooperation, I would say.
So what would the expectation be? What would be the focus areas that you would like both sides to prioritize when we talk about technology?
So critical minerals will be a very important priority. Then we would have quantum, we would have AI, the way models are getting created and the way models will be used in future. Can we have more focused models which are suitable for our own needs, for solving our problems? These will be important. Semiconductor supply chain, value chain will be a very important part of it. Apart from that, many emerging technologies where we can contribute a lot through our talent pipeline. Right. They will also be part of the, and research, well, where we have, last year we decided to take up some joint research programs. That will also be a focus area.
You talked about some of the countries that we enjoy a trusted relationship with, but let me talk to you about China, because that has been, of course, a fraught relationship, but there is now a movement as far as the border-related issues are concerned. Will that lead to engagement on the economic side as well? And I'll ask you this in the context of the aspiration that we have for electronic production in the country. We've done very well on that front in the last 2 years specifically, but there are now concerns of perhaps a slowdown on the part of the Chinese from the movement of people point of view as well as components. Do you believe that there is a need for engagement on the economic side with China?
As our External Affairs Minister, Dr. Jaishankar, has said, it's a very complex relationship where the governments of both the countries are deeply engaged in finding the right way forward. What I would like to say is that our next step of having the component ecosystem in India, that's progressing very well. We have completed the entire structure of it, which are the focus areas where we would put the maximum energy on. And what has happened, you would have noticed yourself since you do that very interesting program of Young Turks. So you would have noticed that quite a few supply chain partners, quite a few Indian manufacturers have really gone up on the learning curve. And the confidence that many of these players have is phenomenal. I was just talking to the HP laptop manufacturing, the head of that company, HP, Mr. Lores. He said that now we are feeling so confident within such a short time frame of 2 years that we would like to set up a complete R&D facility, complete design facility in India now, along with the partners that they have selected. Same is the case with the HP Enterprises. Server manufacturing, the HP Enterprises chief told me that they are now ramping it up to almost 4,000 servers a month. And the entire design work will be done in India. So what I would like to say is that the learning curve challenges that we had, let's say 5 years ago, 7 years ago, that is significantly lesser now. Yes, there would always be, when you want to start something new, it will have its own challenges. But I think our country, our industry, and our policy framework is today capable of taking it.
Well, talking about policy measures and PLI scheme for the electronic component space has been talked about. Is that likely to be announced anytime soon, sir?
We are working on it, and very extensive. As you know, we believe in extensive consultations with the industry. So that consultation process is practically in its last rounds. I would like to announce it once it is approved by the cabinet. As you know, that's the right way to do things.
And how soon before you take it to cabinet?
I think it should be, we should be able to launch the program in coming couple of months time frame.
In a couple of months time frame. So that's as far as the electronic component PLI is concerned. You know, when we were here in Davos the last time, sir, you had spoken about why you believe that there was legitimate reason to bring down import duties on some components, and that continues to be the ask from industry on more components and a tariff reduction in general. With the Trump regime in place, do you believe that the need of the hour will be to preemptively look at what we can do on tariffs across the board?
It's more of simplification and having lesser number of slabs, so that the confusion between one component to other component is not there. As you know, in electronics, the way components can, so each component has to pass through multiple borders by the time it becomes a module. So that means a component with, let's say, another very, very small subcomponent added to it can change the classification. So what we want is a very simple, very clearly defined classification system. And we'll continue to work on that direction.
So not a rate reduction necessarily?
That comes as a part of it.
Okay, so that will be, so a rate reduction as well as simplification is what you're hoping for?
So yeah, it's a more complex thing than these two words put together.
I would imagine. But is it likely to be linked to the budget?
Let me not speculate anything on that. But yes, we are constantly engaged with the industry.
Okay. Let me also ask you this in terms of what you're hearing from industry and as the former telecom minister, the AGR issue continues to be on the table, and one is hearing that perhaps the government may provide some relief there, even though there are Supreme Court rulings against that. Do you believe that there is a need for the government to look at further intervention to provide some relief and support when we talk about the outstanding issue of AGR? Reports certainly seem to suggest so.
You'll have to ask this to Mr. Sandhya.
But as the former telecom minister, what do you feel, sir?
I wouldn't like to comment on that.
Okay, fair enough.
Is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only two genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies. Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be great.
Welcome back. You're watching our conversation here from Davos 2025. We're talking to Ashwini Vaishnav, who heads the delegation here for India. Mr. Vaishnav, we were just talking about the progress being made as far as the AI mission is concerned. What will be the priority in 2025?
So, three topmost priorities will be getting the compute power ready, where we have completed the RFP process, and very soon the price discovery and everything else will be in place. Second will be talent development, as you have seen in the other programs on technology. Our focus on talent development is very much aligned with the industry. So in case of communications, we had labs, 5G labs set up in 100 universities so that the students can get the real hands-on experience of working on 5G technology. In case of semiconductor, we have it in 240 universities where students are actually designing chips using the latest tools. Same thing we are doing in AI. So very large number of universities we are tying up for getting the AI readiness as well as AI research and getting the application experience. That's the second thing. Third is a very interesting approach, getting the data sets ready for AI, right? We have large data sets of non-personal data, transportation data, we have agriculture data, weather data, logistics data. How can we use it to create data sets which are ready for AI? That's the third thing. Outside these three top immediate priorities, we are also working with the industry to understand how we can have our own models, what kind of models we should prepare. Should they be general models or should there be focused models?
Right.
And in parallel, we are also working with the industry to look at, in a time frame of 3 to 5 years, can we have our own GPU?
Okay.
And all these developments are happening in a very systematic, very methodical way. Hopefully in a near time frame, near future of let's say 6 to 8 months, we would have crystallized these thoughts on model as well as chip. But the other parts, we are moving ahead in the execution phase.
Let's also talk about the rules that have finally been put out by the government, and of course the consultation process is on for the data privacy and protection rules. There has been feedback that's come in from industry. There's been feedback that's come in from the side of the advocacy groups as well on balancing the interests of consumers and citizens. And I was speaking with the secretary, and he said, well, if both sides are unhappy, then it means that we've done something right. But how do you look at the feedback that's come in, and do you believe that you may need to extend the consultation period before you notify the rules?
We must understand one thing, that the rules are basically within the ambit of the Act.
Yeah.
And the Act was drafted with very, very extensive consultations, going over many years, in fact. And the consultations led us to a framework which is the right balance between innovation and regulation. And I think even here at Davos, people have noticed it, and people have, in fact, a very senior person has actually said it, that this is the template that the world will follow now. It won't be the GDPR anymore.
Because you believe that stifles innovation.
That stifles innovation, you're right. So within that ambit, the rules have been framed. And so far, the feedback that we have got on rules from practically every stakeholder is very positive. A few tweaks here or there, that's all that is needed. Otherwise, everything is... See, the approach is very practical approach, very commonsensical approach. The approach is that technology will change. We must not hardcode things. We must not make things prescriptive. We must, as the Act was, we must have the rules also very principles-based.
Right.
And as you know, it's a complete digital implementation. Yeah. So that entire framework has also been prepared. So I think we are in good shape.
Okay. Let me move from digital infrastructure to real infrastructure and that's the physical infrastructure. And that's where the government has been doing the heavy lifting as far as capex is concerned. And that has been, of course, driving growth in the last few years. Do you, believe that that is going to have to be something that the government continues to do because private capex is still, not at the level that is required for us to be able to drive the kind of growth rates that we aspire for? And specifically from a railway standpoint, what's the expectation as far as capex goes?
You have 3 questions in one question. So I would like to take the third question first. Railway, our capex, we have already done about 77% of the capex for the year by now. It's progressing very well. We should be able to complete 100% capex program somewhere in the middle of March, so which is very good. And the progress on the grassroots at the ground level is very clearly visible. Our mobility has improved, our punctuality has significantly improved, safety has substantially improved. We are able to carry more people. Last year we carried about 695 crore people, and this year we'll be doing about 750 crore people. We carried almost 1,600 million ton cargo last year. This year we'll be doing 1,630 million ton cargo. So that is very good growth, and that is helping us meet all the costs that we have. Electrification is practically about to be completed, and the pace of construction is very good. Station construction, coverage installation, everything is, I would say that it's as per our expectation it is going on. On the first and second question that you asked, see, our economy in our GDP, because of the policy paralysis of the UPA government, the capital investment as a percentage of the entire GDP had gone down to as low as 27%, 28%. That has now steadily come up in the last 10 years, and today it has already crossed 30%. It's now 31%, which means, and in an economy of about 300 lakh crore rupees, 31st March it will be 320 lakh crore. In that economy, 30%, so 90 lakh crore, right? Government capital investment is about 11 lakh crore. So 90, 11, right? That's the balance is the private capex. That balance part is private capex.
Right.
So people must, I would request the economists and others to do this math before saying that private capex is not there. Private capex is there. Yes, it must have a much greater pace.
Right.
It must be much more broad-based. And that's our approach. That's the way our finance ministry is driving the policy. That's the way our finance minister and the Honorable Prime Minister is driving the entire policy paradigm. I think it's a very steady growth. I think it's a very steady economic policy. Today morning we had a session with many funds. Most of the funds believe that our trajectory is very steady in a good 6 to 8% real growth rate with moderate inflation. So most people believe that yes, this is a good strategy, a good consistent growth rate that India will have.
And the policy will continue to be with the government spending on government capex and growth being driven by government capex, at least for now.
So that's the, that I would say is one of the triggers.
Right.
But other triggers like manufacturing, the triggers like housing, the drivers like getting the innovation and efficiency, the productivity, and all those triggers all help in growth of GDP.
So let me end by course. Let me end by asking you, Mr. Vester, before we let you go, what will the headline be then for 2025 from an India standpoint?
Trusted country, very clear, very stable political regime, very stable policy regime, good focus on inclusive growth, what we have done in the last 10 years, yes.
Well, we wish you the very best of luck here in
Thank
Davos,
you.
and thank you very much for joining us here and for explaining to us the areas that you will focus on and what some of the opportunities that the government hopes to leverage on will entail in terms of policy action and policy measures. That was Ashwini Vaishnav, the man who is leading the Indian delegation here at Davos 2025, giving us a snapshot of what the year ahead looks like. We will take a break. There's a lot more coming up with our conversations that continue here, but don't go anywhere. We will join you again from the World Economic Forum's annual meeting right after this.
Stronger and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens while the pillars of our society lay broken and seemingly in complete disrepair. We now have a government that cannot manage even a simple crisis at home, while at the same time stumbling into a continuing catalog of catastrophic events abroad. It fails to protect our magnificent, law-abiding American citizens, but provides sanctuary and protection for dangerous criminals, many from prisons and mental institutions that have illegally entered our country from all over the world. We have a government that has given unlimited funding to the defense of foreign borders, but refuses to defend American borders or, more importantly, its own people. Our country can no longer deliver basic services in times of emergency, as recently shown by the wonderful people of North Carolina, been treated so badly. And other states who are still suffering from a hurricane that took place many months ago. Or more recently, Los Angeles, where we are watching fires still tragically burn from weeks ago without even a token of defense. They're raging through the houses and communities, even affecting some of the wealthiest and most powerful individuals in our country, some of whom are sitting here right now. They don't have a home any longer. That's interesting. But we can't let this happen. Everyone is unable to do anything about it. That's going to change. We have a public health system that does not deliver in times of disaster, yet more money is spent on it than any country anywhere in the world. And we have an education system that teaches our children to be ashamed of themselves in many cases, to hate our country despite the love that we try so desperately to provide to them. All of this will change starting today, and it will change very quickly.
Welcome back. You're continuing to watch our conversations here at Davos 2025. As I've been pointing out, there is a large Indian delegation here being represented both by the central government but also by India's states. You have the state of Telangana being represented for the second time around by the Chief Minister, Mr. Revanth Reddy, and he joins us now here on CNBC-TV18. Mr. Reddy, many thanks for joining us. We spoke last year while you were here in Davos, and you had given us a number of 40,000 crores in terms of MOUs that you had been able to put together in your last visit. How much of that is actually materialized?
So actually we have signed with 14 companies and 17 projects. Out of 17, 16 projects are under pipeline. That's how progress is going on. So last time we have succeeded to attract investment to Telangana. So this time we are expecting more and more. So our success story will be there.
Well, speaking of the success story as well as drawing in more investment and investors, what are people asking you today in terms of the opportunities that you're pitching to foreign investors specifically? What is the ask in terms of what they want from the government by way of support, by way of approvals? What's the feedback that you're getting from them?
So most of the time the investors are worried about policies, particularly changeover government. And second thing, the protection of their investments. So my state is entrepreneur state. My predecessors like Chandrababu Naidu, YSR or BRS, now Revant Reddy, we are on the same page for policies for attracting investments.
So politics will not get in the way of policy continuity?
No. I wanted to tell you one thing. Mr. P.V. Narasimha Rao, who was Prime Minister of India, who has made all these liberation policies.
Yes.
So we know how to attract investment. We know how to protect their investments. So Telangana is the place for investments. We know how to do politics and how to attract investments. So,
and keep the two separate.
Two separate. So no one is need not to worry about their investments or policies. So we are more aggressive on liberalizing our policies.
Aggressively liberalizing policies. Let's talk about some of the areas in specific that you're focusing on. Electric vehicles and electric mobility is a big focus area for the state of Telangana. And I don't know how many people know this, but in terms of penetration, it is now the #1, I believe.
Yes, India's #1. I have taken a conscious decision. I have removed all taxes and everything for EV vehicles, and moreover I have divided into 3 areas my Telangana. One is core urban region, the other one is semi-urban region, third one is rural. The core urban area is having 3,000 diesel buses are there to public transportation. I have given instructions to my people to remove all these diesel buses to send other rural area to improve the core urban region. So we have introduced the EV vehicles in Hyderabad. So we are more focusing on these EV vehicles in urban region.
What about the charging infrastructure, Mr. Reddy? Because that has often been a constraint to widen EV penetration. What is the state doing about that?
So we have an exclusive plan for that. Almost wherever government properties are there, we are allocating for charging, and we are calling for PPP model, public-private partnership, to improve the ecosystem. So next 1 year we are going to improve like anything.
Okay, so next 1 year we should expect improvement through the PPP route on the charging infrastructure. One of the advantages that the state enjoys is the fact that it has been part of the tech workforce and the knowledge economy, and it's very well positioned there. You have a lot of GCCs, the Global Capability Centers, in your state as well. What's the expectation in terms of growing that further? Is there anything specific that you will be doing? Any particular focus areas? Life sciences, of course, is a big play for the state. Anything else that you will focus on specifically?
We are focusing more on AI and green energy and GCC centers, anyway, data centers also. Most of the world's leading data centers are coming to Hyderabad. We are going to sign more MOUs in Davos only for data centers.
Okay.
So we are focusing AI, data centers and green energy. These are the main focused areas we are focusing on.
So let me pick up on data centers. If you can give us some specifics on who you're signing that MOU with and when you expect that to be operationalized.
So actually, I don't want to disclose, but you are asking a specific question. Amazon is under pipeline. Amazon is going to invest, and Control S, Mr. Sridhar Reddy has signed, and other mega engineering. They are going to diversify in data centers. Much more data centers are coming to Hyderabad. They are signing with the Telangana government.
Okay, that's great. So you've given us some details there as far as the data center announcement is concerned. Thank you for that. But I also want to understand on the green energy side, because when we talk about data centers, energy consumption is also going to go up significantly. Electric mobility will also need more energy. How much of green capacity are you looking at for the state?
Actually, we are focusing on 30,000 megawatts with solar or wind and pump storage and other sectors. So Telangana is the place for all these categories. So recently I have announced my green energy policy. While I'm coming to Davos, I have announced my green energy policy. We are going to encourage more and more to invest in this sector. So our target is 30,000 megawatts. So it's a huge, we wanted to produce a surplus power to supply other than Telangana. We wanted to supply the country, all over the country. So we are much more focusing
on green energy.
Green energy.
And AI, because that's the third focus area.
Anyway, we are IT legends.
Yes.
So Silicon Valley is run by our Telugu people. So anyway, even Satya Nadella belongs to our community or otherwise our state.
Yes.
So IT and pharma, we are legends. We have surpassed even Bangalore also. So now the third is green energy and AI. So we are more focusing on that. Our ecosystem is there. Technology is there. The system, the human resources are there in Telangana, Hyderabad. So it is going to help us a lot to improve our ecosystem.
So anything in specific to draw in more AI-led investments, and specifically even on the startup side, because the state has been a big champion of startups. You've got the T-Hub there also. Anything specific on the startup side as well as on the AI side?
So already we have organized one summit for AI, and we have announced an AI city in our future city. So we are going to improve the entire AI city. So most of the players are coming and discussing with the government of Telangana. So next 6 months we are going to do miracles in AI sector.
So what will all of this result in terms of jobs? Because at the end of the day, that's the number one criteria for a politician, is to deliver on the promise of jobs. Between green energy, between what you're hoping to do on AI, electric mobility, and some of the other focus areas, what kind of employment are we talking about? What will the job creation be?
Yeah, definitely. The people are always used to say, whenever you are discussing about technology, the initial days also, Rajiv Gandhi has introduced the computer to our country, or telecom reforms in our country. Most of the time used to say all opposition political parties, we are going to lose jobs. Technology is not going to do such thing. So we have to improve our skills. That is why I have initiated my Young India Skills University to improve our skills. So world is it is not limited to Telangana. We wanted to compete with the world. So we wanted to send our youngsters, our techie people to all over the world. So we have taken a decision cautiously about Young India Skills University. So we wanted to different verticals. We wanted to improve our skills. So knowledge. So with the skills, we wanted to engage our youngsters to create a job.
You talked about the growth focus as far as the state is concerned. Given where you are able to see things at this point in time, what is the aspiration in terms of the growth that you believe you can deliver on while being fiscally prudent as well?
Yeah, definitely. Narendra Modi used to say always a 5 trillion economy of India. And I wanted to contribute 1 trillion economy from my state. So why? Because Hyderabad is the place for everything. So you will get human resource, you will get technology, you will get everything in Hyderabad and Telangana. So connectivity also is better. Any other city or country doesn't have much connectivity. So Hyderabad is having all those ecosystem. So with that, I wanted to contribute 1 trillion economy from Telangana.
1 trillion from Telangana. That is your contribution, and that is your target and your ambition. But it's an interesting India house here, because you're sharing space with your colleagues and fellow states. You're housed with UP and Kerala, and of course we've got Tamil Nadu, Maharashtra, and Andhra Pradesh together. While there is this competition on between states to draw in investments as well. How do you ensure that it remains healthy?
So I don't think so. They are my competitors. They are my siblings. Why should I compete with my neighboring states? That is what I wanted to clear one thing. $1 trillion economy, if Telangana has to improve, we have to compete with New York, Tokyo, Dubai, Singapore, or any other place, Vietnam. Thailand. So these are the where we have to have visited South Korea. So I wanted to improve Telangana China +1. So whoever wanted to shift their base from China to India, that is the place for Hyderabad. So Hyderabad, Telangana is the China +1.
You've been in office for more than a year. What has been the big learning for you, the big takeaway so far?
So one is doing our duty, the other one is marketing. We have to improve our marketing strategies. But because this is also crucial for any politician or political party. So we have to learn something to propagate in the public mind.
To seed the message that Telangana is open for business, it's ready for business, and promises a stable policy environment with lots of incentives across different sectors. What will you prioritize in 2025? What should we expect from you?
So actually, I'm trying to declare my policy Telangana Rising 2050. I wanted to give a policy for another 25 years. So in that 25 years policy, I wanted to improve AI. I wanted to improve my green energy. I wanted to aerospace and other sectors where we can contribute something to the nation and world. So whatever I have ecosystem, I wanted to improve on those lines. So these are the main sectors where we wanted to.
You come from a state where your predecessors have been very tech savvy. Starting with Mr. Chandrababu Naidu, the original CEO, chief minister, and of course even your immediate predecessor was quite tech savvy. How tech savvy are you? How much of technology do you use yourself?
So leader need not to techie. Leader has to make policies. So I have very good colleagues and staff. So they have to study and they have to brief me, then I will take a political decision cautiously. So leader should have a policy making. So I
provide
have
the vision and leave the execution.
Yes. PV Narasimha Rao is not techie, or otherwise PV Narasimha Rao is an IT professional. But he has made the country to compete other than other world. So whereas even Chandrababu Naidu also is not an IT professional.
Yes.
But he has made all laws to improve our ecosystem. So leaders should have policy mindset. So open mind. So I have that open mind. I can read PV Narasimha Rao, I can read Chandrababu Naidu, I can read any other leaders' decisions. So I have that temperament. Yes, I am there how to improve my policies and how to improve my ecosystem.
What has been your big takeaway here from Davos in terms of the mood of global investors on the global environment, but more importantly on how they feel about doing business in India?
So yes, definitely Davos is the place for marketing. Telangana is the place for investment. So
You're marketing here and you hope to take back the investments to Telangana.
We have to utilize this platform. If I wanted to meet all these CEOs, it will take another 20 years.
Yes.
But I can meet for 40, 50 CEOs within 48 hours.
Yeah.
So this is the place where we have to market, we have to promote our efficiency or otherwise our system. So we are utilizing every minute and every opportunity in Davos. So Telangana is the place for investments.
Thank you very much, Mr. Revanth
Finally,
Reddy.
I wanted to tell only one word.
Yes.
Telangana means business.
Telangana means business. That is the big takeaway here from the Chief Minister, Revanth Reddy. A whole host of policies across different sectors that the government intends to prioritize and focus on: electric mobility, green energy, AI, and of course continuing to build on the tech ecosystem that has been one of the strong points for the state. Always a pleasure. Many thanks for joining us. With that, it is time for us to wrap up this CNBC-TV18 special. From all of us here for now, many thanks for watching.
My recent election is a mandate to completely and totally reverse a horrible betrayal and all of these many betrayals that have taken place, and to give the people back their faith, their wealth, their democracy, and indeed their freedom. From this moment on, America's decline is over. Our liberties and our nation's glorious destiny will no longer be denied, and we will immediately restore the integrity, competency, and loyalty of America's government.
Global growth. What's the outlook? What's going to be the outlook as far as inflation if President Trump follows through on his very aggressive plans as far as tariffs are concerned? What happens to US inflation? What happens to the dollar? Those will, of course, be big questions. What happens to emerging market flows? Those will, of course, be the big questions here in Davos. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18. From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 Budget Headquarters as we've done for the last 25 years. Back. Conversations continue here at Davos 2025. You heard from the Chief Minister of Telangana, and now it's time for us to speak with the IT Minister to understand what the state intends to do to continue to leverage on the momentum that has been built in the state over years across successive governments in IT. Mr. Babu, many thanks for joining us here in Davos. You've been having a whole host of meetings, I can see. So what's the big takeaway here from Davos?
Yeah, basically keeping our past experience. This is the second visit of ours, our Chief Minister and ourselves. And our team seems very productive over here. The past 2 days, we had meetings with the international players, the domestic players too. They're showing keen interest in the tech area or in the energy sector and in terms of agri processing. So it's a, very, very productive meetings are going on. And I'm hopeful that, we will be doubling what last time what the investment has come to our state.
Well, the last time the commitment was 44,000 crores in terms of MOUs, etc. So you're hopeful of being able to do better than that?
Much better than that, much better. We are so confident, and the ecosystem which has been built, the trust, basically the trust over a period of 1 year we try to inculcate among our partners and among the industrial circles, and especially in terms of IT. Shows itself shows their interest in coming to us and trying to put their investment in.
As the Chief Minister told me, he said in IT we are the legends, and it's been a story that's been built over many decades across successive governments. What he also said is that politics is not going to come in the way of policy certainty. Now, as far as IT in specific is concerned, what else can we expect now for you to be able to create the skills as well as to get more people into the state across different verticals?
No, this is the right time, in the global economy when things are literally taking a very big shift in terms of technology too. Where all these emerging technologies or cutting-edge technologies are taking place, like AI, machine learning, cybersecurity, data analytics, and taking shape. Now this is the right time for us also to move into the next stage. So keeping that in view, the strength what we have in terms of talent, that talent has to move to the next stage.
Right.
That's the real reason our government, over a period of time for a year, and the Chief Minister thought of doing great in skills. So we have put one Young Indian Skills University.
Yes.
So that is meant to reskill and upskill the skills whatever our people have, including all our employees, and at the same time all the graduates who would like to get employed in major companies or tech companies. So this ultimately we would try to bring a major data bank of all the skills, talent available over here, and become the capital of the skills over there. Ultimately, everybody has to come to a place. That is a long-term objective of us.
Well, speaking of the long-term objective of positioning yourself also as an AI hub, the Chief Minister spoke about an AI city. If you can share some more details with us about that.
When we thought this cutting-edge technologies which are taking place over here, and in the upcoming future city, where a net zero city, which we are planning to take it up, is coming up, and in that a small portion of the land has been dedicated to this AI city. Absolutely, the AI city is meant to promote and propagate AI in a big level. So we would like to promote R&D in terms of AI. We would like to promote innovation there. We would like to promote the startups. We are trying to promote the product companies there, so that it becomes exclusively AI mentored city over there. In addition to that, we would be coming up with an AI university, that is a school.
Okay.
Where, everything.
A school or a college?
It's a school, it's like, a university.
Right.
It's absolutely all the graduates keeps coming over there to learn the new trends in AI, learn the new curriculum of AI, what need to be done. So this is what we are planning, and the groundbreaking will be done for the AI city in the next quarter.
The Chief Minister said his ambition is to be able to contribute at least $1 trillion from the state of Telangana to India's overall GDP aspiration and its growth aspiration. How much of IT services exports will contribute to that $1 trillion?
Yeah, definitely. That is the biggest challenge, and we are just thought of making our economy, pushing our economy to 1 trillion. That's not a small job. Pushing our economy to 1 trillion is a big job what we have undertaken and what we have dreamt of. And we will put all our action into action. So our point here is, we not only are in IT will be major contributor, and also we are the leaders in life sciences and the pharma.
Yes.
And taking a cue from the agricultural resources what we have, and allied activities related to agriculture, maybe dairies, maybe fisheries, and all those things coming into picture. And we are trying to put our plans into action. So certain section, the majority of section, we would like to take the leverage of this emerging technologies into and move forward, where the world and the global would be looking at us all the time, and improve our exports into 10x, so that we reach 1 trillion economy. In the same way, in the life sciences too, we would like to scale up in next 10 years, in a decade's time, to 200 billion. So these are all areas where we are trying to concentrate upon and to prepare a plan, make a projection, try to put our policies into action, and see that it goes.
Yes. So IT will be one of the big growth engines and continue to be one of the big growth engines as you chart out the plan for the next 25 years under Telangana Rising.
Yes, it's the caption goes like this. If you have seen it,
yes,
Telangana means business.
Yes.
In whatever way, in whichever form. And Telangana Rising is meant to see that the quality of the people. We don't forget that the quality of the people, their standards has to go along with the economy too. So Telangana Rising means not only the development and welfare takes place not only in urban cities, we also try to see that the welfare, the development goes parallelly in the rural areas, and the quality of an individual, the citizen of our state, also improving our economy.
But very nice to speak with you. We wish you the very best of luck, and thank you very much for joining us here in Davos. That is the IT Minister of the state of Telangana charting out the roadmap for growth. From all of us here for now, thanks very much for watching the CNBC TV18 special. We'll take a break. A lot more coming up right after this.
25 years of CNBC TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
I think, for example, on the trade front, I was pleasantly surprised that they didn't impose tariffs right off the bat, which seems suggestive that they will be a little more considerate about it. But
calibrating what rate they should impose?
Calibrating what rate and doing less damage more from the US perspective than from the other countries' perspective. But I think the announcement of External Revenue Service implies what I thought earlier, that he is serious about tariffs, both from the perspective of rate.
Good evening, ladies and gentlemen. It's an absolute pleasure joining you here at Davos 2025 to talk about the aspiration of positioning the state of Andhra Pradesh as a global petrochemical hub. It is my pleasure to welcome here on the panel the Chief Minister, the Honorable Chandrababu Naidu. A big round of applause for the Honorable Chief Minister. And I have with me a special set of panelists who are going to discuss, elaborate and share their insights on why they believe that India is positioned to leverage on the opportunity that presents itself, and why the state of Andhra Pradesh specifically has the advantage of positioning itself as a petrochemical hub. But before I get to my panelists, let me address that very same question to the Chief Minister. Mr. Naidu, many thanks for joining us here. Let me start by asking you about why you believe your state is best positioned to be a petrochemical hub.
Good evening. As you rightly mentioned, there is a consistent growth in petrochemical, either utilization and downstream industries. It is continuously growing. India also is growing very fast. If you see as on today, 5th largest economy, 3rd largest purchasing power parity. Another 2 years' time or 3 years' time maximum, India will become 3rd largest economy. Our Honorable Prime Minister is promoting, and in a big way, not only one or two sectors, overall development of the country. Now growth rate is very impressive. Even people are projecting by 2028 incremental growth rate. Compared to any other country, India will be the highest. So with all these things, again, petrochemicals is growing at the rate of CAGR 7.3%. Even in India, it is growing better than that. So by even contributors for India, 6% to GDP, 5 million people employment, investments also 87 billion, and also by 2040, around 1 trillion industry. These are all very important notable points. As on today, we are having Visakhapatnam, HPCL or BPCL? HPCL. And also now BPCL is coming to Ramayanpatnam. That is what we are working with them. Already started around 90,000 crores. And if they bring partners, it will be better than that. So if you can see in all round, petrochemical is inevitable. But sustainability, how to go for innovation, and also creativity, downstream industries, how far we can reach. We have to balance long term, short term. Some people may have some doubts about green energy is coming. Is there any impact? According to me, there won't be much impact. Parallelly, either green energy and also petrochemical will move forward. That is what is showing as on today. So that is where, for me, personal gain is employment, contribution to my GSDP, and also economy will boost. That is the work we are doing now. Once port BPCL is coming, then port will be viable. Then that port will become Ramayanpatnam will become a township itself. We are having sea coast, nearly 1,000 kilometers. As on today, 5-6 good ports are there. Another 3 ports are under construction. Around 10 ports will come. For petrochemicals, compulsorily port is necessary. So, with the next one is not only BPCL, petrochemical, and also other industry will come. Then automatically that ecosystem will emerge. That is the biggest advantage we are going to gain. That's why we are promoting, not only promoting, but they are also showing interest. Andhra is the best. I am very happy. It is a win-win situation.
Well, yes, I would imagine that it should be a win-win situation, but making it a win-win situation will also mean that the government will perhaps be looking at incentivizing investment, incentivizing industry. Are you looking at any specific incentives, Mr. Naidu, to draw in investment into the petrochemical space?
Better my friend has to tell that.
Mr. Singh, let's address the issue, and of course also the dilemma that the Chief Minister spoke of. Energy consumption, energy demand in India growing at 7 to 8% and is expected to grow even further. We do have a significant renewable energy target as well, along with, of course, the existing fossil fuel driven energy. What do you see as the mix going forward? But more importantly, as the Chief Minister was pointing out, leveraging Andhra Pradesh's strengths to ensure that investment moves there.
Thank you, Sirin. First of all, let me thank Honorable CM for inviting me here and put our perspective. As was explained by Honorable CM then about the advantages what Andhra is having. So Andhra is having the geographical as well as demographical and a kind of human resource, the culture of working. I think this is a tremendous kind of opportunities in the state of Andhra. We had been present in Andhra for quite some time, almost about 3 decades, and we find that it has been one of the most conducive state in that. Let me thank Honorable CM from core of my heart that I met almost about few months back, and I came to meet him only for 5 minutes, but I think that lasted for about an hour, and I could get a clear kind of mentoring in that meeting more than anything else, that what we are thinking, that how the green energy can be utilized. And let me just try to put forward here the point is that now the energy we have studied in our school that energy can be transformed from one form to the other form. So till now we had been only talking about how to convert the molecule into electron as far as the electricity is concerned. And now we are dreaming rather than we are putting action that how the electron can be converted into molecule. Yes. And that molecule will be will be served as a kind of the petrochemical also. And as you know very well that the foundation stone for the first hydrogen hub in the country was laid by Honorable PM, I think then with all kind of support and persistence from Honorable CM. About a month, not even a month back, then as recent as that, and this is going to be the first hydrogen hub. And this is going to be green chemicals coming out of that. And once you are having the chemical, the hydrocarbon, the beauty of the hydrocarbon is, and I'm sure that Mr. Sani will be able to explain far better because he's a chemical engineer, I'm still a mechanical engineer. That once you are a nice jugalbandi going for both of you to explain that to us. So once you are having any of this hydrocarbon chemical, you can convert that into that. So it's not only to be the crude which need to be imported and then converted into the kind of downstream into petrochemicals, other chemicals, etc., etc. But maybe I think soon we will have our own self-reliance on that side, and the story is starting from the state of Andhra. And what started like as an IT story in the country, similarly, I'm sure that the story of this green chemicals and the petrochemicals and then kind of actual transition and the net zero will be the path which will be really enabled by this kind of.
Well, that certainly is the hope. Yes, sir, you wanted to say something.
No, I'm very happy. This is where people are talking as on today green hydrogen. Then NTPC has come one step forward. Now nearly 1.87 lakh crores investment over a period of 7-8 years. And also Honorable PM has laid foundation and backward integration with green energy, that is solar, wind, pumped energy, everything. Here if you see, one is petrochemical, one is green energy downstream industries, green hydrogen. Andhra Pradesh is having 10 ports. For petrochemical, port is required. Green energy for export, again, port is required. So both are possible, as you rightly mentioned. Now there is a huge demand also we have to create. Green hydrogen, all these things. Now that is the future. For sustainability, we have to bring reforms in, I can say, fuel or energy. Earlier we were all talking, and also downstream industries, so many chemicals, and also other areas also. Now, as you rightly mentioned, now people are talking about green energy, then how to go for hydrogen, ammonia, all these things. If necessary, how to convert again power. This is a very interesting situation is happening today now. For that, Andhra Pradesh is the leader. 30% of green energy, green hydrogen by 2030, Andhra Pradesh is going to add in the country. We are proud of it. 1/3 from Andhra Pradesh.
The US so that he can cut taxes more, which he needs to. Also from the perspective that he really believes by putting tariffs on others, he can bring jobs back to the US. I'm skeptical that he'll raise much revenue. I'm skeptical that too many jobs will come back to the US because manufacturing has gotten so automated that, you know, it's not going to happen in a big way.
Do you foresee the need to scale down hiring? Do you believe that you will continue at the pace that you are, or you may even have to look for more?
I think that you won't have to scale down at all. I do think that over time, and at least we've seen this in our software portfolio, that there is a certain non-linearity between number of people hired and actually growth. So I think that more and more not looking at them as, you know, a direct correlation is something that will happen. But for example, in our engineering services in ERS, like even though almost 80% of now, let's say, coding can be done through AI. But then what we are training our engineers is how to build applications on top of it and how to do a lot more of design around it.
We have a presidential memorandum that was issued that delays the imposition of tariffs, and in fact calls on each of the trade agencies to start a process to look at countries with which we have a trade deficit, unfair trade practices, looking at existing free trade agreements, looking at sectors that have national security implications, and those reports are due to the president on April 1st. So it appears that there could be some delay in imposition of tariffs, perhaps with the exception of Canada and Mexico. He did make specific reference to those two countries, and China is obviously an outlier as well. So we will see, but there is likely to be a delay in the imposition of tariffs.
Ladies and gentlemen, the President of the United States, the Honorable Donald John Trump, and Mrs. Trump.
Having witnessed another successful moment in the experiment that you have entrusted into the hands of the American people, we pray your blessing on our 47th President of these United States, Donald J. Trump, and Vice President James D. Vance.
And we are going to bring law and order back to our city.
We've already seen a production-linked incentive scheme by the central government for electrolyzers to deal with green hydrogen. But Mr. Sani, let's take that jugalbandi forward now, adding to what we heard there from Mr. Singh as well as from the Chief Minister on what we need to do next now to ensure that these targets are in fact realized.
Yeah, thanks, Shireen, and thank you, sir, for inviting us here. I'll talk more about the petrochemical side. Sir, as you rightly said, that once there are 3-4 imperatives which are required for developing a petrochemical hub, which Andhra Pradesh and sir, your vision aspires to be. The first and foremost is the feedstock. The feedstock, as you rightly said, that with the refinery coming in and the petchem cracker coming in at the cost of around $10 billion. So that will provide an anchor for all your petrochemical dreams going forward. That is one thing. But sir, in the downstream, because this we have witnessed in several places that until and unless the downstream infrastructure is ready and kicking, then we are not able to realize the whole potential of the feedstock that is available there, sir. That is one. One is infrastructure in terms of roads, ports, which I am sure, sir, you are taking care of, and you have already mentioned that you will be having ample of them. The roads connecting to ports themselves, and those are all will be taken care. I am very sure, sir, with your visionary leadership, it will be done, sir. The other part is, sir, what is required is market. Once we go into downstream, then the downstream market has to be ready to receive those kind of products. And especially in southern India, we know the markets that around 20-25% of the petchem consumption happens in Andhra, Telangana, Tamil Nadu, and Karnataka. These are the 3-4 states wherein 20-25% of the consumption of petrochemical is happening, and we don't have any production capacity of petrochemicals downside of India's anywhere. Only MRPL is one small exception. Otherwise, that is Mangalore. So otherwise, we don't have many petrochemical industries downstream. But consumers are there.
Right.
So that is one. Plus, sir, for the vision, for realizing your vision of a petrochemical hub, a large kicking petrochemical hub, for example, whether it is Port of Antwerp or it is Zurang Island or Port of Houston, these are the 3 very good examples across the world which are developed as petrochemical hubs as you are envisioning, sir. So for that, sir, there is a need for having a anchor who is ready to provide the common facilities, the utilities, the effluent treatment plants, the power, the water, the treated water, the potable water, the light, the lightning, the area development, all those kind of common facilities. Somebody has to do it. But the dilemma here comes that when one person starts doing it or one company starts doing it, they are looking for the consumer also. So it's a conventional chicken and egg story. So for that, sir, I can only humbly suggest, sir, that when we move forward, we will have to have a system wherein we will have to bring in a utility provider, maybe a couple of them or maybe more of them, and then we have to give them some assurance of offtake that yes, for the initial 5 years I will support you, or initial 7 years I will support you, and then with that assurance I go to the investors, because there will be n number of investors which will be required to come at the downstream. Just taking out, like putting up a $10 billion facility and hoping that something will happen, if it will not happen, sir, we'll have to actively entice, we'll have to actively bring people there, and we'll have, and this is the biggest carrot that is there, that your utilities and your common facilities, you don't have to invest on them. You only have to give the OPEX. You only have to pay for the money that you use, and you will be ready to go. It's a kind of a plug and play kind of a system. That, in our experience, I have seen across various petrochemical hubs. That is the way it works. Maybe we can, going further, we can work on that. Thank you.
Sir, you wanted to come in on that?
No, as you rightly mentioned always, petrochemical is one. Or green energy, green hydrogen is one stream. Then downstream industries, how to go about, how to create that ecosystem. One is infrastructure, one is downstream industries, promotion, and at the same time creating market also. Then only it will be sustainable venture.
Yeah.
So that is where, as you rightly mentioned, for the last 15 years we are talking, we have stopped at one level. If you go to Singapore, that is one of the best Jurong island. They have done very well. We want to bring similar to India for the last 10 years. We are unable to bring as on today. So
what has been the biggest deterrent? Why you haven't been able to do what you envisioned doing over the course of a decade?
Sometimes that eco players, now BPCL has come, Ramayapatnam they are doing. Now they may need some more technological partners or downstream industries, how to bring them as a consortium. That is another area. Now NTPC is going. Now they have to create market also simultaneously, downstream industries, but there is a future. Initial mover will have an advantage. Under the same time, initial mover will have a tough time to break through.
Yes, they'll have the first mover advantage, but they'll also have to do the heavy lifting, and that usually is the case. Well, we have two engineers. How can you not have a consultant? So we do have a consultant here on the panel as well. So Gaurav,
I apologize.
Not at all. But in light of what you've heard so far, and you're based in Singapore. We were just giving the Singapore example as well. Take me through how you see this problem and how we should be addressing it.
Well, I'm not only not an engineer, I studied philosophy, so
that makes the two of us,
really
by the way.
on the opposite end of the spectrum. I think one thing that we've heard today is vision, which I think is really important because you're making such a huge investment, and that is an advantage, right? In today's world, any new both port and hub that is being built has to think about what is competitive advantage for the next 30 years. It's not about the reaction to what's happening today. It's not about Trump pulling out of the climate. It's about 30 years and where's the world heading. And so competitive advantage in this space has to be one that knows what to do with a $100 carbon price and beyond. And so I think it's very exciting, everything that I've at least heard on the panel, and I'm learning a lot, that the way you're thinking about developing this is actually thinking about being competitive in the future. And Jurong is often brought up as that example. But again, if you look at, it's not just shared utilities, it's that those shared utilities have decarbonization very much built into them. Yeah. Singapore is thinking very far ahead around the price, how to be price competitive, how to be quality and price competitive, and they know price will have to deal with carbon. So, they have a shared carbon capture hub, they have multiple different types of industries there, and I think it's a great example for Andhra to be thinking about. Just the other thing I would say is, when we actually think about how these things get developed, it's worth noting that there is no one who is advocating for or lobbying for the future. You know, everyone in the room is tied to the present. Their money comes from the present. And so as we think about what are the types of investments needed to be cost competitive for 3 decades, we have to be thinking about the people who are not in the room. You know, and that is a lot of what I think Singapore thinks about. To some extent, it is what has allowed even the American sort of Gulf hub to also be successful, is this idea of the innovation you need to win the future. And so I think it would be great to also be thinking about how we drive innovation into this market.
Thank you so much, gentlemen, for joining us here today. And thank you very much for giving us an insight into where things stand for the market, but more importantly, what the future looks like. Appreciate your time.
This week, I will also end the government policy of trying to socially engineer race and gender into every aspect of public and private life. We will forge a society that is colorblind and merit-based. As of today, it will henceforth be the official policy of the United States government that there are only 2 genders, male and female. This week, I will reinstate any service members who were unjustly expelled from our military for objecting to the COVID vaccine mandate with full back pay. And I will sign an order to stop our warriors from being subjected to radical political theories and social experiments while on duty. It's going to end immediately. Our armed forces will be freed to focus on their sole mission, defeating America's enemies.
Hello and welcome to our conversations at Davos 2025. I'm Shireen Bhan, and there's plenty of excitement here on the consumption story in India and how that's going to play out. Marry consumption with health, wellness and beauty, and you do have a sector that's drawing a fair degree of attention and investments. Someone who was ahead of the curve in many ways, Vinita Jain, the founder of Biotique, joins us now here in Davos. Vinita, always a pleasure. Welcome back on CNBC-TV18. It's great to have you with us. So since last Davos, when we met and spoke about business and the opportunities that you were focusing on, take us through how the year has gone.
The year has been fantastic. Biotique has grown over 30% year on year this year, and the company is doing very, very well. Yeah.
Well, Vinita, you know, speaking about growth plans, and as I pointed out, this is a sector that's drawing a fair amount of attention as well as investments. We've got a whole host of new companies, startups entering this space of health, wellness and beauty. You know, what do you see as the evolution of this market? What have you seen as the changing trends in this market that you're hoping to focus on?
The most important thing is authenticity and efficacy of products, which Biotique focuses on, and health and beauty and well-being are really top. After the COVID, everybody is really focusing on health, beauty and personal well-being as the most important thing in life, and I think the sector is truly booming.
Well, you know, what's happening in the labs, what's happening on the R&D side, what kind of products are you innovating at this point in time?
So now it's all about the past present and the future. So what we have done is taken the 5,000-year-old science, combined it with 21st century biotechnology, and made products for the future. So Biotique is truly products for the future, where we use augmented reality, beauty tech, and bring consumers the best of the East and the West, ancient and modern, to really focus on consumer needs.
Well, you know, talking about modern, let's talk about the young consumer, not just the young Indian consumer, but the young global consumer. And you talked about the ancient art of Ayurveda and how you're attempting to, or you have, of course, for several decades now, been attempting to modernize that. How do you connect with a young global audience today? How do you sell them the story of ancient Ayurveda?
So, firstly, there's a huge interest in Ayurveda, yoga and meditation. The global audience knows that. And more so today, the younger generation is truly interested in mental well-being and the sciences of Ayurveda, yoga and meditation. And you know, with the internet, with quick commerce, with e-commerce, and it's very easy to reach the consumer, explain them the benefits of the deep roots that Ayurveda brings to them, and the consumer really connects to them. Because just remember, 5,000 years ago, we all lived like animals, and it's the ancient sciences of Ayurveda, yoga and meditation that has brought us health and well-being. And you know, human life expectancy back in the day was just 30 years, and now it's more like 100 years. So it's our ancient sciences that have really focused and brought us that, taken us from 30 years to 100 years today.
You know, you talked about life expectancy, and you're absolutely right. On account of many changes, including, of course, the changes in science and medicine, we're now seeing people live older and fuller lives. I mean, well into their 90s, and you know, in some cases even going, you know, beyond 100.
Yes.
And that's an important market as well that's opening up.
Yes.
Traditionally, wasn't a market for consumer companies. How are you looking at the silvers market, so to speak?
It is a very big market, and also they want luxury products, and rooted in the past and the future. And it's, you know, because people are starting new careers at 60, so they want to look good. So I think there's a really big audience there. And then they have to look into the Ayurveda, because Ayurveda is the only science in the world that has truly studied the problems of aging and has brought and understood how to tackle them. There is no other, that's the only science in the world that has done it. And today, of course, modern science is augmenting it.
So is that going to be a big focus for you at Biotique?
Yes,
the whole anti-aging?
The longevity.
Yes.
The longevity, science of longevity, because Ayurveda is literally translated as the science of life. And it is the science of longevity. And that's a science that I've studied from my childhood. I read and write Sanskrit. And this is a science that can build health and beauty for a lifetime.
You know, you talked about looking at this from the prism of longevity and not necessarily from the anti-aging perspective, which is what, you know, the beauty industry has sold women for generations now. You know, how do you approach this as a woman yourself, but more importantly as an entrepreneur, founder of a beauty business? How do you look at this?
I think it's beauty for a lifetime, health and beauty for a lifetime. Today it's not about anti-aging. Prevention is better than cure. And Ayurveda has always said that you have to look beautiful at every stage and age of life. And that's what I truly believe in, and I practice these sciences. And I think there's a huge market there globally.
Well, speaking of a huge market globally, you of course have self-funded the business. You've been toying with the idea of an IPO. There's no debt.
We are zero debt.
You're zero debt. And I know that there have been many investors along the way who've been wanting to get on board, but nothing on the cards so far?
No, I think eventually we'll just go for an IPO, and because the valuations are great in the industry, and that's what we will do. But our company is zero debt, and it's completely internally funded. We have zero working capital from outside also. So the company is financially very strong, and we will go for an IPO in the near future.
We talked about this the last time as well. Any closer now in terms of
because you know there is. I think the reason for IPO will be for the longevity of the company rather than any financial need. So there's no rush for us to go for an IPO. But in the near, but I do want to leave an institution of beauty and longevity behind, and the best way to do it is through the public market, so that it will have a journey of its own. The company after my lifetime. So that's the reason that there's no big rush to do it, but for the longevity of the company, I will
yes,
do it.
We'll consider this as a possibility at some point, as you pointed out. But, Vinita, what we're seeing off late, especially, in terms of FMCG sales, is that there's been a slowdown in consumption in India. Are you witnessing that as well? Are you noticing that also?
Not really, because you see, we have growing middle class, at least for brand Biotique, which is premium FMCG. I think maybe for the mass segment, Biotique is always more at the premium end of the consumer, and the consumer today understands the importance of looking good over a lifetime. And people are starting very young. Skincare, beauty care is starting very young. No more are people waiting for it to be in their 30s to start thinking of looking good. Teenagers are using the beauty ritual, and they want to take care of their skin, and they understand that it's important to look good because the skin is the largest organ and you have to take care of it.
Yeah, absolutely. But, going global, and you've, of course, started that expansion journey into global markets a while back. How are things panning out there?
They're doing very well. The global market is very interested in the sciences of Ayurveda, yoga and meditation, and what they really need is authentic Ayurvedic products of high quality where Biotique fits in. And, now we're going to the US market, and the US market is really growing at 7.2% CAGR year on year for the next 5 years for a niche segment like Ayurvedic products.
So how will you distribute in the US?
So we, we have partners with e-commerce players and offline and online partners that we are partnering with. But mainly online will be a big channel for us in the US.
Speaking of the online channel, how's that playing out in India? Now you have, of course, quick commerce as well, and beauty is exploding on even quick commerce services. So how's that going for you?
Very well. We grew 40% year on year last year on our e-commerce and quick commerce, and today you can buy a Biotique product and it can be delivered to your house in 30 minutes. And so we are on all e-commerce platforms and quick commerce, and the consumer experience, because they can read online, and the young Gen Z, can read the details about the heritage of the product, the brand, and it's doing very well, and especially with influencer marketing and YouTube and Instagram. They're really it is very nice for them to experience the product through that channel.
So what does that mean then in terms of your offline expansion? Are you slowing that down given how fast e-commerce is going for Biotique?
E-commerce is doing very well, but I do think the consumer does want to have touch and feel experience. So I don't think we are slowing down offline. The consumer wants a bit of both. I don't think it's either or. Today the consumer is spoiled for choice. They sometimes want to buy it in their nearby shopping mall, or they want to have it delivered in 30 minutes. It just depends on the consumer.
Like in 2017, we will again build the strongest military the world has ever seen. We will measure our success not only by the battles we win, but also by the wars that we end, and perhaps most importantly, the wars we never get into. The golden age of America begins right now. From this day forward, our country will flourish and be respected again all over the world. We will be the envy of every nation, and we will not allow ourselves to be taken advantage of any longer. During every single day of the Trump administration, I will very simply put America first. Our sovereignty will be reclaimed. Our safety will be restored. The scales of justice will be rebalanced. The vicious, violent, and unfair weaponization of the Justice Department and our government will end. And our top priority will be to create a nation that is proud, prosperous, and free. America will soon be greater, stronger, and far more exceptional than ever before. I return to the presidency confident and optimistic that we are at the start of a thrilling new era of national success. A tide of change is sweeping the country, sunlight is pouring over the entire world, and America has the chance to seize this opportunity like never before. But first, we must be honest about the challenges we face. While they are plentiful, they will be annihilated by this great momentum that the world is now witnessing in the United States of America. As we gather today, our government confronts a crisis of trust. For many years, a radical and corrupt establishment has extracted power and wealth from our citizens, while the pillars of our society lay broken and seemingly in complete disrepair.
You talked about knowing how to read and write Sanskrit, and you've, of course, spent a lot of your time looking at Sanskrit texts to drive inspiration for the products that you have put on the shelves as far as Biotique is concerned. But I also know that you're a big believer in the power of technology, and you've spent a fair amount of your time understanding the many changes that technology is bringing about. How are you marrying the use of technology both on the back end as well as the front end for Biotique?
As far as the manufacturing is concerned, Biotique is advanced Ayurveda. We've always believed that it is 21st century biotechnology blended with the 5,000-year-old science of Ayurveda. So as far as product formulations are concerned, because I'm head of R&D, those are the two strong pillars, strong technology, past and the future. And as far as our manufacturing facilities are concerned, also we are now having a lot of high-tech, biotech enabled manufacturing systems that give us very high-quality products. Because
and on the front end, the use of technology to change the consumer experience, and we've seen a lot of beauty tech these days. What are you doing about that?
So we are using augmented reality. Today you can go online and have your skin analyzed by AI, your hair analyzed by AI, and they recommend products for you. And then you can understand how to do your makeup, what cheek products you should use, or eye or lip products you should use, because there can be a live video, they can do your imaging and recommend products for you. So it's really customized and personalized care, because the computer, the AI scans your face and then gives you exactly for your skin type and hair type and your changing needs. The skin has changing needs in summer and winter, and at every age and stage you may need different products. So with AI you can really get personalized recommendation.
Absolutely. So is this going to be something, where you focus on and put more investments into?
Yes, of course. We are focusing and putting a lot of investment in augmented reality and personalized recommendation for the consumer, whatever they need. That particular day or particular week, they may need some different things.
Vinita, as I said, that this is a space where we've seen a lot of young Indian startups enter the market. We've got a whole host of D2C brands who are in this space. What would your advice be to them? Biotique has now been, on shelves for decades now. You've gone through many, many cycles. What would your advice be to young entrepreneurs who are looking at getting into the beauty and wellness space?
I think most important is the quality. I think that is number one, because, and there are no shortcuts to success. To really focus on highly efficacious products and product quality, that would be the number one thing, because I think consumer delight. I think Biotique has always focused on consumer delight and filling the needs of the consumer, and that's where our strength has been. And I think consumer delight and finding that one niche that the consumer needs.
Would you consider M&A? Would you look at buying any of these companies that are out there? Because there has been a fair degree of M&A that's taken place in this space.
Yes, you see, Biotique has state-of-the-art R&D facilities, and that's how we are able to develop products to fill in any consumer gaps that may be there in the market. We have a long pipeline of innovative products that are for the Indian market, and if there's any good company, we would be open to that.
So, you talked about the pipeline for innovation. Typically, how long does it take for a product from the idea stage to, working on it in the lab to actual go to market?
So actually, it can take anywhere between 3 to 5 years to develop, because, stability testing, toxicology testing, and all that highly, on human skin is very, very important. So the product